to as the date for the return of answers to questions taken on notice. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence to a committee. The Senate, by resolution in 1999, endorsed the following test of relevance of questions at estimates hearings. And I quote, "Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in the estimates are relevant questions for the purposes of estimates hearings," end quote. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has the discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has also resolved that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. In particular, I draw the attention of witnesses to an order of the Senate of 13 May 2009 specifying the process by which a claim of public interest immunity should be raised, which I now incorporate in Hansard. Witnesses are specifically reminded that a statement that information or a document is confidential or consists of advice to government is not a statement that meets the requirements of the 2009 order. Instead, witnesses are required to provide some specific indication of the harm to the public interest that could result from the disclosure of the information or the document. An officer called upon for the first time to answer a question should state their full name and position for the Hansard record, and witnesses should speak clearly into the microphone. Please make sure all mobile phones are switched off or turned to silent. I remind senators and witnesses in the hearing room that microphones remain live unless I instruct otherwise, for example at suspension or adjournment. For witnesses participating via video conference, please mute your microphone as the default and unmute your microphone when speaking. I ask members of the media to follow the established media guidelines and the instructions of the committee secretariat as set out in the guidelines. Senators and witnesses' laptops, mobile phones, other devices and personal papers are not to be filmed or photographed. I remind everyone in the gallery that they are not permitted to speak or interfere with the proceedings or with witnesses at any point during the hearing. Security is present and they will be asked to remove anyone who does not follow these instructions. Witnesses and senators who are seeking to table documents during the committee's hearing were requested to provide an electronic copy of those documents the day prior to the hearing so that the documents could be circulated electronically during the hearing. Please liaise with the Secretariat if you need assistance. The committee's proceedings today will commence with the Treasury portfolio, beginning with the Treasury's corporate and macroeconomic group. The hearing will then follow the order as set out in this morning's adopted program. I now welcome Senator the Honourable Simon Birmingham, Minister for Finance. I also welcome officers from the Treasury. Would the Minister or officers like to make an opening statement?
Good morning, Chair. Good morning, Senators. It sounds like you've read that opening statement a couple of times this week.
I have. I have. It's one of my favourite readings.
Indeed. No opening statement from me. Thank you, Chair.
Okay.
No, thank you, Chair.
Nothing. Okay. Senator Chisholm. Senator Gallagher.
Some questions for corporate first, if I could. Ms Kelly. My first one is this this ad here, this one, the Australia's Economic Plan. Is that, Ms McKenna, I think, is that part of the same shoe campaign, you know, the one that has the shoes in it online? Is this part of the same one?
Shannon Kenner, Assistant Secretary of Communications Branch. Yes, Senator, it is.
Okay. And that went through all the approvals processes through the government advertising process?
Yes, Senator.
Okay. Can you give me an update on the cost of the campaign?
No further update on expenditure since last week, Senator.
Okay. When would you normally update that? Because I think last week you gave me updates from the 6th to the...
It was, yeah...
To that date?
At the end of the month, basically. So our expenditure is at the end of the month.
All right. Have there been any changes to the campaign or any additional purchasing of ads?
No, Senator.
Okay. And I think last week the out-of-home components, you were going to check those for me, what that meant, and whether there, you weren't sure if there was cinema ads.
That's correct, Senator. I can confirm there is cinema as
Yeah.
part of the buy. Online and digital video, regional press, regional out-of-home advertising, social media advertising, TV and print. And radio, sorry.
Okay. And so in the print one, this is what runs, is it?
That's one of the options, Senator, yes.
And there's other options, are there?
That's correct.
Okay. Were you able to, I can't recall last week whether you were able to give me a breakdown of what you're spending on print?
No, Senator, because we won't have those figures until the media buy is actually finalised.
And when is the media buy finalised?
It's due to be finalised on the 16th of April, or obviously sooner if a federal election is called.
For the, okay, so that's when you get the final figures.
That's correct.
Do you specify the proportions you'd like to see, how that spend is, how it is placed?
Yes, we work with Universal McCann, who's the whole of government media buyer, and work out how to break down across the different channels, how we are going to best deliver the campaign. That's based on their advice, given their expertise in the field.
Okay. All right. Thank you, Ms. Kenner. And there wasn't, sorry, it's probably a question for the Minister, but like, does that look like a Liberal Party ad to you? Like when I opened the paper, I thought that was a Liberal Party ad. I mean, it's the same colour you use.
Not especially. I mean,
you know-
aside literally from the fact that there's a shade of blue and it's not even the same shade of blue in our campaign material, it otherwise looks pretty clearly like a government ad.
Yeah, it's got the thing up, but I must say when I opened it, I thought that is a Liberal Party ad. Like it looks very similar, I imagine, to the ones you're going to be running in the campaign. Does it strike you as a Liberal Party ad? You've seen a lot of them.
I have seen a few, Senator, and no, I suspect there'll be much stronger Liberal Party branding on Liberal Party ads.
Well, yeah,
and much
branding.
stronger call to action.
Sort of subliminal
in terms
Liberal
of-
branding, perhaps, this one. All right. Thank you, Ms. Kenner, and we'll see where that goes in the end. On corporate, on some appointments that have been recently made to, there's been 2 made to the Productivity Commission. Have there been other appointments that the Treasurer's made in the last 2 weeks that haven't been either? Are they all notified? Could you talk me through how that happens if if the Treasurer makes an appointment? Is there a time where they have to be notified or announced, or depending on the position, I imagine, is the answer, is it?
So Roxanne Kelly, Deputy Secretary Corporate and Foreign Investment Group. So normally it's notified on the 21st of March. Senate Order 15 report was submitted for tabling, and that report provided a list of departmental and agency appointments and vacancies covering the period 25 January to 10 March 22 inclusive. On that report, the Productivity Commission positions in particular were noticed as vacancies, and then there were some further announcements by the Treasurer since that. So normally we obviously abide by the Senate order reporting, and then, but obviously there are announcements post that reporting as well.
Sure. Okay, and so these, we've got Mr. Stokey and Alex Robson, who've been appointed to the Productivity Commission, both former Liberal staffers, I understand. Minister, you worked with these people?
Sorry, which individuals, Senator?
Martin Stokey appointed as Commissioner of the Productivity Commission and Alex Robson appointed as Deputy Chair of the Productivity Commission, both former Liberal staffers.
Well, Mr. Robson, I'm aware, has a very rich and deep CV in terms of his work, including most recently as Australia's ambassador to the OECD. And I think his economic skills and background are extensive. Sorry, I should say Professor Robson, in relation to Alex Robson. Mr. Stokey, I'm not aware of whether I've met with Mr. Stokey, but I gather he is currently the head of PwC's Economic and Policy team, which obviously denotes his high economic and policy skills and that they are well regarded not just inside government but outside of government.
Yeah, sure. I'm not questioning their CVs. Is there a merit process for these positions? Do they go through a merit process of applications or a short list of people being considered?
Senator, I can let you know that Treasury commenced an open merit-based selection process in October 2021 to permanently fill the existing and potential Commissioner vacancies at the Productivity Commission. We engaged an executive search firm, NGS Global, to assist the department in the selection process. The positions were advertised in the Australian Financial Review and the Australian newspapers on the 15th and 16th of October 2021. They were also advertised on the Treasury website, LinkedIn and Seek. Applications closed in November, and the normal processes were followed in line with the governing legislation and the Australian Public Service Commission's merit-based selection process that apply for seeking Government and Governor-General approval to appoint new members to the Productivity Commission. And then 4 new appointments, as you're aware, were announced in March.
Yeah. And so once you've gone through that, do you provide a short list to the Treasurer or do you provide like a, these are the candidates that who have applied, who meet the criteria, and then it's a matter for the Treasurer?
That is correct, Senator.
Okay. And that would have happened in this case?
That is correct, yeah.
Do you know how many applications you had for those positions?
I'd have to take that on notice,
Okay.
Senator. I don't have that with me.
Okay. And I noticed there's been a few other appointments to the Competition Tribunal and the Energy Regulator. Are similar processes taken for those, or in terms of applications and advertisement of positions? Or is that different because
I think,
the
Senator,
legislation might be different?
yeah, I think there are different, I suppose, rules governing different appointments, but in for the particulars of those ones, it probably is best to talk to the markets group when they're here, because they're the group that actually works with those agencies.
Okay. And can we expect more appointments in the next few days? Is that...
Well, Senator, I'm not sure as to whether the Treasurer has any others to announce or make at present as to what's on his desk. But if he does, I'm sure he'll make them or announce them in the usual way.
Okay, so we'll wait and see on that front. Okay, I thought I just had one more section for corporate just while I've got you, but I can't think what it is at the moment, so I might have to come back to it. I'm sorry. Shall I go to you, Chiz?
Yeah. You seeking the call? No? Okay, send it.
Thanks. Just had some questions in relation to the spending in the budget. The statement 3 on page 73 of budget paper 1. This budget delivers the next stage of Australia's plan for a stronger future with $39.3 billion in total decisions. So the government has committed an additional $39 billion of spending. Is that correct in the budget?
Senator, I believe that's correct, yes. I'm just finding that page, but yes, in broad terms, yes.
Page 73 it was.
It's the 4th paragraph, page 73. That helps.
Thank you. Yes, I have that now. Thank you, Chair.
Do you expect that this to have a material impact on inflation, this additional spending?
Thank you, Senator. The short answer is no, we don't. The overall fiscal position is what we look at when we think about inflationary impacts. And when you look at the fiscal consolidation that's occurring over the course of the forward estimates and between the previous year and this financial year, there's quite a significant fiscal contraction built in. I mean, at the margin, all additional spending in some way finds its way into the economy, and that will have an impact. But in terms of materiality, when we think about the size of, this is a significant package in terms of cost of living impacts, but when you think about it from a broader macro perspective and the size of the overall economy, we don't expect that to have a material impact on inflation.
Okay. What about impact on interest rates, that level of spending?
Same broad answer, Senator. When you think about the material impact, when you think about the size of the overall economy, and you think about the other factors that are at play currently, including particularly the global factors that are at play that the Reserve Bank is watching, we don't believe that we think that level of spending is not going to materially change the profile of interest rates.
I also had some questions on just the preparation of the budget. So we had Mr Kennedy on Friday just talk about price increases over the last year and occurring before the war in Ukraine started. When did the Treasurer first ask for advice on the fuel excise cut?
So that may be a question. Revenue Group are up later in the day, and those requests would have gone to our Revenue Group or our Fiscal Group. So I don't have the precise date, Senator, of that. We think about it from a macro perspective. Policy measures are matters for Fiscal Group and Revenue Group. So happy to flag those questions with them before they arrive.
Okay. Do you want me to keep going?
Yeah, okay, if we refer, so in terms of, macro doesn't have anything to do with putting together advice around the cost of living measures in the budget.
So we I understand it's a somewhat fine distinction, Senator,
Yeah.
but we look at the overall macro impacts
Yeah.
on the economy of various measures. We look at, the broad macro settings, but the design of policy measures and advice around those is a matter for Fiscal and Revenue Group.
Okay, so, there is you would think there's some crossover, because presumably you would be advising that a cost of living pressure, or the government would seek advice from your area or through Dr. Kennedy about.
So if I can assist, Senator, going to the earlier question, we think about the overall fiscal stance. We think about what the appropriate settings are for fiscal policy on the whole. We think about what the overall impact of the suite of measures would be on the macroeconomy. But questions around
the specific
design
measures.
of measures, so we can help assist in the context and frame the broader advice for government, but how government then responds, the advice on that is a matter for fiscal.
Okay. So your role is to say, look, yes, there are cost of living pressures across the economy. A response to this in the budget is sensible, and then it's off to Fiscal and Revenue to work out what the specifics of that are.
To an extent, yes, Senator, that's right. So we look at it, we would provide a view on what we think the overall inflation profile would look like, what the international factors are that are driving inflation here in Australia, and then whether it's appropriate or not to provide policy support for individuals in that case, that would be advice from our Fiscal Group.
Yeah, okay. Do you provide advice on the issue of wages and, obviously you do in terms of the forecasts. What about in terms of the case before the Fair Work Commission? Do you have a role there?
So it's primarily led out of our Fiscal Group. We have a labour market team in Fiscal Group which look at broader policy settings around wages and the labour market. But we support them heavily, and Mr Power's team supports them heavily in providing factual information on the state of the economy and recent trends in those key aggregates and our forecasts, our view of the outlook going forward.
So, Mr Power, that's your area, is it, in terms of you provide you provide advice to fiscal, did you say?
So Mr Power is head of macroeconomic conditions division.
Yeah, I'm
So-
just trying to recall where you said Mr Power provides advice.
So
to.
we feed in input. So in terms of how Treasury engages in those processes, that engagement is
On the
led
wage
by,
case.
on the wage case, that is led by our Fiscal Group. They work and engage on our submission to that through the government, and Mr Power's division helps support that process by providing advice on the macroeconomic outlook and the forecasts and recent trends in key aggregates around wages and the labour market.
Yeah, okay. Because I read the government submission last night. I think it must have been published on Friday to the wage case before the Commission. And it's got, it's got a heavy Treasury flavour to elements of it, bits that you see basically republished from
Yes.
here in it. And so that's your area, is it, Mr Power, or why does it come through Fiscal Group?
Well, Trevor Power from the Macroeconomic Conditions Division. I guess the contribution that we make is as Mr Yeoman said, to providing the overall wages outlook. The reason that I would say it's led out of Fiscal Group is because the submission, if you like, it's a labour market policy distinction. So we provide the macro view, and the policy component's done out of Fiscal Group, and of course that submission goes to what sort of actions the Fair Work Commission might take. So that's the distinction, I guess, that we draw inside Treasury.
Okay. Minister, have you read the government submission to the wage review, the annual wage review?
No, Senator, not in detail. I haven't.
Does it come to, is it a cabinet approved document? You think it'd go through cabinet, wouldn't it? Because it's the Australian government's submission to the Fair Work Commission.
Senator Gallagher, I'm just struggling how we're
Wages.
dealing with the macro group within Treasury talking about the submission of the Australian government to the Fair Work
Well, it's linked to the
Commission.
issue of wages.
Well, there are many things that are linked to the issue of wages, and that's
and
an
it's got large
extraordinarily...
components out of this budget as part of the submission.
I'm sure, but there's still the question as to whether or not it falls
Where would you
within this
suggest
section
it
of the
falls?
program. Well, obviously there's industrial relations hearings occurring where
Well,
it
no,
would
I've-
properly fall
no,
within...
I have some questions around-
In terms of Fair Work Commission. If the Minister's happy to answer the
Yeah,
questions,
I
I'm
think
happy
so.
to provide the Minister with the
Had
opportunity.
long discussions about wages here last week, and that we're all in order.
Yeah. Senator, there are many different pathways that a document becomes an Australian government document or submission to a different review. That certainly aren't all cabinet sign-off. They can be signed off by cabinet committees, subcommittees, or indeed through processes of approval between the relevant ministers and the Prime Minister.
Okay, but you don't recall this one? It's... you don't recall whether you've seen it or whether it went to cabinet?
Senator, I think the process for this one is between relevant ministers and the Prime Minister.
Could you check that for me? Because it doesn't make that clear, I don't think, on the submission.
No, well,
It says on behalf of the Australian government. I would have thought then it would have been a document that the cabinet had signed off on.
All documents in that sense are published on behalf of the Australian government, from different departments, agencies, etc. And that doesn't mean that they've all walked through the cabinet room.
Okay, but considering how critical wages are in the cost of living discussion, why is it that it's essentially a repeat of previous government submissions to the wage review? I think it's almost identical to ones that have been handed to the Fair Work Commission in recent years, and it doesn't seek an increase in line with the cost of living.
So we touched a little bit on that last week with one of your colleagues in relation to what is an agreed government position in relation to the role that we play in the annual wage review as a government, and that is to provide information around economic conditions and labour market conditions and other factors to help the Commission in their deliberations. That ultimately the Commission, who I am confident will determine an increase in the minimum wages, but it is their decision to determine what that increase is, and the role that we think government can most usefully play is to assist the Commission through the provision of factual information. Now, the submission is built each year off the back of the type of factual information that we have available to us. The facts change, but if it has a similar look to it, that's because it's the same sort of data sets, same sort of factual information that we are providing, updated for the facts of this year as compared with previous years.
So for Australia's lowest paid workers, the government's submission is silent on whether there should be a wage increase in line with the cost of living.
Senator, the government fully expects that there will be a wage increase. The question for the Commission will be how much. And
you don't think the government's got a role then in advocating or forming a view about what that might be and at least keeping up with the cost of living?
Senator, we don't think it's the government's job to legislate and establish an independent umpire to make the decisions about what that minimum wage rate should be, and then at the same time for the government to present a separate view itself as to what that should specifically be. We have the independent umpire for a reason. The different parties all make their submissions. The government plays, we think, the most constructive role by providing all of the potential analysis and information to help the Commission make the most informed decision possible to help low-income Australians and those in receipt of the minimum wage to receive a fair wage rise, one that is commensurate with inflationary and other conditions, but equally for the Commission to make sure that they are making a wage determination that also takes into account other factors in the economy in terms of its impact on the labour market, impact on inflation and the like.
I think the government has been clear that you want to see wages get moving. The RBA certainly has. The Treasury Secretary has made comments about the need to see wages growth. This is the opportunity for the government to actually say that in a submission to the Fair Work Commission. I agree, not putting a figure on it. I don't think we're asking you, but I am intrigued as to why you've basically sent the same submission that you've sent for the last 3 years. I think 2020 was slightly different because of the COVID pandemic, and you made some separate comments there, but why, if wages growth are so important, the government would not express a view on it to Australia's lowest paid workers?
Well, Senator, our approach does stand in contrast to the fact that the last Labor government didn't make any submission at all in its final year. So
in its well, what, we're going to go back 9 years and blame the Labor Party for this?
No, Senator.
They did make submissions in the past, and they did argue for wage increases in line with cost of living. Yours doesn't even do that.
Well, the last time you had a chance you didn't make a submission at all. The approach we've taken is a consistent approach, which is one of presenting all of the information there. The government would wish to see Australians receive the largest possible wage increase, subject to all of the other factors that the Fair Work Commission has to weigh around the impact of that wage increase on labour market conditions, on inflationary conditions, on other economic factors. That's why we have this process in place through the Fair Work Commission that enables employee and employer representatives to make their cases and their arguments quite transparently, to present their evidence, and the government provides its evidence and information to assist the Commission as a government established entity with the task of independently determining the minimum wage rates to fulfil that task with as much of our expertise and analysis available to it. But we're not in the business of creating a dog and telling it when to bark in that sense. The Commission is there to make those determinations independently and to do so on behalf of the nation and on behalf of government.
But you don't see the Australian government's role as, in its submission, forming a view about whether a pay rise in line with the cost of living is appropriate. You actually don't express that in your submission. So it's not clear what the government is arguing for.
Well, Senator,
That's what submissions are for, aren't they? They argue a particular point of view.
At its heart, that's the job the Commission is undertaking.
Based on submissions.
Is to determine what pay rise is appropriate, weighing the different factors of cost of living pressures or inflationary pressures, but also the impact of any rise on inflation or on the labour market, the balance between the impacts in terms of delivering a wage rise to employees, but also the viability and ability of employers to grow and create more jobs or opportunities. They're the matters for the Commission to weigh and determine upon. That's clear in terms of the purpose of this activity. We think the government's most useful role can not be to become an advocate in that process for one side or the other of the arguments, but to ensure the Commission is best informed to come to a view that is fair for working Australians, but also delivers optimal outcomes for future economic growth of the nation.
Does the government support an increase to minimum award wages?
Senator, we will support whatever increase the Commission determines.
But does the government support an increase to the award wage of minimum work
Senator,
workers across
we
the
expect the Commission will determine an increase.
But do
we
you
support the
it?
Commission in their determination, and we will support whatever that increase is.
Why can't you say whether or not the government supports an increase for minimum wage workers in this country? Why is that so hard?
Senator, it's not hard.
It is hard. You're not doing it.
Sorry, Senator
we
Gallagher,
expect the Commission...
You've asked the same question three times.
We expect
I
the
suspect
Commission
you're not going to
will
get a different
determine an
answer,
increase.
Minister.
We expect the Commission will determine an increase. We support the Commission in their work through the provision of information, and we will support whatever the size of that increase that the Commission determines.
Well, you have to, don't you? You have to support it once the determination's been made. But I'm asking
we
whether
have an
or
independent
not
commission and we
you
support them in their work.
an increase for minimum wage workers in this country. Does the government support that?
That's the purpose of the process that's underway, Senator, and we support that process with the information that we provide, and we will support the outcome of that process. We don't see government as an advocate in that process. There are plenty of advocates fronting up to the Fair Work Commission in that process. We see government as providing the assistance of our analysis and information to help the Commission come up with the fairest possible outcome in response to the arguments of the different advocates.
So you support a process, you'll support the outcome, but you'll stop short on saying whether the government actually supports a wage increase for people earning $20 an hour.
Senator, we fully expect the Commission will determine a wage increase, and we support them in that work, and we will support whichever figure they come up with in terms of its implementation.
Yeah,
Senator Gallagher, 2 minutes.
And the point I'm making is your submission doesn't support an increase. You sitting here are not supporting an increase.
Are you proposing?
And why?
Are you proposing, Senator, that we should put a figure on it?
No, I'm not.
So-
I'm
so-
trying
so-
to
no,
get you
you-
to
so
say.
you just want-
I'm trying
Minister, order. Minister, whilst I understand there's a political nature to this discussion, of course, but it's a role of members of the committee to ask the questions, not the minister to ask the questions of members of the committee. So, Senator Gallagher, you have the call.
I've already said I wasn't asking for a figure from the government. I was asking whether or not you supported an increase for the lowest waged workers in this country, around 2.7 million of them, who are relying on this case. And previous governments have made applications through their submission that they support an increase, for example, in line with the cost of living. Your submission does not do that. And
So-
we know how important it is to get wages growing. Your budget has, wages growth or the lack of it as a particular feature, and yet you're not playing any active role in arguing the case for the lowest paid workers, which presumably will flow through to the most neediest families in the country. I just can't understand why you would be doing this and why it would be so hard for you to actually form a view, the government.
Good. Well, Senator, because we don't follow the gesture politics of your side, which seems to be of this view. You've just confirmed it here in terms of the minimum wage case. It's also your position in terms of the case in relation to aged care workers, that you want to somehow stand there and say there should be an increase, but we won't say how much. So you're going to sort of play this funny gesture politics of
It's not
of
gesture
dangling out-
politics, it's
dangling out-
leadership.
Sorry,
dangling out
Senator
a carrot.
Gallagher, the minister has a right to finish his answer, and this will be the last answer before I have to share the call.
I'm dangling out a carrot, but not saying whether it's 10 cents or $10 in terms of what the view of the Labor Party is in those matters. We're holding a principled position, and the principled position is that we have an independent umpire in the Fair Work Commission. We back them in their work. We fully expect them to determine an increase in the minimum wage. We support them going through that with all of the evidence and information that we as government can provide. We will support whatever independently determined outcome they come to. We don't seek to put government on one side of the proponents or the other in the debate that is there, but to ensure that we get the optimal outcome for low-income workers in terms of the size of the wage increase that they receive, but the optimal outcome also for the operation of the Australian economy and businesses to keep jobs growth strong, to keep our economic growth strong. In terms of driving stronger wages growth, it's why we have in this budget measures in relation to skills, in relation to digital investment, in relation to infrastructure, all designed to help in terms of the productivity of the country, all pointing to the fact that that as we move out of the extraordinary disruptions of COVID, real wages growth is forecast from 1st July this year, moving through each of the forward estimates years thereafter.
Thank you, Senator Gallagher.
Well, can
I just have
I
some-
think I just have to respond to the
No, sorry,
gesture
Senator Gallagher,
politics.
you don't have to
It's not
respond.
gesture politics,
Sorry,
it's
order,
leadership.
order,
It's
order,
leadership.
Your question was
order,
Stand
order,
alongside lowest paid workers in this
order,
country.
order,
Representing your community
order. You don't need to respond.
Well, I do need to
No,
respond.
you don't
We
need to
can't
respond.
just let someone say that on the record
Order,
and then not have a response.
order,
On an issue
order,
like this, we won't
order,
have that.
order. You'll have an opportunity to have the call again during this session. Minister, I just want to flush out this issue a bit further in terms of the federal government's approach to making these submissions. The reference was made to identical submissions. It's really a question of the approach has been consistent in terms of making the submission. Is that correct in terms of the purpose of the submission made by the federal government and the information it should contain in order to inform the work of the Fair Work Commission? Is that correct?
That's right, Senator Scarr. I mean, this submission details the increased strength of the labour market, the improvements in employment outcomes. It will also detail the impacts that we're seeing in relation to inflation, some of the expectations around that as well. They're all important factors for the Commission to weigh in determining what is an optimal minimum wage increase.
So from the federal government's perspective, it's a question of providing all the relevant information and analysis which the organs of the federal government produce in terms of considerations which the Fair Work Commission, in terms of discharging its independent obligations, would be interested in, and making sure that the Fair Work Commission is armed with the benefit of that information and analysis in terms of coming to its independent determination. Is that the approach?
That's right, Senator Scarr. That the Commission receives a wide range of submissions, most of them from advocates and proponents arguing for different levels of increase to the minimum wage. From the government's perspective, we provide them with as much analysis and as much expertise as can be furnished through the submission approved by the Treasurer and Minister Cash, through the processes of their agencies and departments, and from there, with the type of analysis we've canvassed before at this committee, the Fair Work Commission is able to make, we hope and trust, the most informed determination that keeps the labour market strong, keeps the economy growing, and helps minimum wage Australians with an appropriately calibrated wage increase.
And that indeed is the role of the Fair Work Commission, not of the government, to actually independently assess all of those factors and make an independent determination. Is that correct?
That's what the legal structure of the Fair Work Commission is established for, to make those independent determinations, and this annual process that they undertake to do so in a routine way. And as I said to Senator Gallagher before, the government fully expects it to be a wage increase. The only question is, what is the scale of that increase? And in terms of the scale of that increase, all of the information we provide, we hope will lead the Commission to make the best decision possible for Australian workers, both of today in terms of what they receive in their take-home pay, but also into the future in terms of the continued growth of jobs in the economy to provide opportunities for those still entering the labour market.
So it's your expectation there will be an increase, but the magnitude of that increase is a matter properly within the jurisdiction of the Fair Work Commission, and the government will of course respect the determination which is made by the Fair Work Commission, and that's how the system works. Is that correct?
The government respects the outcome and the determination of the Fair Work Commission. We fully expect there to be an increase. The size of that increase is one for the Commission to determine, consistent with their independent mandate, and against the expertise and information they receive, and the submissions and arguments they hear.
And those submissions are from a larger range of array of stakeholders who I'm sure will all be prosecuting their own cases, representing their own constituents and stakeholders fiercely, as they often do in these matters. Is that correct?
They certainly receive a wide range of submissions. I'm sure some containing greater analysis and expertise than others, all containing various opinions. The government believes that the most constructive role we can play to assist the Commission in coming to an evidence-based conclusion is for us to provide as much of the analysis, evidence and information that can assist the Commission to distill the opinions and arguments of the different proponents in the process down to something that will support a fair outcome for workers, businesses and the economy.
So just thinking that through, that's really important, isn't it? In the context that the information as it's presented, the information analysis as presented by the government has an objective flavour to it, in the sense that this is the analysis of Treasury or the other relevant departments with respect to the economic factors, and it doesn't have attached to it a submission calling for a particular outcome, which provides an objectivity in relation to the data and the analysis which is provided by the federal government for the benefit of the Fair Work Commission. Is that correct?
Well, Senator Scarr, I think there would be a risk if government appeared to be taking the side of one party or the other party through such a case, that then the objectivity of the analysis and information we're presenting could potentially be undermined. Whereas by keeping to a factually based approach in relation to the information and analysis provided. We trust helps the Commission come to the best possible outcome for wage earners in Australia and the economy.
Absolutely, I agree with that. Mr. Yeaman, I just want to ask you some questions about inflation pressures and which is obviously a relevant issue in terms of the work which is being undertaken by the Fair Work Commission. But how does Australia place in an international perspective in terms of inflationary pressures at the moment?
So certainly, I'll pass to my colleague, Mr. Power, Chair, but at a high level, we are certainly seeing much more muted inflation pressures here in Australia than we have seen globally, particularly in the US and UK and a number of other countries across Europe. But my colleague, Mr. Power, may like to add some facts to that.
Mr. Power.
So inflation has risen in Australia, but as you've noted, other countries, particularly in Europe and also in the US, have experienced higher inflation over the last year or so. Partly, of course, that's due to a few factors. One of them is energy. Obviously, there are recent impulses coming through from oil, but there are price pressures already building in some of those economies, particularly around electricity and other fuels. One of the other factors, which I think Dr. Kennedy spoke to last week, was how tightness in the labour market, particularly in the US and the UK, had also played into that in some cases because participation hadn't come back in the same way that it had in Australia following the pandemic. So from a relative perspective, Australia's inflation at around 3.5% at present is well below where we are in the US and the UK, which...
Sorry, how far below?
So broadly, it's about 4 percentage points. So the US is around in the sevens. UK, our recent number I think was 6.2. I'm happy to confirm and check those, but basically we're between 3 and 4 percentage points in a through-the-year sense against those comparable economies.
So we're about our inflation rate is about 40% or so lower than it is in some of those other countries, OECD countries. Is that correct?
That's right, particularly against those economies I just mentioned, but in other European countries, again, you're seeing very significant inflation in Germany and others in Europe.
How does that, I'm just interested how that compares historically in terms of Australia's inflation rate being so much lower, which obviously has tremendous benefits to Australians, than other OECD countries. How often does that occur, that level of discrepancy?
Well, you have to go back and look at the data, but I think it's at the moment...
I'm not asking you to take it on notice. I'm just interested because it seems quite a level of magnitude of difference.
It is a large magnitude at the moment. One of the key differences, as I sort of mentioned, really is building energy prices prior to the invasion in Ukraine. So there's already significant pressures. There are other categories in some of those economies, particularly motor vehicles and others, that were significantly outpacing the situation in Australia. It's also the case that in the US, for example, goods demand is much higher than it had risen to here in Australia. So, look, it is a large spread at present, and there's obviously some specific factors that are driving that.
And presumably because our inflation pressures in Australia are more moderate than they are in overseas jurisdictions, comparative economies, that means there's less pressure on interest rates perhaps than in those economies. Is that correct?
Yes, broadly that's right. And obviously there's a lot of market commentary around the US Fed and the expectations for interest rates there relative to Australia. And obviously a number of economies have started their tightening cycle already compared to Australia. So we're a little bit behind, partly because of the inflation pressures, of course, that you've mentioned here in Australia.
Yeah. And in one sense you can refer to it as a tightening cycle, in another sense it's normalisation, isn't it?
Correct. So obviously the situation where we are now at 0.1 is highly unusual, and we would expect, as has been expected for a long time, that interest rates would normalise over a period once the cycle had come to an end.
Okay. I just want to come back to this issue of wage growth. The expectation embedded in the budget is that wage growth is expected to continue to increase. Is that correct?
That's right. So the estimates that are in the budget show an increase in wages over the forward estimates period, and it picks up from this year and then goes to 3.25, and then it goes to 3.5 further out in the forward estimates. Partly, well, obviously because of the significant tightening in the labour market and some of the reductions in spare capacity that we've seen, including record high participation rates and a reduction in the underemployment rate.
Yeah. And just in terms of assessing that wage growth, there are a number of particular factors or measures by which you can assess that wage growth. Can you just walk through some of the measures and what we should be considering in terms of what are the more relevant measures in the current environment where you've got these almost record high participation rates in the Australian labour market?
Sure. So there is some information in the budget papers which obviously we forecast and provide the wage price index, which has the profile that I just mentioned. It's also the case, we also provide some information about average earnings on a national accounts basis, which shows as we expect that will rise or increase a little bit faster than the wage price index. There's a couple of reasons for that. The wage price index, if you like, is a relatively slow moving series as it tracks particular occupations and the wages that they receive. The average earnings on a national accounts basis is a different measure. What it does is take into account other payments that workers might receive. So this could include overtime, bonuses, wage rises that employees receive when they change jobs. As a result of tightness in the labour market. So what you do see often in periods of tightness is that the average earnings on a national accounts basis might pick up, is more responsive, if you like, because it takes into account some of those other factors than the wage price index, which just follows, as I said, wages in a particular occupation over time. So that's partly why that information in the budget to show that the average earnings on a national accounts basis is rising faster over the forward estimates than the wage price index.
Yeah. Okay. All right. Thank you for that. That's a positive news story. Senator Chisholm.
Thanks. Just some questions about the longer term impacts of the budget. In June last year, June 15 at a CEDA speech, the Prime Minister said, and that's why we have a plan to lift growth, not just for the next few months, just not for now, but the next 5 years. We need to lift our economic growth rate by more than 1 percentage point above trend to beat the expected pre-COVID-19 GDP by 2025, to catch back up to where we were before COVID hit. So that's from a speech the Prime Minister made last year in a long list of big announcements that we've not heard much from since in terms of a plan to lift our economic growth rate. How is that plan going?
Well, Senator, at present the plan has been progressing quite strongly if you compare it against international conditions that our recovery has outperformed major advanced economies, that the outlook for real GDP has strengthened in the near term, and the investments we continue to make are about strengthening it over the longer term as we continue to progress.
But isn't growth forecast to slow over the forward estimates?
So, Senator, I'm happy for officials to talk about some of the considerations they apply there in terms of the further out you get in our budget projections, the way in which certain factors are assumed to normalise or gravitate towards previous longer-term trends. That, in a budgeting sense, in elements, is about applying conservative and more reliable forecasts in terms of budget and the outlooks as to how they underpin that. But what we've demonstrated so far is that our performance has been able to both exceed expectations in terms of what we had forecast and exceed international comparisons too.
But just going back to my actual question, which was growth is forecast to slow over the forward estimates. That's correct, isn't it?
So, Senator, I can answer and say that so we have very strong growth in the near term as we rebound out of COVID-19, and then growth gradually settles down from that point onwards. As the Minister said, and as we outlined in the budget papers, beyond the first 2 years where we apply a detailed forecast methodology, we then gradually move back towards what we consider longer term trends in the economy for both underpinning factors such as productivity, participation and population. Those are based on assumptions which we have canvassed with this committee a number of times in the past around particularly the productivity assumption. We assume a 30-year average of 1.5%. That's what underpins our longer term growth. So I would certainly describe the near term outlook in these forecasts as a strong growth outlook, and then we have a somewhat mechanical process and an assumption-based process from that point onwards that drives the economy back to its long-term potential rate of growth. And that's what's driving the slowdown that you described.
But the Prime Minister made this speech less than a year ago, and I just don't see any evidence of how this is carried out in the budget. So where is the long-term plan for growth?
So Senator, in terms of the forecast and projections, you've heard the fact that we continue in terms of beyond the first couple of years applying the same metrics as have historically been applied, and I'm sure if we had deviated from those metrics as a means of presenting the budget papers, you and others would have been quick to criticise any such deviation. So we're sticking with those metrics in terms of how we present the budget papers and the analysis there. In terms of the growth expectations and what the government's plans are to help drive growth, well, those plans exist in areas of our investment in skills and apprenticeships across this budget, building on the previous couple of economic statements. They exist in terms of our transition of tax incentives to drive investment and growth in business from the last couple of budgets where we've had economy-wide incentives to support investment by businesses through full expensing, to in this budget our support for measures such as the 120% depreciation or deduction, I should say, for small business investment in skills, 120% deduction by small business in their digital capabilities, which are about lifting the growth potential of those key parts of the economy. The continued advance of the patent box tax reforms from what we announced last budget to this budget is again about creating an environment that encourages greater commercialisation and development of products that have been innovated in Australia, where the research and development occurred, into actually being commercialised and manufactured in Australia. The investment in infrastructure, be it inland rail and intermodal terminals that are about moving freight faster across the country, the investment in the regional agenda of high growth potential hubs around the country, and particularly in support of infrastructure within them, also about lifting our export performance and growth opportunities. They're the types of things, Senator Chisholm, that are at the centre of our detailed plan for economic growth to maintain the above international comparison performance that we have been achieving of late.
That's all we've got for macro, I think, Chair.
Oh, okay. I've got just a few follow-up questions in relation to the issue of growth. In that speech to CEDA, there's a quote from the Prime Minister, and I quote, "Growing our economy all comes back to getting people back into jobs," end quote. Mr Yeoman, can you provide perhaps some analysis with respect to how we've gone in terms of getting people back into jobs, in terms of the unemployment figures which are considered in the budget?
Certainly, Chair, and as I think we've canvassed with this committee before, the strength of the labour market is certainly one of the key factors that has surprised on the upside coming out of this crisis.
Sorry, it's surprised on the upside in
Correct.
terms of
Certainly it's
the
been above our
employment
expectations.
outcomes.
Certainly,
Right.
the labour market has performed more strongly than we and other economic forecasters had expected as we came out of COVID. I think we've discussed in the past that one of our key concerns coming into the crisis was the experience of past recessions, where in some cases it's taken 8 to 10 years for the unemployment rate to return to pre-recession levels. In this case, the unemployment rate is now at 4%, which is historically low and below pre-crisis levels. We have more Australians in work today than we had prior to the crisis, and the participation rate in particular has been one area that has continued to outperform our expectations and is currently at or close to record highs. So it's certainly the case that the labour market has significant strength in it and significant momentum in it at the moment.
And as the Prime Minister said, growing our economy all comes back to getting people into jobs. Can I just ask you, how do our employment figures, unemployment figures compare in an international context to, again, some of our major trading partners and peers?
So I think the key international comparison that is cited regularly, Senator, is a number of countries are still have, particularly the US and a number of other countries, still haven't got employment levels back to the level they were prior to the pandemic. Australia has exceeded our pre-pandemic level, so that is an area where we have outperformed. And on participation, I mean, there's been much public commentary around the so-called Great Resignation, and that's been a key factor in the US that's adding to inflationary pressures there. As my colleague mentioned earlier, is that they still in the US they've seen a number of people leave the labour market and not come back to the labour market to participate over the course of the pandemic, whereas in Australia, as I said, participation rates are at near record highs. So that's been a key difference internationally.
Okay. And Minister, just running through, as you did, some of the initiatives contained in the budget, and if you turn to page 9, budget paper number 1, in terms of budget priorities, the first dot point is building a stronger and more productive economy to create more jobs by backing small business with tax incentives to digitalise their operations and upskill and train their employees. Is that designed to increase growth?
It is, Senator Scarr. We've seen how we can drive performance in terms of tax incentives, changing behaviour and achieving positive outcomes for the economy. I referenced before the full expensing measures that we had applied to stimulate business investment, and you can see elsewhere in the budget papers that they are driving significant growth in business investment, particularly non-mining business investment, which has lagged at previous times, and so we've succeeded there. And the good things about that type of investment is that growth in plant, machinery, equipment, etc., isn't just stimulating economic activity now, but it also is making those businesses more productive and competitive into the future. In this budget, the point you've just highlighted around small business tax incentives to digitalise their operations and upskill and train their employees, this is a more targeted approach around, but taking the same theory, if you like, which is that by creating a stronger incentive there, in this case a 120% deduction that those small businesses can employ, we expect that to incentivise small businesses who are such a big employer across the economy and growth engine for jobs to invest more in their workforce, to invest more in the digitisation of their businesses, be it in accessing more efficient cloud-based solutions or in embracing e-invoicing and measures that can help their cash flow management or the like, all of which are about making them more productive and competitive, enabling them to grow faster and employ more Australians.
Yep. Another initiative, securing our supply chains by transforming Australia's manufacturing capability through the modern manufacturing strategy. Is that a policy position program that drives growth?
Yes, Senator Scarr. It's complementary to some of the things I spoke about before in terms of encouraging businesses to invest in their growth capacity, in updating or modernising their plant or machinery, in pursuing new supply opportunities. If I pick on three major announcements in my home state that at least come to mind under the modern manufacturing strategy, we've supported Fleet Space, a company that is developing satellite manufacturing facilities in Adelaide's western suburbs that help deliver on our space industry agenda, but will create a new manufacturing activity in Australia. We've supported Saab in relation to software manufacturing, particularly in the defence sector, but also with capability or potential for elsewhere. And we're supporting Thomas Foods International, traditionally a large meat exporter from Australia, to now establish plant-based protein manufacturing facilities in Australia, seizing opportunities in a big new global growth sector around plant-based protein foods, and the diversification of that business, but not just exporting grains or legumes to the rest of the world, but providing for the type of manufacturing activities that can value add those grains and legumes in Australia and create more jobs and growth in Australia as a result.
So it supports growth.
Because there are many others across the rest of the country. I can just recite off the top of my head those in my home state a little better.
No, well, I'll give you one final reference, which is highly relevant in my home state of Queensland. I know which Senator McDonald's passionate about, and that's the $2 billion Regional Accelerator Program.
Absolutely.
That's designed to drive growth and productivity in regional areas, isn't it?
It is, Senator Scarr, recognising that regional Australia contributes around 67%, I think it is, of Australia's total exports and generates around 82%, I think it is, of Australia's goods exports. So regional Australia is not just a wealth generator for the regions, but is a wealth generator for the whole nation. And by investing in that Regional Accelerator Program, we're seeking to stimulate further growth in the regions. Also building, as I think Senator McDonald explored here the other day, on some of the changing population trends that are seeing actual population growth pressures in parts of regional Australia, and so we're seeking to leverage that opportunity. The Regional Accelerator Program, overwhelmingly though, using existing programs such as those under the Modern Manufacturing Strategy to effectively deliver support dedicated to the regions, but leveraging existing mechanisms of government to do so.
Okay, thank you, Minister. Senator Gallagher, you have some more questions on the macro area.
Yes, I do.
You have the call.
Just a couple of quick ones. Minister, in your budget for this year, the 21-22 year, the CPI is forecast to go up 4.5%, wage price index 2.75%. That's right.
It's 4.25%. So
Yeah,
the
sorry,
CPI.
4.25%. Yep, and 2.75%. What does that mean for real wages this year?
Well, Senator, that does mean that inflation is growing ahead of the wage price index. We had quite a discussion with Dr. Kennedy last week about the different measures of wages growth, which are explored within the budget papers, and the alternative to the WPI, which is as an alternative showing faster rates of growth at present. But the government's recognised these sorts of pressures from the inflation price spikes that have flowed through to the economy, especially in relation to oil price spikes, and it's why this budget contains a carefully targeted cost of living package that responds in a targeted and responsible way for Australians.
So real wages going backwards this year.
Senator, the impacts of that do depend upon which measures of wages growth you use, but as I say, the government has recognised some of the unique factors of the global inflationary pressures that are flowing through into the Australian economy, and it's why we've got the cost of living package that also builds on the tax cuts that our government has previously legislated, and which themselves have significantly increased take-home pay for many Australians.
But according to your table 2.1, budget paper 1, page 37, there's a real wages going backwards by 1.5%, correct? We look at table 2.1.
So Senator, you're not misreading table 2.1. I don't believe.
I'm not misreading it, but you can.
But Senator, as I've just indicated, the government's conscious there are some unique inflationary factors that are flowing through from overseas at present. As you've heard in evidence already this morning, Australia is withstanding some of those inflationary factors better than many comparable nations. The government's response to helping Australians deal with those inflationary pressures is to build upon the extra disposable income we've provided to Australians through our tax cuts by also providing for the cut to fuel excise and the additional support measures to households outlined in this budget.
So I'm not misreading it, which means you won't say, you're not going to say that there's a real wage cut. You're not going to accept that or say that out loud. Is that where we're at?
Well, Senator, we can go over again the issues that we went with Dr. Kennedy around the AENA and what it's showing in relation to wages as well.
I listened to all of that.
What the government doesn't deny or dispute, Senator, is that there are inflationary pressures flowing into Australia from overseas, and that we have responded to those inflationary pressures with a carefully calibrated cost of living package of support that builds on the tax cuts that are already providing additional disposable income, take-home income to Australians. It's important always in these matters to recognise that what people actually take home in their wage packets, net of taxation and other factors, is what they have then available to deal with the direct cost of living pressures.
So you're saying people have enough?
Cuts have increased.
So you're saying
pay significantly.
people have more than enough money to deal with the cost of living pressures. Is that what
Senator,
you're saying?
I'm not going to let you put words in my mouth.
But that's what you're saying. You're saying
Senator,
that is what you're saying.
It is not what I'm saying. I said we recognise the particular pressures, especially from the spike in oil prices, and that is precisely why we've responded with a targeted cost of living package in this budget to support those Australians who are feeling those pressures at present.
So just to finish this up, if you accept that there's a role for government to provide support on the cost of living side, why then is the government not accepting the responsibility to show some leadership on the wages side?
No.
I mean, if we accept from table 2.1, real wages go back 1.5% in this year, why then is the government not able or not willing to say they want to see the minimum wage increase?
So, Senator, I don't accept the premise of your question in that the government's entire economic plan is about driving economic growth in Australia, driving jobs growth as outlined in the budget, achieving the outcomes that see real wages growth occurring from the 1st of July this year onwards. That is absolutely what our plan is focused on. Sustainable wages growth isn't achieved by virtue of a government writing a submission to a statutory body, Senator Gallagher. Sustainable wages growth is achieved by having economic strength by having strong businesses, by having strong jobs growth. That's what helps to sustain wages growth into the future across the economy, not what seems to be the Labor Party policy of the government should write a letter.
Well, it's not about writing a letter, it's about showing leadership again. Like, I totally disagree with you that this is about some sort of gesture politics or something. They were the words you used before. If your budget says wages are going backwards by 1.5%, and, well, lucky everybody, in the out years, you might nudge slightly ahead of inflation by 0.75% at the end of 2024, is that what you call sustainable wages growth? Is that the best that people can hope for?
No, Senator, what the budget shows is a return to real wages growth. That will also occur in an environment where stage 3 of our tax cuts will be implemented in the next term of Parliament if our government is re-elected.
People have never had it so good.
I can't guarantee what will happen if a Labor-Greens alliance is formed, but if our government is re-elected, stage 3 of our tax cuts will flow through. They will ensure that around 90% of Australians pay no more than 30 cents in the dollar as their top marginal tax rate.
And you know that.
Well, Senator, I don't know what gun the Greens will hold to your head if the Australian people elect a Labor-Greens alliance.
You're better than that, Simon. You're better than that. We have been very clear on that. So sustainable wages growth to you is people nudging ahead in the 23-24 year, but no role for the government to show some leadership in this year when people, it's clearly, on your numbers alone, are doing it so tough.
So Senator,
your answers won't change.
Senator,
okay.
The reason we've got a detailed plan for the economy is because we know that it's actually complicated and complex to make sure you sustain economic growth, jobs growth, drive an environment that achieves real wages growth, that it's not achieved by simple gestures of writing a letter to a statutory body.
It's leadership.
You actually need the
something
economic.
That your government doesn't
You actually
have.
need the economic conditions to achieve it, and that is precisely what our budget plan outlines. It's what is absent in relation to your party, and you know, what we saw from Mr Albanese last Thursday night was a complete void when it came to policies or statements in relation to tax and small business or regional Australia and the type of growth that our plan focuses on for the future.
I don't think I'm going to get any further with him. Thank you.
Senator McDonald, you've got some final questions in this area before we move on.
Chair, I'd like to step back into the real world of what's really happening in regional Australia, the massive workforce shortage and the competition for wages. And I wanted to take you to page 57 of budget paper number 1, where you very clearly talk about AINA being a more representative measure of wages, that wages including bonuses have picked up in recent quarters. Single-touch payroll data shows that workers who move jobs in 2021 typically experience pay increases of between 8 and 10%. I appreciate that the last line of questioning was around award wages, but what are you seeing more broadly across the wages market, particularly, I guess, in regional Australia where there's such a workforce shortage?
I'll pass that question, Senator, if I could, to Mr Power.
Well, I won't sort of go back over, Senator, the way that we thought about average earnings in the national accounts and how it does pick up those additional payments that we talked about. I mean, part of the reason why we think we're seeing that in the average earnings measure is because of some of the tightness and job shifting that is going on in certain sectors and also in cities, but no doubt in regions. And so some of that pressure in people shifting between jobs for higher pay is one of the reasons why that average earnings measure is driving faster than the wage price index. So those shortages and the significant elevated vacancies are really sort of driving a bit of pressure into that system.
So I'm seeing employers competing for workforce, offering all sorts of incentives in addition to cash, be it vehicles, accommodation. That will be reflected in, some of that is reflected in the single touch payroll data, but how do you get a handle on what's really happening within the labour market? I understand that the RBA, for example, goes out and does regional visits. Do you get data like that?
Yeah, so we do. My colleague might like to speak to the way that we look at the single touch payroll data. My group in Macro Group does a really quite extensive liaison program where we talk to businesses about some of the pressures they're seeing, whether they're expecting to increase headcount, and also about how they are attracting workers in the same way that you just mentioned. A lot of the information we had got through that liaison channel over the last 6 months, or I would say, has been some payments outside base wage situations. So it could be incentive payments to sign on. It could be bonus payments and other payments, which I guess go into an overall package, or goes into the overall income of an employee, but doesn't necessarily fall directly into the base wage rate. So again, that's why you see the difference between some of the measures.
I think certainly, Senator, if I could add, we do our own liaison program. We go out and talk to businesses. The Reserve Bank has its own program as well, which is probably more detailed than ours, but we share information with them. And it is certainly the case, because we've all been looking closely to see how the tight labour market is going to be reflected in wages from here. And we haven't yet seen it coming through very strongly in the wage price index, although as we forecast, we expect to see that gradually picking up from here. But it is certainly the case that we're hearing consistent stories, and there are parts of regional Australia, certainly Western Australia and the mining sector is one area where we're hearing this quite a lot. And there are other areas of regional Australia where we're hearing it, but it's not only in regional Australia, we're hearing in other parts as well. I mentioned professional services, I think, on Friday as a key area we're hearing this too. It is certainly the case that as a first step, employers are using these other forms of remuneration. They're using promotions, they're using bonuses, they're using retention bonuses and other forms of incentives to help attract and retain the best workers that they can find, and that is flowing through, and that's what we're seeing in the average earnings measure of the national accounts. That's what's starting to flow through there. And then we're starting just to hear now some stories, and we'll have to watch this closely going forward, but some of those are now translating into higher base wages as well for some of those workers. And that's a process we expect to play out over the next few quarters. But certainly we're hearing similar things, Senator, to what you are, that employers are competing for workers and they're using these other tools to try and attract and retain.
I think, this is something that's not reflected in the conversation from the other side, is the number of businesses that are using shorter hours, that they're closed on times that they normally would have been. Employers who weep saying that they can't keep working the sort of hours they are because they can't get a forklift driver, they can't get staff to work in their businesses. And so have you done any estimates of how much the economy is being constrained by the lack of workforce?
So I'd say we haven't we're certainly aware of all those things that you'd mentioned, and of course what we do is follow quite closely the way spending and output is tracking. We haven't been able to identify, if you like, the wedge or that might be occurring because of that. But we are certainly aware of some of the things that you've mentioned. For example, kitchens not necessarily open for the span of menu or the times that they might have previously been in, or businesses having trouble with those with certain occupations. We haven't been able to isolate the difference. That the way that sort of flows through, if you like, is ultimately through production and spending, which we are watching, and business turnover, for example, which we do look at, and that is a component that we've looked at as we devise our outlook over the next couple of years.
All right, I think that's it. Thanks, Chair.
Okay, thank you. Well, that concludes our period with the Corporate and Foreign Investment Group.
Sorry, Chair, can I just ask one very quick question?
Of course.
Just because I think we're breaking too, aren't we?
No, we are,
Yeah.
so you've got time.
I think just, who does the budget books? Is that your area? Yeah. So just a question, normally you have a major initiatives table in the overview, in the big, and it's not in this one. So I just wondered, was it a decision to take it out, or?
Yeah, that might be a question for fiscal for
Oh,
the next
okay.
for the next area.
Oh, so content.
We publish.
Radio. I'll ask this. Thank you.
Okay. All right. We will now adjourn for morning tea and come back at 10:45 with Fiscal Group.
Thank you.
Resume with Fiscal Group. Who's seeking the call? Thank you, Senator Gallagher.
Thank you. Ms Wilkinson, I just asked corporate, I don't know if you heard about the missing major initiatives, the mystery of the missing major initiatives table that usually is in the front of the overview. I think it's been like that since 2006. Had a table of that type, but it's not in this one.
So Jenny Wilkinson, Deputy Secretary Fiscal Group. That's right, Senator. So we went through a reasonably extensive sort of design process around the glossies in the lead up to this budget, and looked to make a number of changes to make them more accessible. So we've tried to have a better table of contents and better infographics through the document that can help different people who've got, who absorb information in different ways, absorb it better.
Okay.
We removed we had received feedback about tables not being very useful in the document because lots of people find it harder to read tables, and so we did remove them in the text itself. There were previously a number of pages at the back of the glossy. There was a payments table, there was also an economic parameters table. There were about 4 tables, I think. And you're right, we did remove those from the glossy. There was a discussion between the Treasury, the design team, the people who were leading the glossies and the Treasurer's office around the value of those tables. I'm very happy to say that since these have been published, we have received lots of feedback from lots of people about how useful those tables are.
Right.
And we would certainly, going forward, be
Put 'em
expecting to... We've received enough feedback that it's clear that those were tables which were accessible. What we were trying to do was to remove some of the replication between the white books and what was in the glossies. But happy to, we have received that feedback and we've taken it on board.
Okay.
Yeah.
Not from in here necessarily,
No,
but from more broadly.
Yeah, more broadly.
Yeah.
Yep.
I particularly think the overview was a document people could pick up and kind of leave the other ones behind if you wanted to just be across the major,
Yes.
payments, measures, parameters, all of that.
Yes, maybe we were under the illusion that lots of people like reading the white books.
Yeah.
And we've
That
discovered
might be a
maybe
Treasury thing.
it might be a Treasury thing.
Yeah, it might stretch to finance.
I think it does.
Yeah. Okay. So when you
started waving around the glossy, I had I didn't bring a glossy with me. I've only got the books.
yeah, this is the shorthand, cheap version of the budget. Okay, so you expect they'll go back in, you think, for the next one?
Well, I mean, obviously the content of the glossies is always a matter for government, but we would certainly be providing the feedback that we've received, which is that lots of people have found it.
So when you say the design team did a kind of assessment on the budget, all of the budget books, or just the sort of the publication side?
So this year it was specifically the glossies.
Okay.
Over the last sort of 12 to 18 months, we've been making incremental changes to the white books, so introducing colouring graphs, improving some of the format and layout and that sort of thing. So that just happens has been happening incrementally over time. In this particular budget process, we had a careful look at the glossies themselves and tried to think about, using our comms team, obviously using advice from the officers as well about what they were receiving feedback was useful in terms of the design of the glossies. Okay. We received feedback that in previous glossies there was just too much text, and that was a bit overwhelming for people. We've tried to take that on board, but I'm sure they'll continue to evolve as we keep getting feedback about what works best.
Okay. And so do you do that internally? Like your corporate area does the design, or your comms area does the design, you do the content?
So there's a few different ways in which we've done it over time. in my group, Budget Policy Division is responsible for the glossies, but we work very collaboratively with the people in our corporate design area, and we have it. So it's content. I mean, my teams who contribute to the elements of the glossies, they have ideas about what the infographics could look like. They work with the comms area around how that could work up. We obviously get feedback from the officers about, particular infographics that they think would be useful. I think a few years ago, if you looked at a glossy, it would look much more like a Treasury document in terms of there being lots of graphs, for example, and less infographics. And I guess we've used feedback from a range of different places, but particularly our corporate design area, to sort of have a more updated document.
Yeah. Okay. So you don't. That's all done. This is all done internally. You don't outsource the work, the
it's
design,
all done internally,
or the review of what went in.
We didn't. We didn't have an external review that informed this. It was more. It was an internal review, and then internal work with the Treasurer's Office.
Okay. And how late are these produced? Like when do these go to the publisher?
So I don't think I've got all of the specific times, but the white books and the glossies are all finished at broadly the same time. They all have various deadlines, printing deadlines. So unfortunately, if Ms McKenna was here, she from the comms side looks after the actual printing of it. So we get it all together, we get it all fact checked. When I say we, the team in fiscal group that's responsible for it gets it all to the point of being ready to be printed, and our comms area have the direct relationship with CanPrint and do the actual printing. So maybe I'll just ask Mr Goldsworthy. He can probably give you a bit.
Yeah,
he was
thank you.
very close to it this time and can give you a sense of when, what roughly other times are when things go to the printers.
Thank you, Ms Wilkinson.
So Brenton Goldsworthy, First Assistant Secretary, Budget Policy Division.
Hi.
So broadly speaking, it'd be probably the Friday through to Saturday, Sunday, where the various documents would be printed. And as Ms Wilkinson was saying, our colleagues in comms manage that relationship with the printing service, and we do try and sequence and stagger the printing of the documents just to ensure timely delivery.
Okay. So that's budget on Tuesday, printing starts commencing on Friday.
So do we send
Broadly
some on
speaking,
Thursday?
yeah.
I
So
think that-
we
yeah.
might try. So there's some statements we try and get, or some books, I should say, that we try and get to the printers earlier. So I think the
Like
first,
the portfolio budget statements and things like that, or?
they're kind of handled separately. So
Okay.
BP2 is often the first one that we try and get to the
So you've
printers.
locked down the measures.
And like I said, I don't have the exact details with me, but recollection is probably the first one might go on Thursday, and then in a staggered fashion through to Saturday, Sunday.
Okay. And then, so it's a pretty stressful weekend for you, Mr Goldsworthy, is it?
One
He's
of the more
smiling.
stressful.
He's smiling.
That's
Yeah.
right.
The stress is well shared around.
Okay. You don't want any last minute print errors being drawn to your attention on Sunday afternoon.
No, not ideal. No.
Yeah. Were there any? Oh, sorry.
I'm sure you would have found them.
Errors.
Yeah, in the budget.
Nothing of substance that required.
An addendum or something.
Yeah, I'm just trying to think through.
History tells me there's usually a department whose PBS they'll need to sort of put a correction to or something. But,
Or a Veterans Affairs Minister
but-
that does a press conference.
well, that's not so much a correction to the budget statements, but the additional details that we've canvassed there will be reflected in PFO.
Yes, indeed. Okay, so the books are printed from, in your best recollection, from Thursday to Sunday.
That's right.
Okay, and presumably changes can be being made up to the point that they head to the printers. Is that right?
Yeah, so we go through a thorough fact-checking and sign-off process prior to, authorising the printing of the books. Through that process, certainly some changes are made at the last minute, but obviously we try and bed down the substance of the documents in advance of that, because obviously that creates greater risk for error if we're making substantial changes towards the very end.
And there's a difference, I think there's a difference between changes in text and changes in the tables.
That's right.
Yeah,
So-
because some of them are linked, aren't they?
Absolutely.
Where they appear in BP1 and other books of the yeah. Okay. All right. Where was I? Okay, I've solved the mystery of the missing table. I'm happy with that. I put my hand up to being one of the people that liked it a lot. So I'm happy to hear it's returning, hopefully. The question, can I ask a question about the error that's been made about the measure relating to the PBS? So obviously Fiscal Group must have costed the measure that was spoken about in the House but not featured in the budget.
So Department of Finance are responsible for those costings.
So you don't do that at all?
So
The PBS one, the scripts?
no,
You know,
that's a Department of Finance costing. I'm almost certain, Minister.
I would have thought so as well, that essentially revenue measures are costed by Treasury and payments measures are costed by Finance.
Okay.
Yeah.
I would have thought you would have had some role in that one.
You're talking the lowering the safety net threshold measure.
Well, I'm trying to get
That's
to the
at
bottom
page
of.
105
Well, there's
of
two.
BP2.
There's really two measures. One that featured in the budget and one that didn't, isn't there? Like the
There's
one.
thousands of things that don't feature in the
No,
budget,
but
Senator.
well, the one that makes this one slightly different is this one featured in a speech given by the Assistant Treasurer, and then also featured in a speech given by Senator Hume. So it must have had more of a life in the budget than others that were perhaps dropped earlier, because there'd been a speech written about what the government was doing, cutting general patient category from $10 for all scripts. And that didn't feature in the budget. But you're saying Treasury doesn't cost that at all?
So responsibility for costing that is that would be, it's the Department of Health works with Finance to cost those to cost measures, most measures in the health portfolio, unless they've got a particular revenue link. And then if it's a minor revenue link, Treasury gets involved. If it's something which is a revenue item, then Treasury is responsible for costing those.
Okay. Well, we've let them go, unfortunately. All right, well, I'll have to ask them questions next time, hopefully. Not from this side of the table. Okay, all right. So what measures do you get involved in then, Ms Wilkinson?
So when you say involved,
Yeah, like, or,
so we
like, do you have oversight? I mean, presumably you have some, when there's a fiscal impact of something, you know, a decision taken, does your group...
In the full
Be
contestability
informed?
of decision making, we let Treasury have well and truly have an opinion in what they brief the Treasurer on and how they engage in the process. But there's those clear delineations of responsibility when it comes to things like, you know, who's responsible for costings, which agency drives that to a point of finalisation, because otherwise you don't want contestability over the facts and the documents actually as published, but contestability in the decision-making process is something, of course, that all agencies involve in where it's relevant.
Yeah, so, Ms Wilkinson, you would have line of sight on all of the things in budget paper 2, would you, at some point, even if you don't have overall costing responsibility for it?
Yes, I mean, these measures all come through decision-making processes, predominantly the Expenditure Review Committee, and I attend all Expenditure Review Committee meetings, and so therefore have visibility around decisions that are taken by government, but also more broadly, obviously, my team, along with other parts of Treasury, brief the Treasurer ahead of those meetings, and so
I feel like I'm in deja vu, like we have spoken about this before, I feel like, but I'm just going to keep going. So say if we look at the investing in skills development and growing the workforce measure, it's on page 76, I've just randomly chosen this one.
Yep.
It has a Services Australia component, an education skills component, so that would be would that be led by those two agencies?
That one would. So the policy will be led by the Department of Education, Skills and Employment. They'll lead the policy. They will be responsible for working with finance around the cost. When that's being determined, there will be discussions with Services Australia, who would be the delivery agency, and then if there are revenue implications for whatever reason, then we get involved through Revenue Group, through our tax analysis division.
Okay. And so where there's the cost of living package that was announced in the budget. Let me go to my handy overview here. The cost of living tax offset, the cost of living payment, and the temporary fuel excise relief in particular. How would Treasury have led on that work, and would that have crossed your area and revenue, or mainly revenue?
So,
although there's payments there too, aren't there?
That's right. So the temporary reduction in fuel excise is led out of Revenue Group.
Yeah.
With the costing being the responsibility of Revenue Group. The additional payment through the lower and middle income tax offset is a Revenue Group item, and so that's the responsibility of Revenue Group, and again the costing is the responsibility of Revenue Group. And then the one-off payment to individuals is a DSS measure, so that work is led out of the Department of Social Services, with costings from Services Australia. But I think that one is one where there is a revenue component to that. So our Revenue Group team get involved in the revenue impacts of that additional payment.
Yeah. Okay. And so in terms of the work that you do in the budget, what's the biggest part of it from your group's point of view?
So...
how long is a piece of string? Yeah.
So, I mean, if you like, so through Budget Policy Division, we have responsibility for bringing together the whole budget. So we're responsible for the material in the... So if you like, bringing together all of the material in the white books, the glossies, we are responsible, we're the key part of Treasury that's responsible for coordinating the advice to the Treasurer ahead of decision-making meetings. We obviously work very closely with our colleagues in Macroeconomic Group and in Revenue Group around the different chapters which are actually in particularly Budget Paper 1. So there are some chapters where we literally hold the pen. So, for example, we hold the pen on, I think it's Budget Statement 3. Macroeconomic Group holds the pen on Budget Statement 2. Revenue Group on Budget Statement 4. But we We manage the whole process of pulling that together. And one of the critical things that we manage is the QA process around all of these documents.
Okay.
Is that?
Yep.
Yep.
Okay. I think that's, I don't know if, Chiz, if you have any others.
Sorry, before we go to Senator Chisholm, Senator McDonald? No?
Thank
Senator
you.
Bragg? No. Senator Chisholm? Do you have
No,
any more
we
questions?
didn't. No.
Okay, so I think that's all we have for fiscal group then.
Thank you.
Thank you. So we'll now move to Revenue Group, Australian Taxation Office and Australian Charities and Not-for-Profit Commission. You do, okay.
That's right. Thank you.
They say what writing records are completely filed. Sure. And yeah, or 20 minutes. So my lawyers say that they've. Is that all? We're 20 minutes ahead, Chair, so they might take a few minutes.
That's all right.
To get themselves together.
Yep.
They've got some issues, I think, with soliciting donations, which is in effect carrying on a corporate activity. So
Andrew, you might just check if Markets Group will be available to come on earlier.
How do you mean? So Revenue Group are on their way, but we do have ATO here now, so we can get the stuff there if you like. Oh, we're doing the we're not doing that. It's up to you how you want to play it.
Yeah, okay. I think, so Senator Chisholm, we've got ATO here now. Revenue Group are on their way, so if you've got questions for ATO, we could kick off now. If you're happy with that? Or you've got... Well, sorry, I'll ask...
Have we got charities as well? No, they're not here yet.
So if we could follow up the ACNC as well. Do you have any questions for the ATO first?
It's useful to have revenue there, just,
At the same time.
No, I
you know,
appreciate
to
that.
tic-tac.
I appreciate
Maybe,
Senator Bragg, do you want to ask your
start,
questions to the
we'll see if
ATO
revenue
first?
come.
Tax? The ATO?
Yep.
Yeah, great. Good morning. I was just wondering what sort of input you might be providing to the Board of Tax on their new inquiry into all the digital asset taxation issues.
Yes, thank you, Senator. Jeremy Hirschhorn, Acting Commissioner of Taxation. And I'm not sure if I've been joined yet by my colleague Kirsten Fish, who's Second Commissioner responsible for law, who is responsible for that relationship with the Board of Tax. But we will, we ordinarily contribute to reviews of the Board of Tax, as the Commissioner is an ex officio member of the Board of Tax. We will provide resources, both secretarial and also where we're asked for perspectives on how the law currently applies. We will of course provide that, as we have, Senator, to the specific committees on that topic.
Okay. So does the Board of Tax make a judgment independent of the Commission?
Yes,
Sorry,
Senator. Yes, Senator.
of the
So the Board of Tax is its own organisation, under the leadership of Rasheen Garnan.
Yeah.
Treasury and the Tax Office are both on the committee of the Board of Tax, but is mostly made up of private sector individuals. Its reports are made in its own right, and
Yeah, okay. So
hopefully,
they are
hopefully
asking
usually usually the ATO it has a contribution. Hopefully, its input is respected, but they are reports of the Board of Tax.
Okay, so they'll publish their own report.
Yes.
And what sort of information do you think that they would ask you for? Would it be taxpayer data or aggregated data, or is it more? Would you do research for them? I'm just interested in what sort of input you would be providing to the board.
Yes, so Senator, we will provide the input that they request. That could easily include some population data at an aggregate level. Obviously, we can't provide specific taxpayer data. So we will provide them the information that we have to help them do the most effective report that they can.
Okay. Have they asked you for information yet?
Senator, I'd have to take that on notice. Or
can you?
Maybe, I'm not sure if Second Commissioner Law, Kirsten Fish, has arrived. Maybe if we can take that on notice and maybe come back to you if we can get that during the session.
Thanks, Mr. Hirschman.
We still don't have... Oh, we do have representatives of Revenue here now from...
Not yet, Senator.
Not yet. Okay. Senator McDonald, do you have some questions just for the ATO, I think?
I do, thank you. Good morning. I wanted to ask you some questions on the draft guidance products impacting trusts that's been released. Now, as you know, accountants are usually mild-mannered people who are not up for fisticuffs, but I'm receiving a huge amount of concern from them about the way the ATO is going about addressing Section 100A, and in particular, I guess there are three elements that I'd like to talk to you about. The first is that this is a review of a long-standing tax treatment, that the ATO is proposing to go back and review returns as early as 2015, which would make it fundamentally retrospective, and we know how much Australians hate retrospective regulation and legislation, which I quite support that view. And the final part is that they're telling tax agents who've provided tax advice on this structure that they could now be classified as a promoter of a scheme and lose their licence. So I just want to understand, why is it that the tax department now feels that they can take on a legislative role, something that hasn't passed Parliament, I assume hasn't been directed, and to move towards this position? Could you speak to that for me, please?
Thank you, Senator. So 100A is a provision, by way of a little context, is a provision which is aimed at ensuring that the taxation of trust distributions follows this concept of what is present entitlement. So if you're entitled to a distribution, you should be taxed on that distribution. Mm-hmm. There is a lot of case law wrapped up in that concept, but at its heart is if you receive an amount from a trust, you should be taxed on that amount from the trust. 100A is a very long-standing provision which is aimed at what happens if the trust says it gives it to one person and then that person, under an arrangement, gives it to somebody else. So really the money has gone to a third party, but in the paperwork it has gone to one beneficiary, but that beneficiary is under an agreement to give it to somebody else for tax purposes. And so it's often used where there is somebody who is in a tax advantaged position. So that might be somebody who earns no income from other sources. It might be another entity, a company or a trust with losses. It's really aimed at what's called this concept of reimbursement agreement. And Senator, I would say at the start, yes, absolutely, we are very aware that our guidance, which has been long requested by the tax advisor community, has unsettled some in that community because it does call into question some practices which have been relatively long-standing. The first thing I would say is that the Tax Office does not make law. We have not changed Section 100A. 100A remains as it always has been. We can, however, in our guidance give our opinions on how the law applies, which of course can always be tested by the courts. So I would say we have not changed the law at all. What we have done is publish at this stage draft guidance for consultation as to how we think the law applies. And that has been something that has been requested by the community for a long time. So I would say at that first level, it is not retrospective in that true sense of law, a different law applying to somebody in the past. The second...
No, but it would if you were to go back and review tax returns based on a new guidance.
Well, so Senator, I would say that, so if I can maybe come to the guidance point, I'd say the law, 100A is a very interesting provision. It's one of the rare provisions in the Tax Act which says that there is no limitation of period of review, which is a factor which is in this debate. I would say the second point is, and this comes up sometimes in what's called a U-turn, where the ATO changes its administrative practice or guidance, and people say, but I relied on your old guidance. I'm disadvantaged now because you have changed your guidance. And in our draft, and again, I'd say this is all out there as draft for consultation at the moment. And we are getting full and frank feedback. But what we are saying, so we gave our last significant guidance that we finalised on 100A came out in 2014. And what we are saying is that for people who relied on that 2014 guidance, they can continue to rely on that 2014 guidance up till now. So that, say for example, if we said to somebody, under this current guidance, you did something in 2016, which we think triggers 100A, but under our guidance in 2014 would not have triggered 100A, we will not be pursuing that matter. We are standing by our 2014 guidance for affairs in the intervening period. So we have, I think that's an important point which has sometimes been lost in some of the discussion, which is that we stand by our 2014 guidance for the interim period till now as we bring out this new guidance. I might comment on one other point which I think our drafting, particularly in our taxpayer alert, was perhaps indelicate and has, I suppose, upset or caused a lot of people to worry, which was the comment that you made, Senator, about promoter penalties and on advisors who advise people into transactions. We would say, yes, there is the possibility that some people who have marketed aggressive 100A style schemes could potentially be within the promoter penalties, but that is going to be a very small subset because there are many safeguards before promoter penalties apply. Can I say, including periods of review, but also that if you have just provided advice, advisory services are not subject to the promoter penalty provisions. It's really where you've been earning commissions and success fees that you're within the promoter penalties. If your position is reasonably arguable, so it's not just that to get into the promoter penalties, you don't just have to be wrong, but you have to be so wrong that you're not reasonably arguable. So I mention that because I think there is a fear in the tax advisor community, or some elements of the tax advisor community, that this represents that there's going to be some massive swathe of old 100A assessments, also some sort of potentially swathe of promoter penalties. That is not what we are anticipating.
All right, so if I can clarify then that you will make it clear in your final draft that you won't pursue taxpayers who've relied on the 2014 guidance.
That is
so
correct,
this won't
Senator.
have a retrospective element.
That is correct, Senator. We stand by our 2014 guidance for this interim period.
All right, and then also to be clear that advisors who have provided ordinary advice in the course of their business is not considered to be a promoter. And could you just put those into words for me again so that we can provide some clarity?
So that is correct, Senator. So ordinary advice services for an advisory fee are not subject to the promoter penalty provisions.
Okay. So finally, Chair, I'm getting the most, I'm getting concern broadly from the industry, but also from regional people who, where family trusts particularly operate in farming situations and, where I guess you have all members of a family. Perhaps it's a small business issue more than it's a reasonable issue, regional issue. Is that something that you are contemplating? Because it seems to me that the guidance proposes tighter rules for distributions along with the definition of what is considered an ordinary family or commercial dealing. So is there an element that you're looking at tax reduction, but that you might start capturing, just what is prudent tax planning arrangements?
So Senator, certainly our intention is not to capture prudent ordinary tax planning transactions. I think at a touchstone of our position on around 100A is that if the beneficiary of the trust gets the benefit, 100A has no role to play. What we are concerned, so we're not concerned about ordinary family trusts where the family benefits from the distributions. We are concerned about situations where the family trust is used and, let's say, paperwork is drafted. So, for example, that the parents keep all the money from the trust but benefit from the tax-free thresholds of their children. If the children actually get the money, we have no concerns under 100A. So I would say if there's an absolute touchstone, which is if the beneficiary of the trust benefits, 100A has no role to play.
All right, and the guidance is open for consultation till the 8th of April?
Senator, I think that has now been extended until the 29th of April.
29th of April, terrific. So anybody who's listening to this who hasn't had an opportunity to provide feedback should certainly make that.
Absolutely, Senator, and we consider absolutely seriously all feedback that we receive on all our guidance, but on this guidance as well.
Yeah. All right. Well, I appreciate you clarifying that. I'm just remain concerned that the targets of your efforts will find another place to sit. That genuine, small business and family trusts are going to be captured in a way that is unreasonable.
No, so Senator, I absolutely understand your concern and hear your concern. I would also say I think we are in a phase where there are a lot of people worried about the guidance, maybe not understanding exactly what's in the guidance and our proposed approach, and hopefully over the next while and following the consultation period as we finalise the advice, we'll be able to actually alleviate many unfounded fears.
Thank you, Chair.
Thank you, Senator McDonald. Senator Patrick.
Thank you very much, and thank you to Labor for doing that. Mr Hirschhorn, you've been made Commissioner. I thought my compliments to you were detrimental to your career advancement.
Acting Commissioner.
Okay.
Senator?
I'd like to go to question SQ. Actually, I don't know what the question number is. There's a spoken question of BET 075. This is relating to tax enforcement or people who haven't lodged tax returns for a significant period of time.
So this is around
child support.
Child support. Okay.
And just generally around tax lodgement.
Yep. Yes.
You're the
Senator. So probably if you direct the questions to me, Senator, and
okay.
I will.
Fantastic.
Distribute them.
You've provided a table to the committee of people who are up to date with tax lodgements, then separated it out to child support customers, and then you've got a third table, child support clients who are referred by Services Australia. Does that imply that Services Australia pick out some of their child support clients and request the tax office do something?
Yes. So, Senator, I might do a short answer, and then this topic will go mostly to my colleague Melinda Smith, who's Chief Service Delivery Officer. Yes, so Senator, Services Australia do give us a list of mutual clients of people that they would like us to follow up because it interacts with the child support system. I think in the past there was a specific funding for that and a service level agreement which expired, but we still continue that program on an unfunded basis. But I might pass over to my colleague Melinda Smith.
Thanks, Commissioner Hirschhorn. Melinda Smith, Chief Service Delivery Officer. I don't really have anything further to add to Commissioner Hirschhorn's overview there, unless there's any particular question regarding it.
Okay, so that was helpful in terms of the distinction as to what is on the table. But if I look here, it says that just for general people, all individuals, excluding child support customers, there are 11,201,000 people who are up to date with tax lodgements, and that represents 59% of taxpayers. So it seems when you flick that around, it's 40% of taxpayers are not lodging their tax returns on time. Now, I get it, some people can't, but then I go to year two, again, 7 million people, 40% are not lodging their tax returns on time. And that seems to me to be a pretty significant problem in the context of, in some cases, I guess there's money owed to the public, and there's also potentially money owed to the taxpayer. Why is it that you, on these numbers, don't seem to be enforcing a legal requirement to lodge a tax return?
So, Senator, I might make a first comment. Unfortunately, I don't have that answer in front of me. I'm not sure if my colleague does. I suspect that includes a lot of people who are not actually required to lodge. But absolutely, you're correct that most of the taxpayers who do not lodge is because they're probably due a small refund. We do have a very significant program under our Chief Service Delivery Officer to remind people to lodge. That does focus, as we are a compliance agency, it probably does focus more on those who we suspect have tax bills, but we do prompt a lot of lodgements which do result in refunds. I might pass over again to Melinda Smith.
Thanks, Commissioner Hirschhorn. That's correct. I mean, not 100% of our taxpayers are required to lodge. I think that percentage is closer to 65% actually, and that's why when you actually look at those numbers, you have to take into account that not all those entities have an outstanding lodgement that is actually due to be made.
Well, the name of the title says, of the column, or row, is number who are up to date with income tax lodgements. I presume that would not include people that don't require to lodge a tax return.
So in fairness, I would like to take that question on notice and make sure that we're giving you exactly the detail on the table, but we would not know until pursuing that with the client whether or not they were or were not eligible to lodge. So it would be unlikely for us to be able to identify exactly that population discreetly. Okay, so if I go to 6 to 10 years without lodging a tax return, I've got 1.5 million taxpayers, or 1.5 million people. I mean, that just seems extraordinary. Is there any reason why we have 1.5 million people who have not lodged a tax return for more than 6 to 10 years?
So, Senator, again, I think we'll have to take some of that on notice. We'll do our best to get an answer rapidly. I think, again, we have a self-assessment system which includes self-assessing that you are not required to lodge. And so, we do have, that...
Well, to all those people out in real world, they'll be listening to this going, that's okay, I'll just make the assessment that I'm not required to lodge, and in actual fact, I'll join the 1.5 million people who, for 10 years, haven't lodged a tax return.
So, Senator, I would describe that as very unwise counsel,
sure,
a very unwise path of action, because...
I was poking the bear.
Yes. Now, the important thing here is that, of course, we have the data from things like STP, pretty much all salary income in Australia, from the banks of all interest and dividend income. We know when people have earned money. The unlodged returns are likely to people that we have no record that they have earned money. But we know where money is earned in the system.
All right, so can we maybe go back and revisit this answer? STP's been running for how long?
Sorry, Senator, I've got 3 years.
3 years. So we should be able to at least understand out to the 3-year mark. So can you provide the same statistics, those who have and haven't lodged, in circumstances where you have access to STP, if you wouldn't mind?
We'll take that on notice and do our best.
Now, in relation to the lodgement enforcement program, how much funding did you receive from child support to, if you like, focus on child support clients who were not lodging tax returns?
Yes. So I might pass over to my colleague.
Thanks, Commissioner Hirschhorn. I don't have the number, the absolute number that was given to us prior, except to say we have continued, even without that funding, to work with Services Australia on the populations that they advise us, and we have actually dedicated a special lodgement program specifically to that population. So regardless of the funding, it has been something that we've continued to pursue. I can find out for you, I take on notice when the funding ceased and how much it was, but it doesn't have any relevance to the work that we're doing in conjunction with Services Australia now.
Sure. So does that fund a particular FTE? And if so, can you provide that information for me, please?
Well, nothing's funded, as you highlighted.
Sorry, previously.
Yes. So I think, Senator, we can provide to you details of the previous funding and the size of the program, and indeed how many FTE we continue to dedicate to this program.
And why is it no longer being funded? Because you no longer have a requirement for the funding, or because child support don't want to give you the money?
I think, Senator, we would of course appreciate the funding, but it's one of those, I suppose, within government issues.
Okay. All right. Now, just again focusing on that, if I just look to the numbers there, we've got about, it said 45,807 members who are up to date with income tax lodgements, and then you've got the number 20% underneath that. So that implies there's about 80, perhaps 80,000. Sorry, I've done the numbers wrong there. 160,000 people who have not lodged their tax returns in that group of child support payees for 1 year. Am I reading that correctly?
Senator, if I may take that question on notice, because I don't have the table sitting in front of me, I apologise. And I can take those questions specifically.
Can someone get that? Because it's not unreasonable for me to follow up on a question on notice, and there is an obligation for officials to be cognisant of what questions might likely be asked. So I wonder if you could, I don't mind if we go back to perhaps Labor or something, and then we come back to you and you get access to this question so we can answer questions properly.
So, Senator, I now have the table in front of me, thanks to my colleague, and your interpretation of that table is correct.
So about 100...
Of the 230-odd thousand referred to us in 2021, by the date of the Quan, so to 22 June 2021, only 20% were fully up to date at that point. Of course, we hope that more will become up to date over time.
Sure, and you've got you then move to 2 years of 80%, but still quite a big number of people. There's 40,000 people after 2 years that have not lodged their tax return, and they have a child support application. And let me just explain to you why I'm really concerned about this. So, in some sense, I don't mind the ebb and flow of the tax office not receiving or not refunding money, but in the case of child support, the child support formula, that is the amount of money a caring parent gets for caring for the child, is a function of a formula that includes the taxable income of both parents and care percentages and the number of kids. If I want to not pay the right amount of tax child support to the mother of my children, I simply don't lodge a tax return when I get a pay rise. As I jump to a new job, I might get a 20% pay rise by changing to a job or getting a promotion. Then I don't lodge a tax return, and it shows me there are 53,000 parents. I can comfortably say father, because other statistics say there's 90% of the payees in child support are male, that are not paying the right amount of child support, and that is harmful to the children.
Yes, so Senator, I can only say that we absolutely understand your concern. We share your concern in conjunction with our colleagues at Services Australia, and we do dedicate resources. The challenge, the steps when somebody, can I say, we have a dedicated program for this, specifically for this. These are clients that would not ordinarily trigger our, it's the most important risks to follow up. Mm. We do have a dedicated program for it because it is so important. I would also, I would say that when somebody simply refuses to lodge, we cannot, write that, we can do a default return.
Isn't there a penalty under law? Isn't there a penalty under law?
Yes, so we absolutely can prosecute, and so we do prosecute people for failure to lodge. That is so there are a range of consequences. It's fair to say like with all compliance programs, prosecution is a pretty important step, and we save it for the worst, not for everybody who doesn't lodge. But I do share your concern, Senator, and we do take it seriously.
I mean, if I look at this table, 6 to 10 years of outstanding tax return information, 53,937 child support clients. So that's 53,000. Let's presume they have one child, maybe two. If they've got two children, that's 100,000 kids that are not getting the right amount of child support. And it's my understanding, and I'll confirm this, but I have it on pretty good authority, that if you ride this out until the child is 18, under current law, the Child Support Agency has no ability to go back and recover a debt outside of the child support arrangements. It's just a game that's being played by irresponsible parents, either fathers or mothers, and it seems to me that people are just sitting on their hands and allowing children to not receive the right amount of care because they're not being given, the caring parent is not given the right amount of child support.
Yes, so Senator, I can assure you we are not sitting on our hands. We have a significant program of work here, but you are absolutely correct in that we do not have 100% coverage and take 100% of these clients to prosecution action or further steps.
Can that be done? I mean, by the time you get to a couple of years without lodging a tax return as a payee, or indeed, particularly when you're getting to 6 to 10 years, if someone's had a break-up, the child's 5, by the time you're getting to some of these numbers, they're close to getting outside that window where that money will never go back to the parent. But perhaps more importantly, the child along the way has suffered because of it. Can you perhaps provide on notice the policy guidelines you have in relation to dealing with child support clients, particularly towards those latter ends, and indeed how that intersects with prosecution policies?
Yes, so Senator, we will absolutely on notice. We will give you our current settings and coverage in this population.
Thank you. And I just final question to the minister, because the assisting tax commissioners did say, acting tax commissioner did say, it's an issue between the two departments, the tax office, which is Treasury, and Child Support, which I think is
Social Services.
Senator Ruston. Are you aware of this issue where Child Support want this dealt with, but are not paying or not paying for the service within the tax office?
Senator Patrick, I'm not personally aware of the views that Child Support Agency may have, but I'm very happy to commit to raising that with Senator Ruston and indeed with the Treasurer or Assistant Treasurers is relevant to ensure that there is appropriate understanding of concerns if they existed from one agency in terms of how the ATO's important work and role can help to improve the outcomes wherever possible that CSA would wish to see and that we would all wish to see.
Thank you. And just one final question, if I may, relating to what I call the Lend-Lease ruling. You call something else. Can someone give me an update on where we're at with that?
I might pass to Second Commissioner Kirsten Fish if she's on the...
I am, yep.
Excellent.
Hi, Second Commissioner Kirsten Fish. Senator, as I said last time in February, we had recently received further legal advice. We're continuing to engage with our legal advisors on the issues, the subject of the draft determination. I said last time that we spoke, we were looking toward finalising resolution of issues by the middle of the year, and we're still working toward that. Our advice under development program reflects that mid-year date.
Because I did have a commitment from the tax office, I think it was last year, maybe 2 or 3 estimates ago, that this was going to be dealt with. And I do appreciate the hint you gave that you can pursue Lend-Lease separately to the ruling. I understand that, but nonetheless you have a ruling that's outstanding. Have you been engaging external counsel in relation to this particular determination?
We have, yes.
Okay, can you provide me the cost on notice for the legal costs associated from start to finish, or start to almost finished, with this particular ruling, please?
Yes, I can do that, Senator.
Thank you.
Thank you, Senator Patrick. Who's seeking the call?
Yep.
Senator Chisholm.
Thanks, Chair. I've got a sort of few questions across a range of issues. The first one was around the digital games tax offset. So on 21 March this year, a joint release from the Treasurer, the Minister for Communications and Arts and the Minister for Digital Economy announced the release of the draft legislation to implement a new digital games tax offset. The consultation is now open and closes in a couple of weeks. Why did it take so long to release this package for consultation when it was first announced in the budget last year?
Paul McGrath, First Assistant Secretary, Individuals and Indirect Tax Division. Senator, I have trouble with the so long. These things take a while. There was consultation. I've got a series of dates here about how the process was dealt with. But I think that's just normal course for a tax measure. Many tax measures, as you would well know, from inception to becoming legislation can take a year.
Okay, so it's just reasonably complex to put together, is that?
Yes, and there was consultation with several, well, not only the industry, but the other departments. Consultation processes have been fairly exhaustive internally as well as the public consultation that you've referred to.
Okay. On 12th of May 2021, Austrade Investor Update entitled Game On with New Tax Rebate for Developers states the digital games tax offset will be available from 1 July 2022. Will this legislation pass before 1 July 2022 in time for when the scheme is meant to be available?
Well, I can't help with when the legislation will pass, Senator, but the measure is at present supposed to take effect from 1 July. So if the legislation passed subsequently, it would effectively have a 1 July start date, 1 July 2022 start date.
But what certainty does that provide for let's be honest, it seems very, very, very unlikely that it will pass before 1 July 2022. I think that's a fair conclusion, isn't it?
Well, I mean, Senator, to shortcut, yes, there is a chance the Parliament will sit again before then, but the timing for the passage of legislation will be tight, and so if it does sit before then, there will be a limited number of bills. I can't predict what those bills would be. In terms of the certainty equation, as Mr McCulloch said, the start date for the provisions applies in that sense regardless of when the legislation passes, so long as it does pass, and certainty for those relying on that legislation is best provided if there is ultimately a bipartisan commitment around the legislation.
And Senator, perhaps if I can just add the mechanics of the way this one works is it's a refundable tax offset at the end of the year. So it's not like one of these measures where you absolutely have to have it in place prior, because it's one of these ones that operates on assessment. So you'll still get the benefit if you do something during that year.
But the companies themselves, there would be an element of risk for those companies knowing that the legislation hasn't passed and is unlikely to pass before 1 July.
Absolutely, Senator. Whenever announcements are made and the legislation is yet to pass through the Parliament, a company would be taking a risk to act on even the draft legislation. That could always change as it goes through Parliament.
According to the draft explanatory memorandum, the amount of the offset is capped at $20 million per company per income year, even if the company applied for multiple certificates in the income year. Why is there a $20 million cap?
The cap itself has its origin in being an integrity measure. The setting of the cap, of course, the degree is a matter that government takes into account when looking at the costings and considering advice. As I understand it, a number of submissions have been received or are in course of being received to question whether that cap is exactly the right amount or whether it should be altered. And of course, as typically happens with these sort of consultation processes, when people come back with suggestions that the parameters be changed, then that package of advice is put to government for further decisions.
Okay. So the cap doesn't exist for film and TV offsets, for example, and puts a ceiling on investment for games. What's the rationale for the cap in relation to games?
I think from memory, and I certainly can take a supplementary on notice, but as I understand it, there was a concern in this circumstance that unlike films, there was a much greater likelihood of potential connection with international companies. And as soon as you do that, it's possible to have a much larger number in our jurisdiction created. I don't want to use the word artificially, but it is possible for a subsidiary of a very, very large company in a worldwide market to benefit from an Australian tax measure and find that benefit doesn't necessarily stay with the Australian subsidiary. So again, it was an integrity measure that was considered at the time it was designed to be relevant and important in this measure, but not necessarily the other measure.
Okay. why is it mainly just direct labour that is eligible for expenditure?
Why is it mainly? I have to think about that one, Senator. It's that the whole measure seems to be designed to promote that type of activity, that type of employment in Australia. So it is definitely targeted at the wage component. But I apologise, I just don't have with me or in my head the question of why, and indeed if it does cover other things.
Okay. Under the draft DGTO, related party expenditure is prohibited. Does this mean that indie studios whose owners also work on their own games won't be able to claim a minimum wage salary?
Again, that's a matter I understand that's come forward in the consultation. You can understand why related party costs in tax measures are often excluded. There would be a question of, if I can characterise it, a small operation where a person might choose to take their interest in either salary or perhaps directors' fees or profits, etc. And that's certainly an issue that would have to be looked at.
Okay. I suppose my concern about it is that wouldn't this have a big impact on the number of Australian studios that could benefit from the offset? If that applies, wouldn't it rule out a lot of the Australian studios who could potentially benefit?
Well, yes, Senator, but also there's a minimum $500,000 spend. So this, if you like, is targeted at a sweet spot where you can't just be a tiny little operation. It's got to be something that is going to have some other benefit for the economy, but not too large so as to enter the international market. But as I said, if those questions come up in consultation, and as I understand they will, issues will be put back to government for further consideration.
Okay. Live services studios are allowed to make annual claims, but new game studios aren't. They can only make a claim upon completion of a project. Why is that so?
Again, Senator, I apologise. I'll just have to take that one on notice. I don't have that in my head.
Okay. So that obviously disadvantages studios making new games, though. That would be fair?
I'm not trying to dodge the question, Senator, but all of the design issues are there for a reason. Now, sometimes the reason on consultation may not prove to hold absolutely true, and that's the reason why typically we do consultation on tax measures in such detail. But there would have been a reason, it's just I cannot recall it at the moment.
Okay. Is the GTTO one of the most generous tax concessions to the games industry in the world?
Again, I'll have to take that on notice. It is certainly a very generous scheme, but whether it's one of the most generous in the world, I'm not sure.
Okay. Is the department aware of any comparative information that would back that up?
I will take that on notice.
Okay. So not something you're aware of?
No.
That you've done any work on?
No.
Okay. And is it still one of the most generous with the $20 million cap?
Again, I'll have to take that on notice. There are many designs with these sort of schemes around the world, and to generalise about them. And the other issue is they apply to tax systems that are quite different to ours in some cases.
Yeah. Have any of those countries applied an annual cap to their games tax offsets, credits or rebates?
I'll have to take that on notice if we're talking about other countries.
Particularly the UK, Canada, Finland or New Zealand, have they?
I will take that on notice, Senator.
Okay. I've also got some questions on company tax, probably to the ATO, I suspect maybe revenue as well. This is looking at the Tax Avoidance Task Force. So the $0.6 billion in that bump on company tax receipts since MyEFO is due to the new measures, mostly the extension of the Tax Avoidance Task Force. Does that simply reflect the ongoing impact of the task force established activities, or will that incorporate changes to policies or settings?
Yes, so Senator, as you rightly point out, the ATO has been funded to extend the Tax Avoidance Task Force for another 2 years. From our perspective, a very successful program, and good that it is extended. As I understand it, that both the costings and the revenue are primarily due to the continued operation of the task force.
Okay. And what proportion of the other $1.5 billion comes from each of the other entities the task force targets? Large public and private groups, trusts, high wealth individuals?
Yes, Senator, if you just give me 1 second, I can give you a rough split. But from the task force to date, where we have raised, so the task force has been going since 2016. Since then, we have raised direct cash, so I might talk about 3 concepts: liabilities, cash, and wider revenue effects. So since then, we attribute to the task force $15 billion of liabilities and $8 billion of cash receipts over that period. That is slightly more than half of that. So about $8 billion was public and multinational businesses, and about $7 billion from private and wealthy groups, which includes trusts of the 15, and so it's a similar ratio. So it's a slightly more than half public and multinational groups, and slightly less than half in relation to private and wealthy groups.
Okay. And of the $0.6 billion that is coming from the task force avoidance activity around company tax payments, can you give a breakdown in rough proportions of what the behaviour is, thin capitalisation, royalty payments, related party transactions, other profit shifting activities?
Yes, Senator. So we don't necessarily cut it that way, but I would say that our significant challenge, which we've spoken about, I suppose, many times at estimates, is in public and multinational businesses. It's primarily around transfer pricing, or as we would say, transfer pricing is completely fine. What we're worried about is transfer mispricing. And within that, the biggest element of transfer mispricing in an economy like Australia's was around related party debt. The second biggest element was around exporting of Australian commodities and the mispricing of commodities to trading hubs. They're probably the 2 biggest components for public and multinational businesses. Private and wealthy groups, the issues are much more spread. Like it's harder to really call out specific sort of themes to the same extent.
Okay. On the Tax Avoidance Task Force, will that extended funding involve new work programs, recruitment of new skills, new tools or policy settings, or just business as usual but for longer?
Yes, so Senator, the funding has been committed. Within that, we have scope. We continually refine the effectiveness of the task force. It will give us the ability to bring in new skills. It will bring, we get to leverage from the hard work we've done to date on things like increasing our data analytics capability. We do also get to leverage from the fact that we have done significant work around improving the tax governance of the largest companies, so that many companies are now fundamentally in a highly compliant state and require maintenance rather than the full intensity of the task force. So we are hoping to, even though the funding is relatively flat, we are absolutely expecting that we will be able to do new things with that funding.
Okay. And why 2 years? Is that what happens after the 2 years? Will it be a case that you've you're well set up enough then that you can just sort of set and forget and it will operate, or is it something that will have to be extended after 2 years?
So, Senator, I do not. We have spoken before about the performance of large corporates, which is that at lodgement they're about 92%, after our compliance activity at about 96%. We've spoken before about our ambition to move that to 96% at lodgement and 98% after compliance activity. So we think there is still more to do. The announcement, I do not think the job will be done in 2 years, but how long we are funded for and really the rigour of us having to come back and demonstrate our case, I suppose that is part of a matter for government and their decisions.
Okay.
But I don't think the job will be done in 2 years' time.
Yeah.
But I would say to this committee that we have made extraordinary progress over the life of the task force to date and continue to make further progress over the next 2 years.
So, Senator, it's not, from my memory, the first extension in relation to the work of the task force. I mean, the nature of having a dedicated focus like this is on being able to monitor progress, learn from what is being achieved, and then, of course, to ensure that that's refined in the future. But any opportunity we can see to be able to continue to invest in the ATO in ways like this that yield a fairer dividend for Australian taxpayers doing the right thing by targeting those who might be seeking to unfairly minimise is what we will do. Of course, works ultimately in the medium to longer term alongside some of the issues that were being explored in relation to international tax cooperation through the OECD measures that we again are actively working to implement at the Australian end, but more importantly working to ensure other countries implement too.
I was just about to ask a question about that, Minister. So will the Tax Avoidance Task Force have a role to play in the implementation and administration of the Pillar 1 and Pillar 2 approaches?
Senator, at the moment, the Pillar 1 and Pillar 2 approaches, I think, are not in the budget forecasts. But if I look back at history, the first phase of the task force was responsible for successful implementation of the multinational anti-avoidance law and the diverted profits tax, and which were, in a sense, an earlier wave of very pragmatic Australian implementation of the BEPS 1.0 work streams. I would fully expect that the task force will be there to support the developments on Pillar 1 and Pillar 2 under the BEPS 2.0 work stream.
Okay. Just on the highest risks for profit shifting, is it typically out of one industry, or is that mix changing?
So, Senator, I would not describe it. I would not describe it as industry-based. So, as I said before, related party financing has been our biggest challenge around transfer mispricing, and one that we've been very successful in addressing. I gave testimony at the last appearance that, we denied approximately $14 billion of interest deductions on related party debt over the life of the task force, and predicted a further $26 billion of interest deductions will never be claimed as a result of our forward agreements. That issue is spread against anywhere where there is significant capital investment in Australia, whether that's new investment or M&A activity. But as you can imagine, say for example, over the last, we have a case on the public record, Chevron. That was a very significant transfer mispricing case in relation to related party debt. But in a sense, it's not because it's oil and gas, it's because gas companies were investing a lot of money in Australia. Obviously, in relation to the export of commodities, that's linked to our commodity industries, but that's both hard and soft commodities. We look at transfer mispricing around those. But I wouldn't say that it's specific industries that leap out. in a sense, we're a very open economy. You know, we have a lot of imports, a lot of exports. We're open to capital, which means that, you know, we look at the major flows in whatever industry they come from.
Okay. What about the booming commodity prices? Is that a factor that makes you look a bit more closely?
Look, so Senator, we didn't need the booming commodity prices to look closely at that segment, and we've had very significant and public changes to how some of our commodity exporters structure their tax affairs. The increased commodity prices, as you say, mean that there's potentially more in play. What I would say is that our work to date and continuing work is, you know, I'm very proud of the work that our teams have done there, because it means that those commodity prices are flowing through to the budget. You know, they are flowing through to increase tax collections, and, you know, a non-trivial component of that is due to the great work of the task force.
Okay. I also had some questions around in the ATO resourcing review. So MyFO allocated $600,000 for an independent review of the ATO's ongoing resourcing requirements, with the funding ending in the middle of 2023. Alongside that review, there was a funding allocation to keep the income, taxation and shadow economy compliance programs running, while the review, I presume, looks at the compliance activities that might change.
Yes, so Senator, I might give a little bit of context and then I maybe pass over to my colleagues at Treasury. But so the tax office is a mixture of baseline funding and also very specific funding around compliance programs. And that includes the Tax Avoidance Task Force. It's probably our biggest program. We're a significant member of what's called the Serious Financial Crimes Task Force. We do work around the shadow economy. We have a program around that. But we have a range of programs which are funded for periods. Often those programs, they either evolve, they renew in some form, they evolve. I think it was the background to the pricing review was that it was considered to be a good time to take stock as to whether some of these programs, in a sense, how they evolve into the future, but whether some of them are more base funding than NPP funding. But regardless, a good time to take stock of the funding of the office. With that, I might pass over to my colleague.
Thank you, Senator, and thanks, Mr Hirschhorn. I don't know that I have too much to add to Mr Hirschhorn's comments, but I think that the context that he provided is important. One of the challenges that the ATO has pointed out to us, I guess, on a number of occasions, is that balance between the number, their kind of what they would call their baseline funding, and the number of, you can have a number of specific programs targeting a particular type of activity, such as this multinational tax avoidance, and they can be 4-year programs which get extended for another year or 2 years. And you have to kind of balance the ability to, of course, make an assessment about the extent to which they remain real, topical, and things that you want to provide funding for, but then assess as to the continued need and effectiveness of those, versus other occasions when they're extended for such a period of time that they actually should perhaps be viewed as baseline funding, and in that context can help the ATO in terms of providing more confidence over what their staffing situation can look like and be evolving over a longer period of time. So we had a number of conversations with the ATO around the challenges of managing baseline versus the number of short-term programs, and that was what led to the decision that, as you point out, was made in MyFO to essentially take stock of the funding situation of the ATO and essentially look at that resourcing in a holistic way. And the intention is to do that in the second half of this year. and the funding was provided in MyEFO for that purpose. Just to draw all that together, if you actually go to the measure on the extension of the Australian Tax Office Tax Avoidance Task Force, you'll see that, in fact, in the third paragraph, it actually notes that the ATO's total resourcing requirement, including for the delivery of this, will be settled as part of the independent review of the ATO's ongoing resourcing requirement. So that was done just to basically ensure that there is a comprehensive or holistic examination of this issue.
Okay. So just some more detailed questions. What's the crossover with the kind of behaviours these two compliance programs are looking at and the Tax Avoidance Task Force?
I think...
So, Senator, I'm not sure if I fully understand the question. So, if we have sort of, if I focus on the Tax Avoidance Task Force, so we have two groups within the organisation called, under Acting Second Commissioner Deborah Jenkins, called Public Groups and International, and another group called Private Wealth, bolstered by a third group called Integrated Compliance. They all do aspects which are, I would describe, adjacent to the task force. The task force, can I say, do not think of it as a group of people wearing special uniforms or badges who are separate from the organisation. It is really an integrated approach that we take between the task force and our business as usual resources to make sure that we are addressing the particular markets. But the task force is a very significant percentage of the staff and resources we can bring to bear to those markets.
Okay. So, alongside the independent review, we've also got a new allocation in the budget to extend the Tax Avoidance Task Force. That wasn't prefigured in MyEFO. Can you explain why it didn't seem necessary then but does now?
I mean, timing of decisions, and in particular, and whilst decisions are taken in the context of MyEFO, where possible, we prefer to take decisions in budget environment. MyEFO is an update, not a mini budget.
So it wasn't seen as a priority then, but then was for the budget? Is that?
So you're still talking about the measure extension that begins essentially 1 July next year, Senator. Is that right?
The Tax Avoidance Task Force.
Yeah. For which the additional funding for ATO flows through from 1 July next year. So it's not a pressing enough timeline that we would ordinarily have taken that decision in MyEFO. It's a decision that's still been taken more than 12 months ahead of the operation of it. Assuming you're saying why wasn't it taken in the last MyEFO, not why wasn't it deferred until this MyEFO. Yeah, I mean, there's no need to take it in the last MyEFO. We're extending the operation of the task force, and we've given that indication more than a year out in this budget, so there wasn't a need to give that indication more than 18 months out.
Okay, so with the independent review generating findings within the next year, how was the decision reached to fund the Tax Avoidance Task Force out to the 24-25 financial year?
Officials want to add anything, I'm happy for them to, but I mean the decision was taken, as you can see, on the basis of analysis that shows that by providing the additional funding to the task force, we will successfully, or the ATO will successfully ensure that multinationals, large corporates and high wealth individuals will be contributing a further $2.1 billion in tax payments that they should rightly be making. So that analysis is what ultimately drives the value proposition for government in terms of supporting this continuation. If further information or advice helps to refine any of the activities in future budgets or updates, then of course we would act on it.
So is there a risk that we've got $327 million allocated to the wrong kinds of activity that are being assessed as part of this review?
Senator, I don't think they're being allocated.
Or could they be more effectively used? Like this review could potentially identify that they could be used more effectively.
And look, I'll let both sides here from Treasury and ATO, if they want, speak to how outcomes from such review work will potentially refine the activities that are undertaken.
Senator, I might start, and then if Mr Hirshhorn wants to add any comments. I guess from my perspective, I would simply note that I think that, as Mr Hirshhorn has pointed out, and I think there has been awareness that this program has been a highly effective program. It has delivered, revenues and appropriate revenues to the government. I think that referencing back to the earlier conversation around the challenge also for the ATO in terms of having some degree of confidence about what programs are extending and having a sense of what their staffing profile can look like, and also sort of wanting to give that confidence, also recognising, as I said, the effectiveness of the program, but I guess also with a view to also recognising that there are, as we've talked about last week, a broader set of BEPS 2.0, Pillar 1, Pillar 2 OECD negotiations going on. I'd say that essentially it was that combination of factors that led to a decision in this budget to provide some confidence about this program extending. At the same time as doing so, it was important to be cognisant of the fact that, yes, there is a whole of ATO resourcing review that had been scheduled for the second half of the year, and we wanted to recognise that in terms of, I think, pointing out, therefore, the link between, or at least the necessity of circling back in when the review is undertaken in the second half of the year to the fact that programs like this have been extended. So I think it's that balance between wanting to provide enough guidance up front around the continuation of highly effective programs and what it may mean for ATO funding levels and the way that they plan their resources. At the same time, yes, there is an existing commitment to have a look at the broader issue of the ATO resourcing, and we will take that opportunity during the second half of the year when that resourcing review is underway to look at its interaction with this particular measure. But Mr. Hirshhorn.
And if I could add or maybe draw out the themes from the ATO's perspective, which is the Tax Avoidance Task Force, even if you looked at it in terms of dollars collected from audit activity, has been a very significantly successful program. But that's actually, in some ways, the smallest part of the program from our perspective. We think we have structurally improved performance of large corporates in Australia, in particularly Australian-owned multinationals, but also many of the brand name multinationals. We think there is more to be done and more improvement to be had. I would also say, though, that some of the other benefits of the program have been greater assurance to the community. The large corporates are being held to account in relation to their taxation affairs, and this task force did start in 2016, where there was significant community concern about the taxation performance of multinationals, and that has improved. I think there's also been a benefit to large corporates operating in Australia in that it's allowed us to be much more active in setting guidelines and expectations and to also be able to provide certainty to taxpayers when they're doing the right thing. Whereas in the past, before the task force, we only had the resources to look at those doing the wrong thing. This also allows us to provide assurance to companies that they're doing the right thing, which is itself a benefit to the community. And the final point is, from our perspective, it is advantageous to get confidence in funding even 15 months out from the end of the task force, because it gives a very powerful signal to ourselves in trying to retain the very high quality talent that we have in the task force, which is, can I say, very attractive to those in the private sector because they're so good. And so having an extension of the task force is actually important for us in retaining our high performing staff.
Senator Chisholm, I need to share the call. If I could, please.
Yeah, I've got some questions for the Charity Commission that I'd like to deal with before we break. So
yeah, that's fine. So Senator Bragg also has some questions for the Charity Commission, as does Senator Roberts. So, Ms Longley, can you hear us?
It's Anna Longley, Assistant Commissioner General Counsel for the Australian Charities Not-for-Profits Commission.
Okay, welcome. Senator Bragg, you have the call.
Thanks, Ms Longley. I wanted to ask you about They Vote For You, which is a organisation which has DGR status. I wrote to you in October about this, and you responded to me saying that...
Sorry, Senator Bragg, when you say you...
Sorry. Let's move my microphone. Sorry. I wrote to the Charities Commission in October.
Right.
And setting out that They Vote For You effectively is distorting the voting records of members of this parliament. And it does that because it doesn't reflect the parliamentary voting record as set out on the website aph.gov.au. And it will do things like, in my case, it says that I voted against a constitutionally enshrined First Nations voice in Parliament, and voted against increasing legal protections for LGBTI people. Now these are...
I don't remember that.
These are complete falsehoods. And the Section 11 of the Charities Act sets out that DGR recipients should not be promoting or opposing a political party or candidate for public office or political office, and that would be a disqualifying offence if they were. Your response from Mr. Gary Johns, who I think is...
He's not with us.
But he is the Commissioner, right?
Correct.
Yeah. Said that the ACNC would be looking into... the organisation is actually called Open Australia, and they run the They Vote For You website. And so Dr. Johns said that he had provided the letter to your compliance area for their review and consideration. And it also noted that... Anyway, so I just wondered if I could get an update on that from you, please.
Thank you very much for the question, Senator. And I should start by acknowledging that Dr. Gary Johns does send his sincere apologies for not being in attendance today. He took the opportunity for the first time in quite some time to be able to go over charity regulators over in the UK. Unfortunately, returned a positive COVID diagnosis prior to coming back, and he's currently on his way back into the country right now. But in relation to that particular question, yes, when we do get all concerns in, whether that be from members of the Senate or MPs or any other members of the community, we do pass them on and we do a risk assessment in relation to that particular concern. What action comes about as a result of that review will depend on the concerns that are set out and any of the findings that we make in looking at that particular issue. So I we don't generally give updates specifically in relation to concerns that are raised, but we do take them all seriously and we do consider them all, as we will have in this case.
Okay, so does this organisation still have DGR status?
I understand it is a registered charity. DGR status is something that is endorsed generally by the Australian Taxation Office, unless, of course, it is specifically listed. So we don't look at DGR endorsement at all, but I do know that they are a registered charity.
Okay, so who determines DGR status?
So that's determined by the Australian Taxation.
Okay, well they're here now, so we can.
DGR endorsement.
Okay, well we can ask. I would like to come back to you, but can we check with the tax office now?
Senator, to the extent it is part of our bailiwick, you can ask us now. Unfortunately, I'm not sure we're going to have great information in front of us as to how you get DGR status, but we'll do our best.
Okay, well,
we might have to take some answers on questions.
Okay, well, can you take when are the questions coming back on notice, Chair?
27th of May, I think.
Okay.
No, I don't think there's any need to amend.
I don't think I have the jurisdiction here.
Senator Bragg.
Thank you for that. Okay, well, given that this is an issue that is before the Australian people, before the 27th of May, it'd be good if you could provide some more information today.
Yes, Senator, we will do our absolute best, and there should be significant guidance on our website as to DGR status grants that we'll be able to get to you.
Okay. Well, I guess I don't want to take up too much more of the committee's time, but what organisation, can you provide some examples of some organisations that have lost DGR status in the past?
So, Senator, again, I'll have to take that on notice and see if we can get that information to you.
Okay, so just so I understand that, so the DGR status is determined by the ATO?
Yes.
Sorry, I was just going to say I can take that if you prefer.
Yeah, that would be. Thank you very much.
Okay, so and then the ACNC then administers the legislation.
If I may, charity status is a precondition to DGR endorsement in a lot of instances, and there's currently a transition period requiring most DGR endorsed entities to be registered as charities. So the Charities Act states that a disqualifying purpose is one where a charity promotes or opposes a political party for office. So that would be one of the things that we do look at in determining whether a charity is eligible for charity registration. After that, the ATO would look at DGR endorsement, but as I mentioned, it's generally a precondition to DGR endorsement that it is a charity. So it would generally be the ACNC that looks at that disqualifying purpose, because that's a disqualifying purpose for charity status rather than DGR endorsement.
Yeah, okay.
I hope that's clear.
Okay, so the question of, because the nub of the issue is this Section 11 of the Charities Act, the promoting or opposing a political party or candidate for political office. So that's the key clause here. And your answer is that the ACNC is the body that determines whether or not an organisation is conducting itself in accordance with that requirement.
Yes.
Okay. Can you provide any examples where an organisation has had its status revoked because it has not conducted itself in accordance with that provision?
My understanding is that there have not been any instances of charities that have lost their charity or entities that have lost their charity registration status on the basis of Section 11 relating to promoting or opposing a political party for office.
Okay. Well, if you could take all that on notice between the two organisations, including an update on where we are with this organisation called Open Australia, that would be much appreciated.
Thank you, I will do.
Thank you, Senator Bragg. I note we're nearly at the lunch break. I note, Senator Roberts, you've got some questions both of the ATO and the ACNC. Well, I know Senator Chisholm also has some questions to the ACNC, so I think we'll need to adjourn for lunch and then come back and continue with the ATO and the ACNC. So thank you everyone for your patience. Thank you. Thank you, everyone. And I'm giving the call to Senator Chisholm, who has some questions for the ACNC.
Thanks, Ms Longley. I wasn't aware that Mr Johns wasn't going to be here. So I sort of had some questions that were going to focus on some of the other issues, some previous line of questioning that we'd put to him. So I might persist with that because I presume you're probably a good chance of being across it anyway, given your role at the organisation, but let me know if otherwise. So we've asked some questions before about charities donating to political parties. We talked about a few New South Wales organisations that had supported former Premier Berejiklian at fundraisers, and Mr Johns had given some comments to Michael West's media outfit that this wasn't a problem, that it was considered legal for them because they were pursuing their charitable purpose. Are you aware of that?
Yes, I am, Senator.
Okay. So I just wanted to ask some questions about that, just to try and get a bit of a sense of how you adjudicate or form a view on those things. So a charity working for a policy outcome in legal settings, say, could donate a significant amount to a federal election campaign, if that campaign was promising a policy outcome that was most closely aligned with the charity's goals and purpose. Would that be correct?
That's correct.
Okay. We asked Mr Johns last time about the Smart Energy Council's Bin Him sticker campaign, and you said that was probably, or Mr Johns said that was probably not okay, and we now know since that the ACNC has flagged that, and the charity has subsequently stopped distributing those stickers. Is that correct?
From the media reports I have seen, I understand that that's what the charity has done. Yes, I don't have any actual information though, other than media reports.
Okay, but did the ACNC actually contact the Smart Energy Council in regards to that issue, or are you suggesting that they maybe observed the fine hearings here and made a decision themselves?
If I may, Senator, the position of the ACNC is generally not to talk about the specific circumstances of charities unless there is a particular reason for doing so, and that is in, I suppose, alignment with the intent of our secrecy provisions. I'm more than happy to make some general comments, and I think we might also cover some of the grounds that Senator Bragg was asking about earlier as well.
Always happy to help Senator Bragg out.
So what the ACNC does do is when we do find instances where there may be charities that may have a charitable purpose that is promoting or opposing political party or candidate for political office, we may write to them and we may say to them that we think that there might be issues with those activities. That's a very different thing from actually undertaking an investigation and looking to revoke the registration of a charity under that Section 11 disqualifying purpose. But we will, as I said, talk to or write to charities if they look like they may be conducting activities that go along those lines. I should also note that there are parts of advocacy work that we consider to be okay in terms of
Very delicate balance.
political activity. And so that is things that might involve making submissions or giving evidence in relation to existing or proposed laws. It may also be about policies that parties generally have put out and making sure that charities are essentially, I would say, making report cards. So types of report cards, I suppose, that show different policies would be okay in this space. So comparing party policy would be okay, and also publishing research or history of how a political party has achieved its policies in the past would be something that would be okay.
Okay. So just on that, I'll try and put this so I'm not talking specifically about the Smart Energy Council then. So the issue is more because it asks people directly to oppose a particular candidate rather than advance a policy position.
That's correct. If we're talking about policy positions and comparing them, that wouldn't fall within that section 11 of the Charities Act definition.
Yeah. But I suppose changing a leader could lead to a better opportunity to advance a policy position.
I can't really comment on whether that would be the case or not.
It's often the case, I can assure you of that. So previously when we talked about New South Wales charities donating to the New South Wales Liberal Party, you made the point that for something to become a charity's purpose, or Mr Johns did, for something to become a charity's purpose is a high bar. And this is the quote: "You have to go after the facts of a particular case to see if particular actions constitute or amount to a purpose." And that's what I meant when I said that's quite a high bar. So in both these cases, the donations to the New South Liberals and the bin hymn stickers, you're making an interpretation of the charity's intentions and priorities. Do you have a basis to do that? So do you conduct an investigation as part of making that assessment?
Senator, there might be a few ways that we look at that. Generally, what we would do at the outset is conduct a risk assessment of types. So having a look at the governing documents, perhaps of the charity, and the activities that we're seeing them undertaking. And that will help us to determine if there might be a risk there. We may well provide regulatory, regulatory advice on that basis, or perhaps we might decide to open an investigation, which is a longer and more in-depth process that may lead to something like revocation.
Okay. So if you just on those two examples, so the I think it was the New South Wales RSL that made a donation to the New South Wales Liberal Party, and in relation to the Smart Energy Council campaign, sitting alongside each other, don't they show that the ACNC's approach to charities getting involved with political issues is confusing to the sector when there's two different approaches to those two charities?
I think it's probably fair to say that this part of the legislation generally can be confusing. It is a matter of fact and degree, I suppose, as to whether an activity of a charity might be looking to get to be its purpose of promoting or opposing a political party. And that's really where we have to try to draw that line on the basis of all of the circumstances that are known to us at the time.
Okay.
I should also correct the record from earlier. I said that I understood no entities had been revoked for promoting or opposing a political party. That is in fact correct. We have revoked the registration of one charity on that basis in the 2017 year.
Okay.
Who was that?
I don't have the name of that charity to hand. Generally, though, we don't publish reasons for revocation on our website. The charity would be listed there as revoked.
Okay.
But the reason would not be.
And just for clarity, on the 16th of February this year, the Smart Energy Council tweeted that the Australian Charities and Not-for-Profits Commission has advised the Smart Energy Council, if we continue to tell people to chuck them out or put them in the bin, e.g. bin stickers, we could be in breach of the charity laws and lose our registration as a charity. So that's what they tweeted. Just talking about an organisation's purpose, does that rest in any part on the way they allocate their efforts and resources? So that is that a charity that spends 1/1000th of its revenue attending fundraising events is clearly not putting a significant emphasis on political influence. Do you consider that as part of your consideration on these issues?
Yes, Senator, that may be one of the issues that we consider. What a charity's purpose is determined by its governing documents as well as the activities that it undertakes, including we do look at the expenditure it makes on various activities as well.
Okay. So just going back to that high bar question for determining a charity's purpose, does the ACNC take a view on thresholds? Would you be more concerned by a registered charity that allocates 10% of its funds to political purposes rather than one that allocates 1%, for example?
That's a bit of a difficult question because, as I said, it does relate to, it is a holistic type of assessment, but I would say generally I agree that it would be less likely to be a minor purpose the more money that a charity spends on political donations, etc.
Yeah. So there's no distinct point at which you say that's too much, regardless of whether the intended outcome advances a charity's purpose?
I don't think I would make such a linear connection, no.
Okay. So I just wanted to ask about the Howarth Foundation, which is a registered charity that donated $100,000 to the Federal Liberal Party in 2021. That's a pretty large donation by anyone's standards. Based on the Foundation's 2020 grant allocations, that would be around 9% of its annual disbursements and one of their top 5 financial grants. Would that be justifiable in having a look at the Howarth Foundation?
It would depend, again, I'm terribly sorry to keep repeating that, but it would depend on the circumstances in which that donation was made.
Okay.
And if it was actually a donation as opposed to spending on some other political purpose, or advocacy, I should say, advocacy purpose.
Okay. So potentially the foundation would have to convince you that it was advancing its charitable purpose by donating $100,000 to the Federal Liberal Party.
if we looked at such a charity, and I'm not talking about that one you've named specifically, but if we did look at such a charity, yes, potentially we would ask that question.
Okay. And what would prompt you to look at such a charity?
Information becomes known to us through a number of means. One of them is the returns that various entities, including charities, make to the Australian Electoral Commission. They may well also be concerns that are provided to us by members of the community. Probably the two main ways we might find out about electoral expenditure, potentially also through media reporting.
Okay. Thanks, Chair. I've got another set of questions to the Charities Commission, probably only about 5 minutes. Did you want to do...
Well, I might give the call to Senator
Yeah.
Roberts so he can ask his questions and then depart and then come back to you, Senator Chisholm. Senator Roberts.
Thank you, Chair, and thank you for appearing here, Ms Longley. My questions are fairly simple. Are you familiar with the fact that I've previously raised in the Senate the large number of complaints about improper behaviour of RSPCA staff when seizing animals and either selling them for profit or extorting money from their owners in order for the animals to be returned?
I'm aware of that line of questioning, yes.
Okay, thank you. You might also, well, you would be aware then probably that many animal owners have been taken to court on trumped-up charges based on the evidence of RSPCA staff who may also be prosecutors?
I don't have any knowledge of that specifically.
Okay. The questions are fairly short and simple. Do you remember the issues we raised with you at the earlier Senate estimates hearings about the large volume of complaints being made about the dealings with animals by the RSPCA Inspectorate?
I'm aware of those questions, yes.
Thank you. Are you aware that there are allegations being made that RSPCA inspectors have lied to magistrates about the circumstances of animals being seized?
I'm not aware of any of the specific circumstances.
Thank you. Are you aware that there are allegations that legal staff of the RSPCA Inspectorate have deliberately misled the courts as to seizures of animals without following the legislative requirements?
I'm not aware of that, no.
Thank you. Are you aware that the RSPCA has killed animals without legal requirements being followed and deliberate lies have been made to the court to justify their actions?
I'm not aware of that either, no.
What's the Commission prepared to do when these allegations are proven to be true?
What we will do in relation to any charity against which we receive a complaint or a concern is that we will risk assess that charity and we will take such action as is necessary, particularly if we see there is a heightened risk of failure to comply with the governance standards, which are the 6 standards that all charities must follow.
So risk assessment will will lead to an outcome that says this charity is doing it systematically, or it's prone to doing it, or it's highly likely to repeat.
That is one of the considerations that we take into account. We have a range of enforcement powers that are available to us that involve such things as directions, warnings, all the way up to revoking a charity's registration. If we conduct an investigation and find that the use of those powers or revocation is appropriate, then we will take that action. One of the things that we do take into account is the significance and the persistent nature of any breaches of the governance standards.
So the RSPCA has a wonderful name on the face of it, but behind the name there's some pretty heinous activities going on in some areas. Should the RSPCA, as a multi-million-dollar private business, be held accountable for the theft and killing of animals that have come into their possession?
I don't think that's really an appropriate question for me to answer in this role.
Thanks, Chair. Thanks, Ms Longley.
Senator Roberts, did you have questions for the ATO as well?
Yes, I did.
Do you want to ask those questions now, and then you can...
Sure, thank you.
You can be excused.
In 2021, the Australian Small Business and Family Enterprise Ombudsman issued a paper called, quote, a tax system that works for small business, unquote. Minister, if big business has lawyers and lobbyists to get all of the tax loopholes and perks at the moment, when can small to medium business expect to get a fair go, and what do you intend to do, and when will this happen? But looking at tax reform in the same way as the industrial relations reform, something for small business. Looking later on, I'll ask you questions about comprehensive tax reform.
Thanks, Senator Robert. Well, in relation to small business, we have, as a government, delivered lower company tax rates for small businesses, which are at their lowest level in more than 50 years, in the 25% now being paid. We in this budget particularly made the pivot in terms of some of the economy-wide supports we've been providing previously to now target more of those supports at small businesses in terms of support for example, the tax deduction worth 120% for investments that small businesses make in skilling their staff, a similar 120% tax deduction for investments small businesses make in digitising their activities and businesses. So we're absolutely committed to small businesses and to helping them pay lower rates of tax to reinvest into their business growth.
What I was getting at, Minister, and I can see the way you've taken my question, what I was getting at was that the industrial relations legislation, the Fair Work Act, is about that thick. And small business just hasn't got the time nor the legal expertise to go through that. Employees haven't got the time either. With the tax, it's probably even thicker, the legislation. It becomes a complex minefield. Is there any way it can be simplified? First of all, is there any way, are you contemplating comprehensive tax reform for all of Australia? And secondly, is there an interim step you can take to look after small business? Because small business is just getting smashed by these regulations.
So, Senator, we are always looking for opportunities to lower the tax burden on Australian families and Australian small businesses wherever we can, and we will continue to do that. Our tax reform agenda has particularly, and I note your support on the way through, focused on reforms to income tax regimes that will, when stage 3 is implemented in the next term, assuming we're re-elected, see the top marginal tax rate paid by around 90% of Australians cap out at 30 cents in the dollar. That's run alongside the types of measures, particularly to small businesses in company tax spheres and so on that I spoke about just before. We are always equally looking for ways to try to provide simpler arrangements in the tax system, or indeed through the ATO to provide clear advice for business and other taxpayers in terms of their compliance with the tax system. And I note there's also extensive of work undertaken with the different business chambers around the different states and territories to help to ensure that they're in a position to be able to provide the type of advice to small and medium businesses that is perhaps sourced more on an in-house basis by some of those larger businesses.
To quote the Small Business Ombudsman in 2021, the ATO regularly lose sight of the individuals running the businesses. This is particularly evident in the operations of the enforcement and debt collection teams, exacerbated by the overwhelming complexity of our tax laws. There it is again. End of quote. What will the ATO do to understand and to give small business a fair go? Because it seems like the ATO is acting capriciously at times when it comes to small business.
So thank you for the question, Senator, and we do acknowledge those comments of the ASBEFIO. I will pass over to my colleague, Acting Second Commissioner Deb Jenkins, who in her substantive role is responsible for our relationship with small business. And I would say, though, at the outset that we are striving absolutely to give a fair go to small business. And we, look, with the odd unfortunate exception, I'm confident that we mostly achieve that. So I will pass over to my colleague, Deborah Jenkins.
Thank you, Senator. Deborah Jenkins, Acting Second Commissioner, Client Engagement Group. As the Acting Commissioner said, in my day job, I do look after small businesses. One of the really amazing things about small businesses is actually the vast majority of them are highly compliant. And we have a tax performance program, and around 87% of the tax we expect from small businesses actually comes in the door with little or no interference from us or support from us. But we want to make sure that it doesn't come at a cost to them and their businesses. So there's a lot of work that we do, working with people like Espefio, and I was actually with them yesterday, talking to them about where are the pain points. So what are the things we can do to improve our advice and guidance, to improve our digital tools and services? Because what we know is that the easier we make it to comply and the more information we give those small businesses at the time that they need it, the fewer mistakes that they make. We know that most small businesses really want to do the right thing. And so, as Acting Commissioner said, advice and guidance. We also provide things like the digital cash flow coaching kit that we have provided to advisors and also industry associations so that they can work with small businesses. Because there's one thing we do know about small businesses is that they actually like to work with their digital service providers, but also their trusted advisors, which are the accountants and the bookkeepers and things like that. So we work in partnership with a lot of their intermediaries, as we call them, to help support small businesses, to help them to get them to understand their tax and super obligations.
Thank you. Just following on from that, Minister, Ms Jenkins raised complexity yet again. I've done it twice so far. But complexity leads to inadvertent mistakes, significant stress, and necessitates an enormous investment of time by small business owners who can't afford lawyers, can't afford accountants to deal with every issue that comes up. And small business owners and small business employees need to focus on building their business and services and focus on their customers and communities. We have a number of lawyers in this country, a huge number of lawyers in this country, and a huge number of accountants who spend their time working out ways to minimise tax. In our competing countries, the lawyers and accountants are focused on how to compete with others overseas. So we're wasting an enormous resource in our country, I believe. Australia's taxation system has evolved, resulting in more than 98% of all businesses being shoehorned into an environment designed to regulate the operations of large businesses. Can you, and preferably the ALP as well, commit to giving small to medium-sized businesses a fair go, and will you commit to major tax reform in your election policies?
Senator, we'll certainly work to continue to give small and medium-sized businesses a fair go and to reduce the rates of tax that they pay wherever we possibly can.
Excuse me, Minister.
And to reduce
it's the complexity that's the problem.
And to reduce the complexity wherever possible. I mean, it is the case, Senator Roberts, that when you target a measure or measures like we did in this budget that provide additional incentive and additional support for small businesses to invest in areas such as skills or such as their digital technologies, that's adding another point into the tax system that is of benefit to small businesses. But it is another item that is then not for them to have to report necessarily separately on, but of course it adds another point at which the calculations are different. But it's a point that is beneficial to those small businesses in terms of those calculations being about providing greater tax deduction and more support back to small businesses, and particularly for those that choose to invest in skills and invest in digital technologies. But certainly appreciate the point that whether it is in the construct of the laws, looking for red tape reduction opportunities that we routinely do, and for example in this budget there are some changes to the way excise payments are made for smaller excise payers, and that is seeking to relieve some of the paperwork and regulatory burden on those smaller businesses who have to pay excise just as we have previously indeed provided for those craft brewers and craft distillers, or a pretty much excise-free environment in terms of what they pay on their production, thanks to the rebate arrangements. And so we'll continue to look for those opportunities, as you can see in this budget, to target and pursue avenues of red tape relief and reduction, and to work then in terms of how the laws are administered with the ATO to ensure they're administered in a way that is as effective and simple for businesses and taxpayers to comply with as possible.
You're pointing to, and I don't want to engage, Chair, in a discussion on taxation or government philosophy, but Minister, with respect, I know where you're getting at, what you're getting at, but you just announced or discussed some of the complexities that are being added to the system. And what I've seen with industrial relations laws in this country so far, the Senate spends a lot of time in debating, fiddling with the Fair Work Act and making it even more complex because of the loopholes. Because of the loopholes or the lack of protection. Same with the taxation system. Isn't it time for a comprehensive reform to make it simple and efficient and open and transparent?
Well, Senator, I don't accept quite the premise there in terms of additional complexity for small business in terms of the assistance and incentives that we've put into this budget. They are there firmly to help small businesses and encourage them to invest more in skilling their workforce, to invest more in increasing the digital capacity of their businesses, and in doing so to pay less tax and to receive the support from doing so. They add additional measures in terms of tax law, as you talked about, but in terms of the reporting arrangements that actually apply on the ground to small businesses, they will seek to be kept as simple as possible, but it's simply providing another way of delivering a lower taxing environment for small businesses. It is, as I said, certainly our intention to continue to pursue areas of relief as much as possible. I was just trying to find the excise reforms in the budget papers just to point you to as an example there, but I can't quite put my finger on the right measure at this time. Apologies, Senator. If I find the page, I will shout it out shortly.
There's no need to apologise. You're giving me evidence for my point. So,
well,
we're going to have to give him more time now, Senator Roberts.
You're going to take the rhetorical point.
Yeah. So, your words.
Hang on, Senator Roberts. Hold on.
There we go. It was earlier in the book than I was looking, Senator Roberts.
There's so many good things in that book, Minister.
So there we go.
Hard to find it.
Pages 5, 6, 7 and 8 of budget paper number 2, which go through some of the measures in the deregulation agenda that are in this budget, but the particular ones that I had referred to around streamlining and aligning licensing requirements across the excise system, and providing significant deregulation benefits to fuel and alcohol producers, importers and distributors through streamlining the administration of fuel and alcohol excise and excise equivalent customs goods, which, whilst they come at an estimated reduction to government revenue of $127.5 million over the forward estimates period, they're overwhelmingly being pursued as measures to simplify reporting requirements for smaller businesses operating in those spheres, so that they, for example, only have to report and pay duty on a quarterly basis rather than a weekly or monthly basis, as is currently the case. There are a number of other measures across those pages, which I won't seek to read out at present.
Thank you. We've introduced, and we compliment the government for accepting our changes to various industrial relations laws they put forward to make it simpler for small business. We accept that and we acknowledge it. But to use your words, you're encouraging small business to make investments in people, technology, research and development. You are encouraging them to spend that money in a certain way. And that's what happens with the taxation system. And when it's so complex, it encourages all kinds of things. What I'm suggesting to you, and perhaps you can just confirm that whether or not you agree, is it's the government's responsibility to create the environment for small business, large business, to actually invest where they think it's right, not to steer small business around. And I would argue that small business owners have a much better idea of where to invest their money than any one of us in this room.
Senator Roberts, on the broader principle, yes, I agree. It's why we have sought to reduce headline tax rates where we can. The reduction in company tax rate for small businesses down to 25% was indeed driven by a desire to create a lower tax environment and to enable businesses to make their decisions. However, there are equally areas of the economy where we know that the productivity uplift for individual businesses and the economy overall will be enhanced by seeing greater levels of activity and investment by business and indeed co-investment alongside government, which essentially, once you're talking about tax deductibility in excess of 100%, it's a means of using the tax system to provide not only that deductibility but an element of additional support for certain activities and in relation to skilling workforces, in relation to digital technology uptake. These are areas that can help the productivity not just of individual businesses but of the economy as a whole.
So I think I see, and that's the end of my questions. I think I can see in the answer there that there is some recognition that the people in this room can't understand as well as a small business owner where to spend their money. But I accept that it's complex, it's not a simple issue.
Thank you, Senator Roberts. Senator Chisholm.
Thanks. Yeah, I had some questions which they may sort of cross between the ATO and the Charities Commission, maybe even the department. Can you talk me through how a limited foundation can gain DGR status?
Senator, maybe at this point, there were a couple of open-ended questions from Senator Bragg in the earlier session, which go to the general DGR process themselves. And maybe at this stage, could I suggest, if I pass over to my colleague, Deborah Jenkins, Acting Second Commissioner, who might give a broad overview of how the DGR process works from once something is a registered charity, what are the requirements to get into the DGR system? And that might be a good way of answering both the questions from Senator Bragg on notice, but then also a good foundation for this response.
Ms Jenkins.
Thank you. So there are two types of deductible gift recipients. There are one that the ATO actually endorse, and they meet the requirements of the general categories, and there are 50 categories. And then there are also those that are specifically listed by name in the tax law. So obviously there's one category that the ATO has a role to play and the other one that are listed in the tax law. Now, each category does have different requirements, and if you click into the website, I'm happy to provide that. There's a lot of detail underneath that. Now, one of the things on the 14th of December last year, there is now the requirement that all DGRs must be either a registered charity or an Australian government agency. So that is kind of fundamental, so all of them will be that. All of the status are actually on the the ABN lookup website, so go through that process. And then what we do when that information comes in, so you can apply either at the time you are applying for charitable status, or you can complete a form subsequently, and then the ATO looks at what category you're applying for, matches it up with the information or the documentation that has been submitted at the time to confirm whether they meet the status, the category which they've applied for. Now, obviously, just to kind of move to maybe Senator Bragg's question, but hopefully it might answer yours as well, If there is information that comes to our attention that looks like they do not meet the category that they have listed, then it is possible for us to revoke that DGR registration. But all of them are listed publicly on the ABN, so you go to the ABN, look that up, and then under the listing there is charitable status but also DGR status as well.
Okay. So can you confirm whether the Australian Future Leaders Foundation Limited has been given DGR status?
That will be publicly available, and we can probably just double check that. It's the Australian Leaders Association.
Australian Future Leaders Foundation Limited. And I was looking for when that occurred as well.
Just have to check on the publicly available information.
So Senator, while my colleague is looking to see if it's already been processed on the register, of course, it has to be registered as a charity, which is the responsibility of my colleague, who will no doubt have a contribution. Then there's also a separate application, so that's necessary but not sufficient for it to be a DGR as well. So we'll just search to see whether it's already been uploaded on the ABN, but there are a couple of steps before it reaches DGR status, and I'll pass over to Ms Longley.
Yes, it is, Senator.
Thank you.
Date?
Sorry.
31st of March 2022.
So only...
So basically, the information I have is that the Treasury Laws Amendment Act 2022 was introduced and passed by both Houses of Parliament on 30 March 2022 and received royal assent on 31 March 2022. And that was the vehicle that provided the Australian Future Leaders Foundation Limited with DGR status as of 1 July 21.
So it's not the ATO.
Senator, I think that's an example of the first category, which is one which is named in the tax law.
Okay, so it's specific legislation.
It's a specific listing.
Okay, thanks. Ms Longley, did you have anything you wish to add to that?
I don't actually, Senator. I was actually going to provide the same information.
Okay. Why was the Australian Future Leaders Foundation given DGR status under the specific listing process?
So, Senator, the specific listing process is essentially one that is at the discretion of the government. So the government makes decisions on specific listings.
But doesn't it say in exceptional circumstances?
It is, as I think Ms Jenkins pointed out, there are essentially two ways in which happens, either through the falling within the 50 general categories or being specifically listed by name. It is, I will say it is not unusual. If you actually look over the budget documents, both at MyEFO and in the budget process, you'll generally find that there might be a few entities that are given specific listing. So I'm trying to basically strike a balance between saying it is not extraordinarily rare in the sense that there can often be 5 or 6, but it is still the exception rather than passing through the 50 general categories.
Okay. So, but the Treasury website does say that that specific listing is only available in exceptional circumstances. I'm just trying to get a sense of what were those exceptional circumstances. Well, I understand you're saying it wasn't rare, but the exceptional circumstances part hasn't been addressed.
So Senator, it's, bringing forward an entity for specific listing is a decision of government. Of course, the actual listing process is then a decision of the Parliament to endorse that, and that's the legislation that was just spoken of. In terms of the case or merits, we can take on notice any particular information about the circumstances at the time around the listing of that foundation, but as I think has been explored elsewhere, there was some work and that they were developing around leadership programs with Government House, and that's been part of at least its engagement through these processes.
Okay. The Treasury website says the application should include the latest annual report. Did the foundation include that?
I would have to take that on notice.
Okay. Are there any exemptions to that requirement to include their latest annual report to gain this status?
Again, I'd have to take that on notice. I have got some information here which I can provide you. I don't know if it will answer all of your questions, but let me relay what I have got. That, as far as I know, the Australian Future Leaders Foundation Limited made an application for DGR specific listing on the 27th of April 2021, and Treasury's consideration of that application was routine. We did seek further information from the applicant in May, including things like a copy of the Foundation's constitution, various things. We can often, it's pretty regular for us through process to seek more information, and essentially we received the information from them also in May, and then essentially we undertook a costing, and then the process basically went through the Cabinet ERC process associated with MyEFO.
Just on that exceptional circumstances, Minister, are you aware of what the exceptional circumstances were?
No, as I said before, Senator, we can provide any further advice on notice. There would have been justification for the listing provided in the explanatory memorandum for the legislation that went through the Parliament too. I would have expected, but I don't have that to hand.
I can give you some broad traits, but as I said, it is ultimately a decision for the government, but certainly in terms of things that we look at, it is, is there a broad public benefit? Does it fit into a DGR status but might actually, or category, but a technicality may preclude it? Is it unique? So those are kind of some of the broader considerations that might be brought to bear in its consideration. But as I said, it is ultimately a decision for government in that specific listing space, and then obviously, as the Minister has indicated, for Parliament.
Okay, so it was a decision of government, but the Minister is not aware of what the exceptional circumstances were?
No, Senator Chisholm, I don't have the records of that particular listing and what case was made at the time to hand. It was, as I say, ultimately a decision of the Parliament once the legislation was brought to the Parliament. Legislation I think that you voted for, as did I, Senator, and there would have been information provided in that explanatory memoranda at the time too.
So you say this was routine, but there was no annual report provided, which isn't routine, and they applied just days after registering the foundation. That isn't routine either, is it?
Senator, I can't comment on those issues. In fact, I don't know. I haven't said that they didn't provide an annual report. I've just indicated that I'm not able to answer that question. I'm happy to take this question and the previous one on notice and get back to you with information if we have anything I can add.
But how could they provide an annual report when they are only established? Like, it's pretty simple, isn't it?
So, Senator, I understand the question you're asking. All I can do is take the question on notice and see what else I can provide you.
But it's just not possible they could have provided an annual report. Like they'd only just been set up.
Ms. Marakovic has taken.
Well, it just seems far from routine
in terms of what information may have been provided at that time. I think the point that she was making in relation to specific listings is that It is routine that in most budgets that I can recall seeing over a long period of time, there are some specific listings of entities. That's routine. It's a well-established process in terms of the way in which they are added to those lists through the parliamentary process. In the grand scheme of the number of entities that do get listed, it is more unusual to come through that stream than it is just the normal registration process, but it is not uncommon.
Can you give me another example of someone who's gained status without providing their latest annual report?
Yeah.
I'd have to take that on notice.
This is a foundation that has one employee and received $18 million of government funding to function. Surely, Minister, you would be aware of what the exceptional circumstances were that gave your government the impetus to include this in legislation.
Senator, I think the engagements had with Government House around the program that this entity is anticipated to pursue, and the desire to see that progress form the basis of these actions. They're, as I said elsewhere, not unlike certain programs that operate in different states and territories in terms of leadership foundations run by different governors, and or at least under the auspices of different governors as the figurehead of them, providing for leadership development opportunities across different states and territories. In this case, it's a not dissimilar proposal from my memory of what I saw that worked through with Government House in terms of what was presented to government.
So
I didn't quite catch estimates the other night with the official secretary to the Governor General, but I gather at least some of this was explored or explained there.
I didn't catch it all either, Minister. You've taken on notice if there's any exemptions to the requirement to include their latest report to gain DGR status. Is that correct? So that's not something you are aware of as you sit here, but something you'll take on notice?
That's correct.
Okay. Thanks, Chair.
Thank you, Senator Chisholm. Now, I just want to do a final check, Senator Chisholm. We're now done with Revenue Group, Australian Taxation Office, ACNC.
Can I just check on which minister would have signed off on the DGR status?
So to be included in the last year's budget, or MAIFO, I forget, anyway, to be included for that decision of government, it essentially is a cabinet level decision through the budget making process, Senator. So it's not a single ministerial decision in that regard.
So I assumed it would have rested with the Assistant Treasurer.
The Assistant Treasurer has, I think, responsibilities in terms of that area of administration, but it's not, as I say, it's not a ministerial decision that is taken. It's a decision of government through the cabinet processes in the forming of budget or MAIFO related decisions, and then is only enacted by a decision of the Parliament actually agreeing to it.
Thanks, Chair.
Okay. Mr. Hirschhorn,
yes,
you had
thank
something.
you, Chair. Going back, I promised Senator Bragg that we would come back with a response during the session if we could. to one of his questions, which was about the status of the Board of Tax review of cryptocurrency and the ATO's role.
If you could.
And if I could pass over to my colleague, Second Commissioner Kirsten Fish.
Ms Fish.
Thank you. Yes, the ATO has been involved with the Board of Tax review on digital assets and digital currencies. The terms of reference were recently released by the government and we were consulted in relation to those. We are engaged with the Board of Tax generally to identify a number of tax officers who will be a part of the Board of Tax working group alongside Treasury colleagues and other members of that working group, so we'll be integrally involved in that review. In addition to that, we are also working to identify additional topics for public advice and guidance, so that will be updating some of our existing guidance and identifying new topics for guidance. As we do that, we engage with many stakeholders who are relevant to both identify the topics as well as explore those topics for public advice and guidance.
Okay. Thank you very much, Ms Fish. And that concludes our session with Revenue Group. Or Ms Rakovic, did you have something you wanted to add as well? I could sense it.
I'm trying to get some information.
Right.
I haven't as yet got another example, but I am reliably informed that it would not be unusual for there not to be an annual report provided. Many entities apply in their infancy, and if they are applying early on in their infancy as an entity, they wouldn't necessarily have an annual report. So we're still trying to get you an example, and we have taken that on notice, but I did want to just clarify that it is not an unusual outcome.
Okay, thank you very much. Mr Hirschhorn, I just wanted to really convey my compliments to the Tax Avoidance Task Force and all the work they're doing. It's just extraordinary, the outcomes they're achieving. So if you can please pass on my compliments.
Chair. I'm sure that the officers involved in the task force will be very grateful for that feedback.
They're an inspiration. An inspiration.
We are very proud of them, Senator.
Except for those who they're extracting tax that they were seeking to avoid from, I'm sure. But that's important for every other taxpayer who's doing the right thing.
Absolutely, Minister. I couldn't have put it better myself. Okay, we will now move on to Markets Group.
Thanks, Marianne.
Senator Rennick, how long do you think your questions will be? Very quick. Anthony Jess, who was seeking the call on Markets Group. Me. Do you mind if I give Senator Rennick the call just so he can... Yep.
Oh, this is pretty straightforward. Pretty straightforward.
Straightforward entertainment.
Yep, straightforward. Vlad's
Sorry?
Vlad's opened up the gold market a bit, so we need to everyone needs to start finding their physical gold. It's going to matter pretty soon.
Hello, Markets Group. Welcome, Ms Quinn and your team. Senator Rennick has the call.
Hi guys, how you going? Have we got...
that wasn't your first question.
No, it wasn't my first. That was just a, greeting.
Rhetorical.
Greetings, fellow...
Rhetorical icebreaker.
Yes,
over to you.
Right.
Fellow estimates travellers, greetings.
Yes. My question is to James Kelly, the First Assistant Secretary, Financial System Division. Is he there at all, please? Yeah, he is. Okay, very good. Okay, thanks. So I have a question about the regulation of physical gold and silver bullion. I note that bullion has been specifically excluded from Note 2 of Section 763B of the Corporations Act, which means that physical bullion is not defined as a financial investment. Can Treasury explain what the policy justification for this is, and why is physical bullion purposely not considered a financial investment and therefore a financial product?
Well, Senator, so I don't think James Kelly, Assistant Secretary, Financial System Division. So I don't know the historical reason whether bullion was considered in drafting the definition of financial product and kind of how that happened. It's kind of more a question, it's my place to make a judgment as to whether it is a financial product or not. My understanding is it generally hasn't been seen to be, but I can't really say much more than that.
Okay, no worries. So with respect to Section 763C of the Corporations Act, a financial product is defined if a person manages financial risk. Given that investors purchase physical gold and silver to manage the risk of inflation and financial instability, is it possible that physical bullion could be considered a financial product by virtue of meeting the definition outlined in 763C?
Yeah, so Senator, it's not kind of my call to make give advice on the kind of the legal position of gold bullion for the purpose of the definition. I think ASIC appearing later. You
Okay,
direct
well,
the question
I'll put it
them.
to the Minister. So basically, a lot of superannuation investors and investors in general now buy physical gold. They're concerned about inflation, and as you know, notes depreciate very fast when there's a lot of inflation. How is it that physical bullion isn't being monitored as a financial product when a lot of money is invested in physical bullion? And I might note that Australia has the largest gold holdings in the world, and that historically we've had big banks pay billions of dollars in fines for rigging the paper market in gold. In 2021, our exports of gold were $28 billion. Now, if gold wasn't manipulated by the physical, the private banks, along with the Bank of England, we could be getting 56 billion, not 28 billion, if gold was higher. So it's very important that we track physical gold, especially in regards to those people from the point of view investor who are basically, think they're buying gold, but there's a risk that the gold may not actually be there.
Thanks, Senator. I think in terms of the regulatory standards that the different financial entities have to meet in terms of the accuracy of their holdings and meeting those requirements, I'd in the main defer to those regulators who are going to be far better placed to report on how they verify for themselves the credibility of different holdings where they are undertaken by financial institutions. Obviously, the government expects that where holdings, whether it be in gold or in other asset classes, are held by different entities, by different financial institutions who are regulated institutions under our frameworks, that there is accuracy to those holdings and credibility underpinning them, and that's what different regulatory entities should be able to verify and have confidence in.
Okay, thank you. So who is responsible for the regulation of physical commodities in Australia? Are there any rules and regulations around physical commodities?
I mean, when I'm talking there, I'm thinking more around the regulation of what a superannuation fund might hold, or what a bank might hold, or those regulated entities, not specifically who regulates a type of holding.
Yeah, so who regulates the custodians of the physical commodities? So, for example, there's a lot of bullion banks out there in Australia that claim to hold physical holdings, have physical holdings of gold. Indeed, our own Bank of England, our own 80 tonnes of gold, was actually found out that it was fake gold bars and duplicate serial numbers, and despite the fact that Guy Debale had said to us, the Deputy Governor of the RBA had said to us that no gold had moved in 20 years, it actually now turns out that nearly all of our gold has been refined since 2015. So there are serious concerns out there in the marketplace, and I'll note that gold's been one of our biggest export markets since 1850. It employs 70 to 100,000 people in Australia. It's often forgotten about with coal and iron ore, but it is the third biggest mineral export, and if it wasn't manipulated downwards, could quite possibly be the biggest mineral export. there is a gap in the market out there, in my view, for the regulation of the physical commodity.
Thanks.
And the
Senator.
custodian of it.
But
Yeah.
I mean, unless officials have something else to add there, I think the particularities of the question there in terms of actually drilling down to the different regulators, looking at the holders of those commodities, and then understanding the confidence that those regulators have in the accuracy of those reported holdings is from my reckoning, the right approach. I don't think it is likely that government would seek to go after the commodity itself in terms of trying to regulate or have
I'm referring
oversight
to
of how
custodian
it's
items.
held. But in terms of the role of APRA or others, I think that's probably where it's best explored as to what work they do with those they regulate.
Okay, thank you. Cheers. Thanks,
Thank
Chair.
you, Senator Walsh.
Thank you, Chair. I've got a few questions about the process around legislation for the compensation scheme of last resort. Yep. So I understand that legislation for the compensation scheme of last resort was recommended by the Ramsay Review in September 2017. It was then picked up by the Royal Commission, which recommended a scheme of last resort be created. Government indicated that it would do that in February 2019 is what I have. There was a government roadmap on the recommendations of the Royal Commission. Treasury did a consultation paper in December 2019. Is that about right in the timeline?
That's right for the discussion paper.
Yeah, discussion paper, yep. And then there were delays associated with the roadmap coming out of the Royal Commission.
Yeah, that's right. In May 2020, the government deferred some work on the recommendations of the Royal Commission as a result of the COVID pandemic, a 6 month delay to some measures.
Yeah. And the exposure draft of the legislation was released in July 2021.
Correct.
Okay. Are you able to tell the committee when Treasury started drafting the legislation for the compensation scheme?
Senator, not precisely, and to take that on notice. I would, if I had to venture a guess, it would have been in the first half of 2021.
The first half of 2021, because the roadmap had been delayed in May for 6 months. So is that broadly why that time frame?
The compensation scheme of the last resort, it was recommended, as you said, by the Royal Commission and kind of picked up early work by Professor Ramsay and that process. But in terms of the detail of the scheme, it was very kind of underdeveloped. So a lot of the work Treasury has done is actually, kind of working out the details of what's a complex scheme. And in some ways we had to do that before we turned to the actual drafting legislation. And then there's the regulations as well are also important.
Okay, so you think you started working on it at this roughly without wanting it to...
No, so sorry, it's just the actual legislation itself in terms of going to the Office of Parliamentary Counsel and getting the legislation drafted. But, as you've already covered, there was a discussion paper released at the end of December 2019. So in some ways we've had people working on the compensation scheme of last resort from the time of the government, the commitment in February 2019,
right,
with the exception of particularly during the first part of the COVID period, largely a lot of the work in the Royal Commission stopped across the board, and then we picked it up after about 6 months.
Okay. So Treasury's been working on it since the government's response in around February 2019.
Yep, subject to the COVID, the kind of the interruption.
So three years ago, and then probably started working on the draft legislation around the start
I have to take that on notice to give the definitive answer.
Sometime probably in 2021. Are you able to tell us when the draft legislation was first provided to the Treasurer's office? Is that something, that you're able to tell us on notice?
I would have to take that on notice. The exposure draft legislation was released on the 16th of July 2021, so I would expect it would have been in a month or 2 or weeks ahead of that.
What was the thinking of Treasury around including managed investment schemes in the compensation scheme as considered in your discussion paper?
If we go back to Professor Ramsey, he actually recommended that the scheme, if it's set up, actually just start with financial advice, but be designed in a way that it could be extended to kind of other services or products. The Royal Commission, from memory, didn't go into the detail of how wide or narrow the scheme should be. In the discussion paper in December 2019, from memory, it set out kind of basically 3 models, a kind of very broad model that picks up everything relating to licensed, credit licensees and AFSL licensees and brings them in. That's a very broad model. Narrow model is kind of the financial advice world, as Professor Ramsey and his panel recommended, and then a kind of mid-range model where you kind of in between those 2 extremes, which is the kind of model that's in the bill and the government policy commitments today.
Okay, so in your discussion paper in December 2019, you just sort of canvassed those different options but didn't necessarily make a specific recommendation?
No, it was a discussion paper, it wasn't a proposals paper.
Yeah, okay. Were managed investment schemes ever included in any draft legislation that you produced?
So partly I'm just hesitating because I'm just trying to recollect the legislative scheme or whether it's in the legislation or it's in the regulations, but I think the kind of the answer, even if you kind of broaden the question out that way, is no.
Okay.
the only qualification I kind of gloss on that again is, it is a kind of scheme designed to be able to bring in, has been, kind of designed to be able to bring in other sectors as required. And for certain purposes of the scheme, a sector can be caught up in the kind of levy arrangements, even though their products themselves are not directly subject to the compensation arrangements. But I think, if I'll correct the record if needed, but I think the answer is no.
Okay. Not sure if the chair wants to welcome the minister or...
Always. Welcome, Minister.
Sorry.
Minister Hume, you're welcome.
Sorry for the hold up. Thank you.
You're welcome.
You forgot to thank Senator Birmingham as well. You might get in trouble for that later.
Well, he's a very reasonable minister, Senator Birmingham. He actually left when I didn't have eyesight on. Never mind.
Okay.
I'll make it up to him this afternoon.
Okay, so Mr. Kelly, I think you were just saying that the scheme that's in the legislation that went to the Parliament in October last year was designed to be able to include further products or schemes like managed investment schemes.
I haven't read the legislation for some time now,
Yeah.
so I'd really need to take that on question to answer it properly.
Okay, all right. Minister, I went through, just to sort of bring you up to date on this sort of line of inquiry, I went through the timeline for the legislation for the compensation scheme of last resort, starting back with the Ramsay review in September 2017, and we've just sort of confirmed the timeline there. That's including it then going to the Royal Commission, government responding to the Royal Commission, the roadmap sort of delays in the roadmap, the exposure draft being produced in July 21, going to Parliament in October 21. The Parliament, of course, has risen, so this legislation, which Treasury's been working on, according to the timeline and the evidence to date, for 3 years, I think we said 3 years since the Royal Commission, roughly. The Parliament's risen without that compensation scheme being listed by the government for consideration or being passed. Why is that? Why have we been working on something for 3 years that was first recommended by the Ramsay Review in September 2017? And obviously, this is about supporting victims of failed investment schemes. Why is it that essentially the government didn't list this and set up this scheme for those victims?
Can I correct you? It's actually about helping victims of bad financial advice, which has then gone through to an AFCA determination, and AFCA have then found that the financial advisor has disappeared, shut up shop and gone to Majorca. It's not just bad investments that it specifically covers.
Yeah, I'll take your sort of correction on victims of bad financial advice, but time periods being the same and so on. Why didn't the government get it done?
It was, we did commit to introducing legislation for all of the measures to government that were recommended for government in the Hayne Royal Commission. This was one of those recommendations. There has been some considerable debate back and forth as to the scheme that the government put forward. I know that this committee had recommended that it pass unamended, but the dissenting report suggested numerous amendments. In fact, it would be amendments that would considerably change the nature of a compensation scheme of last resort. And because of that decision, there was further work needed to be done, and it didn't get done before the Parliament rose. As you know, we had a very, very jam-packed legislative agenda. We even passed 18 different pieces of legislation on the last day. This one couldn't be agreed upon to pass without amendment.
So you're not suggesting that the dissenting report of the Senate Economics Committee determined the timeline of whether you were able to do this legislation?
No, in fact, I think that the good news is, Senator Walsh, is that the government stands by its commitment to introduce legislation for a compensation scheme of last resort, and I think that the opposition does too. So I would imagine that it will be something that is high on the priority list of the next term of government.
Because if the timing of legislation was determined by dissenting reports, various people would be very encouraged to write many dissenting reports,
I think that
wouldn't they?
This committee was very encouraged.
I don't think they need encouragement.
Nonetheless, the legislation was introduced in October 2021. So I don't know how many days we sat since October 2021, but quite a few. So was it just not a priority of the government to assist victims of failed advice?
No, it was in fact sent to committee. From my recollection, I think the committee looked at it over January, maybe February. So there would have been very few days of sitting after the
It was
committee
certainly
reported.
over the summer period.
Yes.
Before we came back. Yeah.
The Senate
Chair.
reported on the 15th.
Sorry?
Hello.
15th of
Hello.
February.
Yeah.
That's right. Yes, there we go. The Senate reported on the 15th of February.
Sorry, Senator Walsh, I was chairing the hearing, sorry. Oh,
Yeah.
Go on.
Right. So 3 years since the government responded to the Royal Commission, and 3 years of work, and essentially you, as you said, government committed to implement all the findings of the Royal Commission, and just didn't get there, didn't prioritise it, didn't get it done.
Well, I think that we can safely say that the government's been working very hard over all of that period to protect consumers. There were unprecedented challenges faced, as we know, during the COVID-19 pandemic. But despite all of that, we ploughed ahead and, in fact, either introduced or legislated a total of 58 distinct measures across 9 bill packages that consisted of 14 separate bills, 18 subordinate instruments. In the course of that work, the government held around 288 meetings with over 125 stakeholders. We received 542 submissions from stakeholders across formal consultation processes. We've seen close to 100 dedicated staff across Treasury working on the implementation of the Royal Commission. I don't think that you could possibly understate the extent to which this is the largest and most important comprehensive corporate and financial services law reform package in decades, 3 decades probably.
Yeah.
It's a very significant undertaking.
You said, yes, I think you, we had a discussion about whether a dissenting report was responsible for the delay.
No, I cited the dissenting report.
Yeah.
No.
Yeah, you cited the dissenting report. Did you also, in your answer, cite Labor amendments as a reason why it didn't pass?
No.
Right.
I said we didn't feel that it was going to be able to pass unamended, which is one of the reasons why it wasn't listed on that last day when there had to be agreement between parties as to what bills were going to be on the agenda.
I'm of the understanding, I'm advised that Labor had committed to pass the bill unamended in writing to you.
No. I know that Mr. Jones, a member for Whitlam and my opposite, wrote to me and asked me to bring that bill on. He did not commit to not amending it. He said it would. He would like to see its swift passage, but that was the extent of his commitment. And I wrote back to him thanking him for that commitment, but it would be subject to the decision makers of the legislative agenda.
So what is the reason, I guess, that it didn't get done over the 3 years in your mind?
I think you're going to have to ask the ministers that are responsible for setting the legislative agenda.
So they thought that there were, other things that were more important and that this wasn't a priority.
Well, I think in the few sitting days that we had between the 15th of February when the committee reported and the time that the Senate rose, there had to be decisions made, and it was done, my understanding, largely with the consent and assistance of the Labor Party to pass as many bills as possible.
Yeah.
But this one was not one of those ones. Labor's position has been unclear on this bill for some period of time. You did
So
say that you would support the bill. It didn't.
Yes.
You didn't say that it would go through unamended. To put this bill through with significant amendments would have a profound effect on the cost of financial products, particularly for just mum and dad investors that have done the right thing, and so this was not a bill that one would take lightly and rush through.
So Treasury's confirmed today that they started working on this, 3 years ago, around February 2019. But it's Labor's fault that you didn't pass this legislation.
No, that's not what I said. I did say that this is a very complicated bill. It's a complicated scheme. To get it wrong would have profound effects. It was not something that could be rushed through, and any amendment would have significant effects on the cost of financial products for forever going forward, and that was not something that this government would be willing to risk.
How many recommendations of the Hayne Royal Commission haven't been legislated or are outstanding? Is it just this one?
That's a good question. I might have to refer to Ms Quinn on that one.
So there are two pieces of legislation in Parliament, Compensation Scheme of Last Resort and the Financial Accountability Regime. And there are two recommendations related to the Quality Advice Review, which is to be conducted in 2022, and a recommendation to harmonise mortgage broker laws, which will be considered after the Financial Advice Review in 2022, and a recommendation to remove the exemption of retail dealers from the operation of the National Consumer Credit Protection Act, which we considered after the Parliament deals with the consumer credit reforms. And a recommendation for a national scheme of farm debt mediation, which is being progressed by the Minister of Agriculture. They're the remaining outstanding recommendations. Of the 72 commitments the government made, which included 54 formal recommendations and 18 additional commitments, they're the only remaining ones outstanding. So they're all on progress, either before Parliament or in progress, or waiting for appropriate scheduling.
So, thank you. So two that have been introduced, this compensation scheme and the financial accountability regime. So two introduced, but not listed and dealt with.
So both introduced in October and reported back from the Senate committee on the 15th of February.
Yeah, and then you started to go through the other measures which are kind of in a process.
Yeah,
and
they're less legislative, more looking at, so the Quality Advice Review is two recommendations related to that. There's terms of reference and a review process in place, and that was to be conducted in 2022, and that's it's started.
And so, of the 4 or 5 that you just mentioned, none of them require legislation?
Possibly some. Whether the exemption for retail dealers connected to the Consumer Credit Protection Act, that may require changes to regulations or legislation, but it's subject to other reforms being dealt with.
Okay, so none of the other measures on your list there
are substantial regulatory changes. No.
Require legislation.
So there is the one related to treating mortgage brokers as financial advisors that Ms Quinn mentioned. That would probably, depending on what you thought that meant, that could require legislative change. It's where it is in the kind of the timing, and it was always in the government commitment to do it after the review of the advice space, because in some ways it's very hard to align the treatment of mortgage brokers with advisors until you know where you've landed with the advisors.
So potentially 4 things that needed to get legislated in order to for the government to fully respond as it said it would in its term to the Royal Commission. 4 things didn't get legislated when the Parliament rose.
Of the 72 commitments, yes.
That's correct. Right. Thank you. I've got some questions about the Aboriginal Community Benefit Fund, UPLA. So I won't go through too much of the timeline there, but the fund was trading as a funeral insurer, targeting Indigenous communities with a product that in many cases left members paying more for policies than they would have ever received in benefits, and the fund recently went into administration. That's broadly the background. Does Treasury have an estimate of how many consumers, you know, many of whom would be quite vulnerable, are likely to be affected by the collapse?
So the information I have is around 1,700 members.
1,700 members. That's a different number, isn't it, from the number of policy holders at the time the fund went into administration, I think. Do you know how that number is derived, that 1,700 number?
I don't have that information before me. We would have received this information most likely from our colleagues at ASIC, given they're looking at this matter in regulatory action.
Sorry, I think you've dropped off the zero, so I think the number we have is 17,000.
Oh, yes, 17,000. Sorry, what did I say?
1,700.
Oh, so yes, there's 17,000. I've misread my number. Apologies.
That would be about the number of policy holders who are unlikely. Well, that's the number of policy holders, I think. And I guess I was about to say that they would be unlikely to receive any coverage for their funeral expenses, but you might now tell me that that's a matter for ASIC.
So they have, I mean, they've gone into liquidation, so it would be a matter of going through that process, whether there are any funds available for distribution out to members.
Yeah.
Which they're doing now.
Which is in progress.
Yeah. Okay. So in terms of what Treasury's role is in relation to this, have you estimated how much those consumers, or are you able to tell us how much those consumers have paid into that fund?
So I don't have that information, no. In terms of Treasury's responsibility, we have no direct responsibility in the resolution of a fund of this nature. It goes through the legal framework that we look at. We do, of course, get information from the regulators about instances of what's happening in the financial system, and we support the Minister in terms of the provision of information on these matters, but we don't have any direct involvement in either the resolution or the monitoring or follow-up regulatory action. I just note there's some of this is related to ASIC's duties, but others are related to the New South Wales fair trading system because they were regulating elements of this entity. Yeah,
I understand what you're saying. I'll just see whether you have some of the information that I'm seeking here. When did Treasury become aware that the fund would be going into administration? And when did you provide a briefing to the Treasurer in relation to the fund entering administration?
So I don't have that detail with me. Happy to take it on notice. We most likely would have been provided information from ASIC or AFCA, depending on where the claims came through the system and the awareness.
Senator, the thing I'd add is, I'd have to take the precise date on notice. One of the Royal Commission recommendations was implemented in early in 2019. So one of the very first recommendations went to issues associated with UPLA, which at that time traded under a different name. And even back then, in kind of taking forward the recommendation, implementing it, some of the issues raised by consumer advocate bodies were around the kind of the future viability of these funds, and that was, something we were very conscious of in thinking about the timing and design of that measure.
Yeah, it was. There were sort of many sort of indicators that this fund was going to go into administration with various sort of. In fact, they were dealt with in the Royal Commission in 2018.
Well, actually, this fund's been around for like 30 years. Yeah. Successive state and federal governments have been, trying
Focused
to do something about this shonky business. And in fact, I think something that we should be really proud of is that finally we put a stop to this organisation's predatory behaviour This government instituted removing the exemption that allowed funeral expense policies to be sold by unlicensed financial product providers. That came into force on the 1st of April 2020. We legislated the design distribution obligations, so now you have to identify a target market for all your financial products. We've introduced the product intervention powers that allows ASIC to ban products when they identify a risk of significant consumer detriment. We've introduced the anti-hawking rules to prevent that pressure selling. And funeral expense policies are now subject to unfair contract terms, and you have to get a licence to sell these funeral expense service providers. And ACBF or UPLA were not granted a licence, so I think that this government has taken significant action on this organisation.
I guess, as you say, Minister, that there'd been awareness of this sort of dodgy practice and this operation for a while, and in December 2019, the Shadow Minister for Indigenous Affairs, Linda Burney, wrote to the Treasurer and the Minister for Indigenous Affairs seeking a clear commitment to protect the policyholders in the event of a collapse. So obviously people were seeing that this operation was going to put lots of people at risk, around 17,000 people at risk.
Well, it's important to note, though.
Sorry, I hadn't asked my question yet, but you just went through a number of measures that obviously didn't protect these 17,000 people from the collapse of this fund. So why didn't any of the measures that the government introduced successfully protect these policyholders when, as you've said, and as the correspondence from the Shadow Minister indicated, it was known, that this was likely to occur?
I think you make an important point there, Senator, but what ACBF did was they promised to pay your funeral expenses so long as you made regular payments to this company until you died. And those policy holders obviously haven't died yet. And it should be noted that people affected should be aware that nobody in this country is unable to bury their loved ones without a dignified funeral. The liquidators have secured the group's assets already. They're meeting with the regulators, and that includes Fair Trade in New South Wales and ASIC, and they're currently working to assess the financial position to liquidate the company. We understand that one of the past directors of the business is no longer in the country, and we would expect that as the person responsible, he would be held accountable, and other directors would be too. If it's found, as the liquidators have indicated, that potentially funds have been misappropriated or stolen, I would expect that the perpetrators would face the full extent of the law. In the meantime, there are organisations in every single state that can help with funeral and burial costs, so everybody would be able to bury their loved ones with dignity. This is a terrible organisation, and I am very glad to see the end of it. And one of the reasons why we've seen the end of it is because this government has taken action to prevent that sort of shonky behaviour that we've seen in the last 30 years. And can I say this has gone on through successive governments, state and federal. When Labor were last in power, not a single change was made, not a single reform was made to stop this behaviour, and yet Labor were aware of this operation throughout their period of time in government.
Senator Walsh, are we getting to the near the end of your questions? Because we are
set.
behind our program.
I've got more, and I've got another
For
set
Markets
of
Group?
questions for Markets Group. Yeah, but
All right.
I just wanted to... So perhaps I'll just finish this one and
Well,
then keep going.
you're going to continue to have the call,
Okay.
but we should just note ASIC was due to come on at 2:30, right? So we're 40 minutes behind.
I've just arrived,
Well,
so...
that probably wasn't your best argument response, but anyway, you still have the call.
Oh, you're a bit tired, Chair.
I'm happy to be here all night.
So, Minister, you talked about some measures that might help people in the future who are in this situation. It was known that these vulnerable policyholders faced this situation, certainly, some years ago. You've just sort of referred to, you've essentially referred these 17,000 people to state sort of last resort agencies, state government sort of agencies that
Well,
help
they are a
with
state-regulated
with help
entity.
with funeral costs. Is that what government has for these 17,000 people to sort of contact their state government agency and get a sort of a subsidised funeral?
Well, I think that you can safely say that nobody in this country is buried without a funeral, and if that's what policyholders or families of policyholders are concerned about, they shouldn't be. There are organisations that can help with funeral and burial costs. If you would like me to table a list of them, I'm quite happy to do that. However, I think what's most important is that the shonky behaviour that this was demonstrated by this organisation has been stopped and will not happen again because of the reforms made by this government.
So what you now have for these 17,000 people is contact a state office and try and get a funeral of last resort that
Senator,
way.
this wasn't never a savings plan that they bought. What they bought was having their expenses paid when they die at their funeral. And you can go through, and I've got some web pages from UPLA's own web page, which literally says this is not a savings account. All they do is your family hand them the receipts from the funeral director and they are paid for you. And that can still occur through state-run organisations.
Okay. I'll just run through some questions quickly about where we're at with the financial advisor register. Yep. How many financial advisors are listed on the register today, and how does that compare with 2 years ago?
Chair, if I may, while my colleague's preparing for the answer, just to add to a question from previously from the Senator.
Yes,
the draft,
Mr. Kelly.
the first date of
Please.
drafting of a bill related to compensation scheme and last resort.
Yep.
So drafting instructions were provided to OPC in May 2021, and a first draft was received at that time, in May 2021. Ordinarily, there's then further discussions with OPC before it goes to government.
Thanks very much for providing that.
Melissa Bray, Assistant Secretary, Advice and Investment Branch. ASIC's Financial Advisors Register, which is available on the MoneySmart website, in February 22 had 17,500 financial advisors listed.
What was that number, sorry?
17,500.
And do you have a number for 2 years ago?
I've got January 2019, there were 28,600 advisors, and it's at that point that it peaked, the number of advisors.
28,000. 28,000 and now 17,500.
Yep.
I have a figure of around 2,000 who haven't yet passed their exam who are currently on the register. Does that sound right, or can you give us a figure on that?
I'm not sure if I have that in front of me at the moment. ASIC are appearing after us, and they recently released the most recent exam results for the advisors that sat the exam in February.
Okay.
So to date, 91% of advisors who've sat the exam have passed that exam.
Right, okay.
What's that figure? 98?
91.
91%.
Oh, 91.
Is there, what happens to those those people who are on the register, as I understand it, and who haven't passed the exam and who don't pass it by September this year?
ASIC's just recently released some information on that, some FAQs on their website. So an existing provider who has not passed the exam by 1 October, there's a series of cases, so it depends whether they are also a relevant provider as to what the outcome is. So I can work through those, or we can get ASIC to talk to their own document.
Yeah, that does sound reasonable. That's okay. So does Treasury know what the median fee charged by financial advisors for financial advice is?
I don't have that information on me. The quality of advice review, which Mr Kelly referred to earlier, has an issues paper out at the moment, and it'll be considering issues including the affordability of advice. So they're taking submissions at the moment. We have some information in terms of the costs of financial advice, but obviously that review will look into that in a whole lot more detail.
Is there some sort of quick snapshot you can give us from what you've got there, or?
Yep, hopefully I can find that quickly. Okay, so we've got a range of different reports that have been released recently that provide a broad range of estimates on the cost of financial advice. They vary from around about $5,000 that the FSC cited in its white paper on financial advice, which was released last year, and between $2,600 and $2,900 that ASIC cited in its consultation paper on promoting access to affordable advice in November 2020.
Okay. I'm happy for us to take up some of those questions with ASIC if we have time with ASIC. So I think that is all we have for Treasury, and
Okay,
grateful
excellent.
for
So
your assistance.
if there are no further questions for Markets Group, I'll thank Ms Quinn. Thank you to you and your team. And we'll now call for ASIC to come forward. You had some questions for ASIC. Did I say you did?
I thought I'd get started on that one and move on. Yeah, I have one, but I was going to do this bloody thing soon. Can I ask it at the front or not?
Hmm?
Can I ask it at the start or?
What time are you going to go?
It's so nice to be here.
Sorry?
Technically, you're the person.
Oh, well. Probably. Anthony, are you okay to send the Bragg just ask a quick question before he has to go? Okay.
I don't think this is going to work. Hopefully it will.
He does have an opening statement. Okay, thank you, Mr. Longo. Welcome to you and your team. Thank you. I think some of your team are joining by video conference as well. They're not necessarily all on the screen yet,
right.
but
So, when the committee's ready, I'll quickly let you know where everybody is.
yep. Okay. Now, do you have an opening statement you'd want to read, or?
Well, what I was going to suggest to the committee was I have provided to the Secretariat an opening statement, but in view of the fact that time is short for everyone, I was not planning to read the entire opening statement, but I did table it with the Secretariat. There are three aspects to the opening statement. One I would like to speak to, and you'll see why in a moment. The other two aspects are to do with climate change disclosure and ASIC's digital transformation.
I suspect I anticipate the one you want to speak to, and I see initial CA appearing on our video screen. So
I'll let those topics, they can be read at the committee's pleasure.
Sure.
But what I'll quickly introduce who's here, speak to one thing in particular, and then I'll open it up, Chair, if that's okay with you.
Sure. Thank you.
So good afternoon, and thank you for the opportunity for appearing before the committee today. Deputy Chairs Sarah Cord and Karen Chester are joining us from Adelaide and Melbourne, respectively. We are joined in Sydney by Commissioner Kathy Armour and Executive Director Greg Kirk. Commissioners Danielle Press and Sean Hughes are also joining from Melbourne remotely. Appearing with me here in Canberra are ASIC's Chief Operations Officer Warren Day on my right, and our General Counsel Chris Savandra at the end of the table on my left. The one thing I did want to highlight today is that today is the last time Commissioner Kathy Armour will be appearing before Senate estimates, or indeed any parliamentary hearing. This will be the 25th Senate estimates appearance since her appointment in 2013.
Sorry.
And I thought I should mark the occasion by recognising her service to ASIC and her dedication to making our financial system fair, strong and efficient. During her 9 years at ASIC as a Commissioner, Kathy has focused on ASIC's markets work. In particular, she has worked to address broader market integrity issues to support the continuation of well-functioning markets, as well as encouraging a smooth LIBOR transition and developing ASIC's approach to climate-related risk. She's been a great colleague, mentor and friend to many at ASIC, and she'll be truly missed. Kathy has a very high reputation in the market. She's well recognised, as the Chair knows, for her expertise with ASX-related issues, which I wouldn't be surprised if they were raised today. So, as I said earlier, I will not read the rest of the opening statement. I'll leave that to your convenience.
Thank you, Chair. Before I give the go to Senator Bragg, can I just extend my thanks to you, Commissioner Armour. I think you've just done an outstanding job. I knew you by reputation and significance when I was a company secretary of an ASX-listed public company, and the Chair is absolutely correct in terms of your reputation, and then certainly my time on this committee and the Parliamentary Joint Standing Committee on Corporations Law and Financial Services. I've just found your contribution to be thoughtful, articulate, well prepared, and no doubt there's that underlying commitment to the public good which has driven all of your endeavours at ASIC. So can you please accept my personal best wishes, and I'm sure everyone else on the committee, with respect to your future endeavours, and thank you for the contribution you've made.
Thank you very much, Chair.
Senator Bragg.
Thanks, Chair. I just have one question to you, Chair Longo, and it's, I have to say that I commend you with your plain-speaking approach on this issue of cryptocurrency, and I think it's important that people in your position speak in a way that is clear and open, and I particularly like the way that you address the issue of the current state of affairs, which is that it's unregulated. I think that's really important. And my question is, there is a bit of conjecture about this information sheet that ASIC released, Info 269, discussing financial products and services online, and this is the one that is designed to deal with the so-called finfluencers.
I always have difficulty with that word.
Yeah, I find it very hard to keep a straight face at the best of times, so it's just another difficult issue we have to deal with. But look, my question is, does this apply to crypto? Because I think some of the reporting here is wrong. That my sense would be it doesn't apply to crypto because it's not a financial product. So could you just tidy that up for us, please?
Yes. Well, I'll make some remarks of a general nature, and then I will hand over to Kathy Armour, who's done a lot of work in this area. I think our concern is that it's generally not a financial product, but there are a lot of people out there purporting to give advice on this topic, and we're concerned that consumers and investors are not being misled by advice that is, frankly, they're not qualified to provide. Now, your earlier observation about the area not being regulated, I think we're all in agreement that this is an area that has to be regulated, and I know that's where it's heading. And ASIC will obviously work very closely with Treasury and Government to assisting in putting together a feasible regime that we can all work with. Okay. But I'll hand over to Kathy.
Before you do that, can I just be clear on this point? Because it's important to get this right, that the info sheet 269 is not directed at crypto because it's not a financial product, right?
Well, there are some, depending on what crypto or digital asset you're talking about, it might be a derivative. That could be a financial product. If it's an ETP, an exchange traded product, there are some products, financial products or services that could cover, in some respect, a digital asset or cryptocurrency. Yeah. But generally speaking, no, it's not covered. Yeah. But there are, and the reason I'm sort of putting it that way is that I am reminded by my own staff that there are some.
There's two or three.
Yeah, exactly.
There's two or three.
Yeah, but as a general proposition, I have to agree with you. It is an unregulated space, and generally speaking, most of the time is not a financial product or service. Okay. But I'll hand over to Kathy, who actually presented today at the AFR crypto conference, so she's very much on top of things.
He's about to go there.
I'm about to go there now.
Well, there you go.
So I really don't have anything much to add. I just don't think it's quite as cut and dried as perhaps has been represented, that crypto assets are not necessarily financial products. It depends on the way the assets are being delivered and sold, and as you know, derivatives over crypto assets or contracts for difference over Bitcoin, for example, are financial products. So that's some of the, I guess, the technical issues that create a little bit of complexity in this area.
Yeah, thanks for tidying that up. Thanks, Chair.
Okay. Thank you, and good luck with the contribution at the conference. And Brad,
you've
got fresh material. Who's seeking the call?
Me, thanks.
Senator Chisholm.
Thanks. I just had some questions around insolvency and the safe harbour provisions. I was hoping to get some data, which hopefully you have. How many businesses entered administration respectively in each of the last 3 years?
That particular data is not at my personal fingertips right now. I don't know whether my COO has it to hand.
For the sake of Hansard, Warren Day, COO at ASIC. Senator, we'd have to take that on notice, I'm sorry.
What about how many of those businesses have taken advantage of the new debt restructuring processes established by the government through the Corporations Amendment Corporate Insolvency Reforms Act? Would you have any data on that?
I'm not sure if we do, Senator, but again, I'm happy to take that on notice if you like.
Okay. So there's no one who can sort of give me any information about that?
It's a fairly specific data set you're talking about, Senator, so I apologise. I don't think we're vested with that information at this time.
Okay. What about whether ASIC has taken any enforcement action against small business restructuring professionals since the implementation of that Act?
You'd have to give, again, I don't know that I can answer that right now, Senator, but you'd have to probably, for the sake of ensuring we give you a good answer, be a bit clear about what you mean by a small business. I think you said restructuring professional?
Yep.
What do you mean by that? Do you mean insolvency a registered insolvency practitioner?
Yeah.
Okay, thank you. Well, again, I'll have to take that on notice.
Okay. How does ASIC intend to respond to the independent review of the Safe Harbour, particularly the recommendation to update Regulatory Guide 217?
I think we'd have to...
I don't know whether Chris Salandra knows anything about that.
I just don't think we're able to answer that question for you today, and again, take it on notice, Senator.
Okay. I've just got some follow-up questions around quality of advice. That's an issue that I think Senator O'Neill had been pursuing regarding question on notice 012 from the Parliamentary Joint Committee on Corporations and Financial Services.
inquiry into ASIC, the Takeovers Panel and Corporations Legislation number 1. Are you aware of that? It was lodged by Senator O'Neill on the 25th of July 2020.
Well, if you could refresh us on what the question was and what the response was, we might be able to answer that now.
So it's in response to a question on notice to the Parliamentary Joint Committee on Corporations and Financial Services, ASIC said that ASIC is also engaging external experts to undertake several pieces of research to further understand key issues related to access to advice. This research work will focus on 1, what financial decisions Australian consumers are required to make, 2, what factors contribute to cost of personal advice, and 3, what types of information an advisor is required to gather and analyse when advising a consumer to switch from a financial product which the consumer holds to a new product. Has ASIC released this research publicly?
Can I ask Danielle Press to comment on that, please?
Thank you. Danielle Press, Commissioner of ASIC. Senator, no, we haven't put that out publicly. It has been provided to Treasury and has now been taken over by the Quality of Advice Review that is currently underway.
Okay. So are you saying that it would be up to Treasury for that to be released publicly?
It will form part of the, I would expect that it would form part of the Quality of Advice Review. The information that we gathered did shift a little from that time as time went on, but the cost of advice piece, which I think is probably what you're most interested in, was a piece of information that we really gathered to underpin our internal thinking around advice, that it was never designed to be a public ruling.
Okay. Has ASIC engaged any experts since this period to undertake further work in these areas?
So that I'm completely accurate, I would need to take that on notice, but not to my knowledge. But that may be something that the team has taken.
Okay. I also had some questions on choice dashboards as well. When did ASIC start work on the choice product dashboards?
The choice, sorry, that would be me as well. The choice product dashboards, the instrument, the regulations haven't been made yet, so we haven't started work on the choice dashboard.
Okay. So nothing will happen until the regulations have been made. Is that effectively what you're saying?
That's correct.
Okay. So the start date for the choice product dashboard has been deferred a few times now, is that right?
Yes, that's correct.
Okay. How many times has it been deferred?
I would need to go back and take that on notice on the number of times we've deferred it, Senator.
Okay. Any idea when we can expect the regulations? Does that fall in your patch, Minister?
It does, and it's probably a question that would have been better directed to Markets Group, but we did discuss this, I think, last week, which was the trustee-directed products are intended to fall under the Your Future, Your Super regulations on the 1st of July this year, and that is still committed, where that's still a priority of this government, and I understand it would be a priority of the opposition as well, so that will continue to plough ahead. It's probably a question that you could also direct to APRA when they appear this afternoon.
Is ASIC aware of any stakeholders which have supported the deferral of the dashboards?
Not that I'm aware of, Senator.
Okay. Is ASIC aware of any stakeholders which have made representations to government, Treasury, or yourselves about the dashboards?
We've had some consultation on the dashboards. I would need to take on notice exactly what has been said on choice dashboards.
Okay. Thanks for that.
Yes. I have a few questions about how ASIC may or may not work with the ATO on issues related to unpaid super. Is that for you, Mr. Day? Or, yeah. We know that there's some billions of dollars a year in superannuation that's not paid to employees and is owed to them. During a previous estimates round, the ATO Commissioner said to the committee that not paying superannuation entitlements is, quote, a pragmatic business decision, end quote, made by businesses to stay afloat. And there's sort of been a couple of statements by the Tax Commissioner that, you know, it's broadly understandable that some businesses try to continue to trade when they don't have the cash flow and they draw on any reserve that they've kept for the payment of superannuation.
Senator Walsh, can I just clarify, because I'm aware that the Federal Commissioner of Taxation isn't here, and he also noted that he recognises the legalities of the situation, but he made that context from a practical cash flow reality.
He's not condoning it.
He
not
wasn't
condoning the
condoning
paper,
it,
neither would
yeah,
the government.
But I felt I needed to
Thank
at least
you.
put that on the Hansard. To you, Senator Walsh.
I think, Chair, you should have just let senators put their questions. I mean, I've quoted the Tax Commissioner from supplementary budget estimates from October. The quote is that he said it's a pragmatic business decision for businesses to do that. And my question is, what is ASIC's view on that statement? I mean, you know, obviously it can be taken as, you know, a comment by the Commissioner that, as stated, it's a pragmatic business decision, that it's somewhat understandable that business does this. So what is ASIC's view? Is it just a pragmatic business decision?
Thought, but I'll ask Commissioner Sean Hughes, who's done some work in this area, to comment on on ASIC's role in connection with this problem. Sean?
Yes, thank you, Chair, and Sean Hughes, Commissioner at ASIC, for the purposes of the Hansard. So, Senator, we are aware of the comments that were made by Commissioner Jordan, and we've also noted the report from the Senate published in March of this year. The first thing I'd say is that ASIC does have a very close relationship, not just with the ATO, but also with Fair Work Ombudsman and with a number of other agencies that are members, both of the Phoenix Task Force and the Serious Financial Crime Task Force. We don't generally, as a matter of speaking, get direct referrals from other agencies about particular matters or companies where superannuation or other wage entitlements have not been paid. However, where we do receive information, it will be generally from a registered liquidator as part of that practitioner's report to ASIC in relation to winding up. Now, where we do identify that there has been a failure by directors to comply with their obligations, that may well give us grounds for taking action to disqualify a director from managing a corporation. And in fact, only recently we relied on some work done by the Fair Work Ombudsman to take such action. Now, the focus of those actions is around the jurisdiction ASIC has in relation to corporate governance and directors' duties. It's not to secure the return of entitlements that employees might have, but through the Phoenix Task Force and the Serious Financial Crime Task Force, we certainly do collate that evidence together. But leaving that aside, Senator, I don't think it's appropriate for ASIC to be commenting on the evidence given by Commissioner Jordan.
Thank you. You've said that you are aware of the comments that were made by Mr. Jordan, and you've also said that you're aware of the Senate Committee's report into unlawful underpayment. That's what you were referring to there, was it, Mr Hughes?
Yes, Senator, that's correct.
Yeah. I suppose, I mean, does ASIC think that, does ASIC think that it would be appropriate for entities that you regulate to sort of continue to trade on the basis of, money that is being held in reserve for superannuation but not being paid to employees as superannuation?
Well, what I would say, Senator, is that is information that we're reliant on others providing to us, and the primary source of that information would be registered liquidators or other sources of information that would give us that information. The likelihood is, because superannuation guarantee payments are paid quarterly, that information may not come to us until some way down the track. The other point I would make is that in a winding up of a company, the employees' entitlements, such as wages and superannuation, will rank relatively highly, I think second in terms of order of priority. However, again, that is something that ASIC would receive information from the liquidators on. It would be rare for us to get that information from the ATO in relation to a specific case. However, as I mentioned before, we recently took action against Mr. Enrico Pucci in the last month or so in relation to disqualifying him from managing a corporation where the Fair Work Ombudsman had found that there had been a succession of misconduct by him in relation to employee entitlement. So where we do get that information, we do have the powers at our disposal to take action, but more in the nature of disciplinary action than compensation recovery.
Okay, thank you. So essentially you're saying that in the vast majority of cases, the information of this sort of practice of some businesses only comes to you at the point of liquidation. At the moment, when a worker notifies the ATO that there's an outstanding superannuation balance, the ATO investigates that and comes to some sort of resolution with the business to try to pay it back. Is there any communication between the ATO and ASIC in regards to businesses that have been found to owe superannuation before it might get to liquidation?
I'm not aware of any at this point. There's certainly mechanisms under information sharing arrangements between the two agencies for that information to be passed, but we would have to take on notice whether there had been any specific instances of that taking place in the past.
Okay. So you went to information sharing there. Is this the sort of information that could be shared between the ATO and ASIC as far as you're aware?
I certainly believe it would be within the realm of information that could be shared between the two agencies. And as I say, for the most part, the information that is shared is of a generic nature or industry or sector specific rather than entity specific.
Okay, so the ATO has said that they believe that some employers trade while effectively insolvent, using their superannuation sort of reserves as a pragmatic decision to sort of try to stay afloat for a period. Does the ATO ever flag those businesses that may potentially be trading while otherwise insolvent to ASIC?
Well, I just want to correct, Senator, just to be very clear for the record, that a failure to pay superannuation entitlements may not of itself be an indicator of insolvency. It may be or it may not be. There may be other reserves on which the company can draw on to make those payments. So it's very difficult to generalise in relation to the point you were making to specific instances. We would have to take on notice whether there had been any specific matters drawn to our attention. But as I say, the primary actor in relation to an event of insolvency will be the liquidator, and ASIC has to rely on the report of the liquidator as to whether that person, the registered liquidator, believes that there has been trading while insolvent, and we would take up those referrals very seriously.
I think you might have lost me a little bit there, Mr. Hughes. So I think the ATO is saying that in their experience, people try to use the super reserves that they've set aside to keep trading while they might be otherwise insolvent. And you've said there might be other things at play there. But they effectively. Sorry, and I didn't mean to cut you off. I'm just trying to understand all of this, really. So, I mean, they effectively say that they think that they see this, you know, that their own investigations reveal that, you know, there are companies that are not paying superannuation. The ATO has a look. Looks like they're in trouble, but they, as far as we know, they don't refer them to you.
Well, I don't believe I've said that, Senator. What I've said is that we would need to take on notice whether there have been any specific referrals of entities or directors who have not paid superannuation entitlements to their employees, which would otherwise have avoided an insolvency. The point I was making was that a failure to pay superannuation guarantee entitlements may not of itself be an indication of insolvency. That's
Sure.
something that would have to be on the specific case.
Sure.
But what ASIC does rely on is whether the registered liquidator of a company which is wound up then reports to ASIC and says that there has been a failure to pay those entitlements which gave rise or which avoided the act of insolvency, and therefore there is a reasonable suspicion of trading while insolvent. Now, again, I can't generalise in relation to the matters that you're talking about, whether there have been specific instances where the ATO is aware. We would need to take that on notice.
And might I add, Senator, in a lot of those cases, in fact, there will be a tax debt, and as Australia's effectively biggest creditor, the ATO is more likely then to seek winding up of that company through its role as effectively a creditor of the company, which it does, you know, regularly and often, and on that basis would move the company into the hands of a registered liquidator or an external administrator much more quickly that way. And that's some of the things that we previously discussed with the ATO, and they tend to do that more often than not. And in that circumstance, then, as Commissioner Hughes has said, we would then wait for the report from the external administrator, which gives us the evidence base then to effectively prosecute the directors for insolvent trading.
Yeah. Which I suppose, if I sort of just put it in very layperson's term, is it's all sort of too late at that point, isn't it?
And I think that's probably one of the things that Commissioner Jordan may have been getting at, is that by then there's the amount of debts that are racking up for that company are quite huge. Obviously not just in relation to unpaid super, but obviously then for other creditors, tax debts owed to the Commonwealth, you know, via the ATO, etc. So at that point then, you know, they are, to borrow a phrase, clutching at straws, and the ATO sees the quickest route, I would expect, is to actually have them wound up under their own hand as the creditor of the company for unpaid taxes.
Senator Walsh, I do need to share the call. So do you have one more question on this topic?
Has ASIC publicised any actions that have been taken against ASIC-regulated entities that have been found of improperly using employees' superannuation entitlements to continue to trade while effectively insolvent?
So, Senator, we would need to take that specific one on notice, but I would just remind you of the case I referred to before, Mr Pucci, who we disqualified from managing corporations, relying in part on work that had been done by the Fair Work Ombudsman in relation to employee entitlements and breaches in relation to its administered regime.
Mm.
And that was an outcome only in the last week or so.
Thank you,
That's
Senator
okay.
Walsh.
Thank you, Chair.
Thank you. Senator Rennick.
I just
It's a rhetorical question.
Yep. Look, I'd like to refer you to page 210 of the 2021 ASIC annual report. In 2021, you received 10,711 complaints of misconduct and only approved 110 formal Section 13 investigations. 65% of complaints of misconduct resulted in no further action. Can ASIC please explain why so many complaints are resulting in no further action? 65% seems quite high.
So, if I may, Senator, I don't have that in front of me, but the thing I would say is I would hazard a guess. In fact, there's more than that number of Section 13 file notes that are actually issued in a given year.
Yep.
The other thing I would say is that probably relates to the number of investigations that have ended up in an outcome that have come from those complaints.
Sure.
And obviously ASIC takes a large number of investigations of its own volition without the basis of a complaint being the initiator of that. In terms of those 10,000 complaints, there's a wide range of matters, given ASIC's wide remit, that will be included in there. And they are just that. They are effectively alleged, allegations of misconduct that often don't have the evidence, or may be out of jurisdiction, or may actually be for another regulator, or may be out of time. There's a whole range of things at play there. So I think it's a hard and difficult comparison to say the number of investigations we've taken and the number we've completed against the number of reports of misconduct we will get from the general public. Because then on top of that, we've obviously got the number of breach reports that we get from industry.
Sure.
On top of that, again, we'll get the number of reports that we will get from insolvency practitioners as well. And so with ASIC's resources, we've got to decide which of those is the higher priority, because we can't get to everything.
Yeah,
but our team, we've got a dedicated team that goes through those complaints.
How many is in that team?
Approximately somewhere between about 70 and 80 people nationwide. And they're acting as effectively a triage, clearinghouse and first level of analysis on a number of on those matters. And again, within that are complaints such as two people get into business together, form a company, become directors with a bright idea, and then 5 years later hate each other. And they write to us and say, each of them separately will write to us and say about the other person that they're awful people. And of course, in that circumstance, we don't think, using that as an example, it's a very simple one, I don't think the public would expect us to use our finite resources on a matter of that. And what we do is then say to them, go and get some legal advice and sort it out between yourselves.
Okay.
And it was that simple in politics.
Yep.
No worries. There have been numerous reviews in ASIC's performance in the past decade, including the 2014 Senate inquiry into ASIC, the Banking Royal Commission, and the 2021 Senate inquiry into the Sterling Income Trust. All of these reviews point to ASIC having a reactive culture and not taking timely and adequate action in response to corporate misconduct. Doesn't the 2021 ASIC annual report suggest that ASIC hasn't learned any lessons in the past decade?
There you go, Chair.
I might take that one. You might take that. Oh, I think that's a misreading of that annual report, and I don't think the content of the annual report supports that proposition. As I've even before I started, ASIC was an active litigator, and a lot of our matters are actually litigated or prompted by our own action, as Mr. Day pointed out. I've been asked the last 10 months or so about our approach to enforcement. I think it's active, targeted, credible. We're probably one of the most active regulatory litigators in the country. There isn't a day that doesn't pass when ASIC isn't in court, either a civil court or a criminal court. And I'm not talking about magistrates' court, I'm talking about superior courts all around the country.
So what about the Sterling Income Trust? Because that was a pretty bad example, I thought of,
Well, the Sterling Income Trust has been the subject, as we're all aware, of a Senate inquiry, and I don't see that as a good example of the problem you're referring to, or the suggestion you're referring to. It's a big report, represents several days of evidence. Is there something specific about that report that I can help you with? But overall, the ASIC's response to those issues, there are aspects, as we know from the report, where I think ASIC had some, it could have, for example, published its stop order more widely in September 2017. but it's well to remember that that was a structured product where, a very unusual structured product where the state regulatory authorities were aware of it before we were, came to our attention and we took some action. It's a big subject, Senator.
Okay, yeah, right.
I don't think it's a good example of what you're getting.
To your question, I mean, you can pick out one or two examples, and I'm not by any way denigrating or belittling the example you've given. It's a very serious and very tragic circumstance. But there's a whole range of efforts and activities that ASIC has across the organisation that are aimed at being proactive. And in fact, picking out enforcement of itself is actually a difficult example, because it is always by its nature reactive, in terms of there's a circumstance that's already occurred. But if you look at the work that we've done in a range of our surveillance
I disagree with that,
activities...
because there's a lot of regulated products in the past that have ended up in tiers. So anyway, go on.
I'm sure they have.
Yeah.
But again, there's a certain amount of choice that's available there, and the laws that the Parliament has passed allows a certain number of products that other people, yourself or others might say are highly risky and shouldn't be offered to the general public, but that's not what the laws provide. And there's a certain level of vetting that the Parliament requires that ASIC ensures is done through the legislation.
Yeah. Okay,
But there's a lot of work that we do that prevents loss, prevents harm ahead of time, from our surveillance activities, from the regulatory guides we issue, from the ways that the offerers of these products and services effectively change their behaviour to ensure we get that. A lot of those you'll never see, certainly in terms of the work that our regulatory guides do in cleaning up the offering of those products. And of course, because there's no complaints about those and there's no loss involved with those. But again, there's a whole range of activities that's based on our data activities, our institutional supervision, a whole range of things that are involved that actually are proactive and in fact have identified enforcement activity that needs to be taken often before the public will know that. We see that also in our markets efforts, our market surveillance efforts, by in that area of regulating the stock market. We often will see harm likely to occur before we get a complaint about it. As
sure.
I think this committee and the PJC have had presentations about.
Okay, thanks. Last question. So, in regards to regulated products, or more to the point, I guess, an unregulated product, with respect to 763C of the Corporations Act, financial product is defined if a person manages financial risk. Given that investors purchase physical gold and silver to manage the risk of inflation and financial instability, is it possible that physical bullion could be considered a financial product by virtue of meeting the definition outlined in 763?
So you're asking, so you're asking whether gold is a financial product?
Yeah.
It isn't.
It isn't, that's right. But given that it's basically used to manage financial risk via this section, could we deem it to be a financial product?
Historically, there's been some value placed on gold as for that purpose, but I don't think I could take that any further today.
Well, I'd argue gold is the oldest financial product going around.
Yeah.
And given that there's a lot of money invested in gold in Australia,
I'm not sure it's a
by
financial
investors-
product. It's a commodity that over time culturally.
Well, that's true. It's a commodity, but it's also a financial instrument as well.
It's not necessarily. It's a big subject. Gold's been around for thousands of years.
That's what I mean.
But people have been besotted by it as a way of dealing with inflation. I think historians would say that the role of gold for that purpose is overstated. And
that's right. So it's dealt with inflation, but also when countries fall, so their currency suddenly becomes worthless. People don't escape with big suitcases of dollar bills. They escape with gold because they know that's what will be accepted in another country.
Yeah.
So it's when you leave the island rather than you're on the island. That's the whole point of gold, is that it stays beyond.
These suitcases.
I've got views about where gold is in the way things work in our economy, but we don't regulate gold. We have a fiat currency. We don't have the gold standard anymore.
Yep.
That's been the case for many years. There are various ways of people trying to protect themselves from inflation, and some people think gold's a good thing, but that's a matter for them.
But you don't think it should be regulated as a financial product, even though a lot of people invest in it?
It's a matter for government, but I personally don't see a strong need to regulate gold.
That's all.
Okay, thank you, Senator Rennick. Commissioner Armour, I've got a few questions for you before you leave your last estimates. I can't resist. the opportunity, and I'll keep it very short because we are running a bit behind time. But are you aware of the announcement which the ASX provided on 28 March 22 with respect to the progress of the CHESS replacement project?
Yes, I am aware, Senator.
Okay. And are you comfortable from your perspective that ASIC has all of the procedures and mechanisms in place to maintain its supervision of the ongoing rolling out of the CHESS replacement project, given how important that financial markets infrastructure is to the functioning of our markets?
Yes, I believe we do, Senator. We, as you're aware, we incorporated additional licence conditions into the licences of the clearing and the settlement entities that are involved in the CHESS replacement program to bolster, if you like, our supervision of that program, and we are in constant dialogue with the ASX on the program and its progress.
Okay, I was going to ask you about the dialogue with the ASX, but you've answered that question. One of the questions that has been raised in a previous forum, I can't remember if it was in this estimates forum or in the PJS forum in relation to corporations law, is in relation to ASIC's line of dialogue or communication lines with other material stakeholders, including other market participants, with respect to the CHESS replacement project. Can you provide an update as to the forums you have in place to make sure you're getting the information from the market participants directly and their views with respect to the rolling out of the CHESS replacement project?
Yes, so that was a really constructive suggestion that came, I think, at a PJC meeting, that we sort of more independently, if you like, have discussions with the various stakeholders in the equities market. And so as a result of that, we have been embarking on a process of direct engagement. For example, we've been meeting with some of the major software providers, so the major technology providers to market participants, and those technology providers will need to be able to operate on the new CHESS replacement platform, and we have separately begun a program of very determinedly talking to market participants and other parties that are in the ecosystem that will be impacted by the CHESS program.
Okay, excellent. Well, thank you very much for that. You handled those questions as well as you always handle questions in this estimates forum and every other forum I've encountered you. So you certainly do go with our best wishes, Ms Armour. I think that's it we have for ASIC. No other questions for ASIC. So thank you, representatives of ASIC, for joining us. Do you want a break, Anthony, for 5 minutes?
Completely up to you.
Okay, we might just break, if we could, just quickly for 5 minutes whilst the ACCC joins us. Thank you. And welcome to the new chair of the ACCC. Very good to see you at your first appearance at Estimates. So I hope you enjoyed the process. Ms Cass-Gottlieb, do you have an opening statement you'd like to make?
I don't have a formal opening statement that I want to tender, but if I might make a very brief set of opening remarks.
Absolutely.
I'd be grateful. Thank you very much, Chair. So I'm deeply honoured to be appointed and to commence the position as the chair of the ACCC. This is my third week. It has been a compelling and exciting 2.5 weeks. In introducing me to the wide span of critical work of the ACCC across promotion of competition, protection of consumers and small business in multiple industries. I am very pleased to be able to be here, to be accountable to the committee and to be able to answer questions together with the senior executive and my colleagues, so we're keen and interested to hear your questions.
Excellent. Senator Chisholm, are you seeking the call?
Yeah, I'm happy with that, thank you. I just was just going to start with some of the public statements you made in some of the media interviews you did when you started. So one was around vowing to target petrol and food retailers who exploit anxiety from recent flood disasters, the pandemic, Russian invasion, so gouging of prices, which obviously is a big focus at the moment. I was just wondering if you could provide us with a bit more of an assessment of how you plan to do that and what resources you think you have at your disposal to be able to assist Australians in doing that service.
So we're very conscious of the difficulty, cost of living pressures that the community is facing. We have a manifest role and direction from the Minister in respect of monitoring petrol in relation to grocery and other sectors that have been impacted by the supply chain pressures of COVID and post as a result of the invasion of Ukraine. We're also conscious of those increasing costs. We are both monitoring the reports that we get from consumers. We are active watching their sort of referring to those comments in relation to exploiting the anxiety and position of consumers, that where there are misleading, fraudulent statements, unconscionable conduct that targets particularly vulnerable consumers. We have enforcement teams who regularly take action in relation to those areas of those forms of conduct that are in breach of the clear provisions in the Australian consumer law. So the teams are the teams that are already standing and very active, and the committee will have seen in multiple actions that are taken relating to conduct that misleads consumers, that takes action to put them in situations where they are making decisions on the basis of misleading and fraudulent information. Suppliers do have the capacity to set prices. If suppliers do so in an anti-competitive fashion, the Commission has its powers under the anti-competitive conduct prohibitions in the Act to also act. So we're watching closely, and we're watching for any activity that appears to be coordinated or collusive, and we're doing that in addition with international regulators as well in the supply chain, but we're also through our scanning and monitoring activities watching for misleading and deceptive conduct in relation to this pricing situation.
And what about specifically, just thinking about the floods in southeast Queensland and northern New South Wales as well, in regards to building products? There's obviously, even pre the floods, there's been issues on supply and also cost. There's obviously a risk that that's accentuated given what's gone on in the first few months of this year. Is there anything in particular that you're looking at in regards to that action?
So we have a construction unit. I should check that team has experience and watches this sector in terms of construction materials.
Senator Scott Gregson, Chief Executive Officer now of the ACCC. Just to further the Chair's responses, our focus can be quite broad, but we really hone in on whether there's misrepresentations, whether there might be anti-competitive conduct. It's not unusual for us to show elevated interest at times of disruption, and we do have a convergence of a few disruptions, as the Chair mentioned. So we would pick up concerns that come through our industry engagement, through our reports to the ACCC, and where we do see any instances there where there might be misrepresentations, conduct that could be considered elevated and closer to unconscionable, or any sense of anti-competitive conduct, that's when we would have our investigation teams. And as the Chair mentioned, we have a particular focus on construction with teams actively involved in that sector. So that's a further avenue in which we get material in and deploy our resources where needed. But in many respects, this isn't uncommon. We step up and show elevated interest at any moments of disruption in the marketplace.
Is there any update you can give us on the action that you're taking against Meta in terms of their advertising? I think is it before the courts right now?
So yes, we have filed the proceedings. It will commence going through the usual court process. Because it's before the courts, we're not able to go into detail in relation to the matters and the evidence that we will be filing there.
So just on the tech sector and more generally, the ACCC has been very active in the tech sector over recent years. Do you expect that will continue under your leadership? And is there, we had a bit of a chat earlier with ASIC about crypto. Is there a particular focus that you will have in this area, or is it a relatively broad remit?
So there are two aspects there. I will be continuing the same focus that the Commission has had and has led in respect of in relation to digital platforms. They are significant providers both across our economy to Australian businesses, large and small, in terms of facilitating their business activities, and critical in terms of the supply of services to consumers. And we are continuing our process of our inquiries in that regard, and we have a very significant one currently underway, our fifth one, having given our fourth report to the Treasurer and in relation to online marketplaces, and our fifth one in relation to the regulatory framework is currently underway, including with surveys that we are putting out to consumers and to small business and to businesses in order to get the input in relation to cryptocurrencies. So that also spans into our financial services involvement, and in relation to financial services and payment services, the ACCC is strongly active. It is doing so both where we see conduct, whether in relation to anti-competitive conduct or scams, for instance. So in relation to ScamWatch, we see a number of scams relating to investment schemes, and we are now seeing that the payments in relation to those are now more often by way of cryptocurrency than by way of bank transfer. So there are intersections there with what you're saying with work that we are doing. We also are working closely with ASIC in relation to how to disrupt such scams that have the cryptocurrency and other types of payment means. We have seen a 110% increase in financial losses in the first 3 months of this year as compared to the prior 3 months, or the same 3 months last year, in relation to scams, in relation to investment schemes. So you can be assured, under my leadership, the ACCC is very focused on these two areas of risk, potential risk and harm.
Okay. Is 110% increase over the first 3 months of this year, was that correct?
Let me go to the exact data and tell you the exact figures. So, actually, it's a 90% increase in losses. So so let me give you some comparisons. In 2021, ScamWatch received 288,622 reports, with more than 323 million in reported losses, which was up 84.3% from 2020. So their financial losses from scams. Between 1 January and 20 March 22, ScamWatch received 49,548 reports with 103 million reported loss, which it represents a 90% increase in losses in the comparable 3 months.
Wow. And is there are you able to provide any sort of detail as to what you think is causing that? Is the growth been in technology-based
frauds?
So let me give you one more fact which helps give some insight, but then I will also ask Rami Gress, who's here with us, to give some more detail as to what we can discern on this uptick, which we've only just been observing. So losses to investment scams have increased in terms of financial losses by 180% to 72 million, with cryptocurrency overtaking bank transfer as the most common payment method. So the best, in part, we can say is that as there is an increased prevalence of a capacity for there to be greater financial savings in effect at risk because of the manner of the scam. In the same time, we are seeing reports about phone-based scams decreasing by 50%. So we believe that's in part because of disruption by the telecommunications companies, alerted by and with information that ScamWatch is providing them. So in part, some of it is it's diverted from one method into another method that has a higher propensity for financial risk. But I'll just get Rami to...
Thank you, Senator. Rami Gress, Executive General Manager, Consumer and Fair Trading. Can I just start by saying about the statistics? As sobering as they are, our data shows that only 12% of scams are actually reported, so those figures need to be seen through that lens. In relation to your question about cryptocurrency, we can discern that the reasons for the increase in those sort of investment scams tracks the popularity of the product, but moreover, it's also the fact that it's an unregulated product. So there are no controls, there are no institutions that can be roped in to assist. So really, it's the fact that it's the Wild West.
And is there any evidence as to, is this people being cold called, or is it online ads that sort of get people? Like, have you got any way of discerning that?
I think it's multi-channel. So you referenced our recently filed action against Facebook. So the heart of that factually is about scammers posting cryptocurrency advertisements and capturing people. Also, it's just the fact that people are drawn into these scams through other means. So people might meet someone through a dating or friendship site and then be drawn into a crypto scam that way. So it's really multi-channel. I don't think there's one particular area that you can target. It's across the board.
Okay. Minister, Mr. Grease sitting beside you just described this as the Wild West. It would be your remit to have some regulations in this space, wouldn't it?
Yeah, and that's exactly what we've announced,
Wow.
Senator Chisholm, which I think is really important. You know, while
Sounds like it's too late for a lot of people.
cryptocurrency itself is, permissionless and trustless, what we have said is we're going to regulate the intermediaries, the third-party providers, if you like, the brokers and the custodians and the exchanges, so that there is a equivalent of a sort of a heart tick of approval on these third parties through which cryptocurrencies are traded or held or exchanged. And that way, Australian investors can have a certain level of confidence that what they're investing in is real. And that licensing regime, there's consultation papers that are out right now, but it'll include things like a fit and proper person test. It might include things like anti-hawking measures, so you don't get called up. You know if you get called up by somebody that's not a licensed a licensed provider. So we think that this is possibly the best way forward to make sure that we can encourage the innovation in the cryptocurrency space, because that blockchain technology really is an enormous opportunity in so many ways. We wouldn't want to stifle technology, but at the same time, we want to make sure that people can invest in cryptocurrency in as safe a framework as possible.
Well, it just seems that it's been going on now and growing, and this isn't going to be in place 4 months now, because the election is obviously imminent. So there's going to be a lot more Australians ripped off as a result of government inaction.
Well, I think that it's safe to say that some of these scams that you are referring to aren't necessarily purely cryptocurrency scams. They're traditional scams. It's just that cryptocurrency happens to be part of the title or involved. Or, I heard of one where people were calling up asking, unsuspecting victims to invest in traditional assets, but in fact investing them in cryptocurrency where they then couldn't access them. So there's, the dating sites, for instance, there's plenty of scams on dating sites that aren't necessarily that involve cryptocurrency, but aren't cryptocurrency scams. So, we see that this is a growing area, and that's why we've progressed the idea of regulating these frameworks. And look, I think there's been some really good work that's been done, particularly around this committee and around Senator Bragg's committee, as to how we could best go about that, navigating a way forward to ensure that people that want to invest in cryptocurrencies in Australia can do so in a safe environment. But at the same time, let's be honest, it's not government's role to ban investments in cryptocurrency. We don't think that that's a good idea. I do know that my counterpart in Mr. Jones at one stage was talking about banning investments in cryptocurrencies above $10,000, along with sort of cash bans that were considered some time ago. We don't think that that's the right way to go. We want to see a thriving technology sector and to encourage innovation in this space, but at the same time we want to make sure that consumers are protected from the harms of fraudsters.
Senator Chisholm, I need to share the call. Have you got one last question on this topic?
I do, on a different topic, but it's one last question, so half right.
That passes the test.
I was just interested, you also made comment in public comment around targeting greenwashing as well.
Yes.
I just wanted to try and get a sense of why you think that's important, but how you would actually go about tackling some of those claims.
Thank you, Senator. We think it's important for two key reasons. Increasingly, consumers are concerned about the environmental impacts of their purchases, and they treat as important the claims that are made as to sustainability and environmentally friendly products. So we do want, where consumers are taking this into account in their purchases, that if it is a misrepresentation, that action is taken. The second reason is that we're conscious of the unfair competition that occurs when businesses do invest in making their production processes sustainable and with less environmental impact. If they are competing with a rival who is misrepresenting that they're doing so, actually we're not giving the right incentives and return to the businesses who actually genuinely invest in this. So they're the two reasons we're doing so. The way in which we are going about this is in many ways using the tried and true skills of our investigatory teams who sit in Rami Gress's team in respect of the misleading and deceptive conduct. What we are doing is we are watching where there are comparative advertising and points such as this, with a key emphasis on environmental credentials. And we are also receiving at times complaints either from consumers who are worried about it or from competitors who are concerned that they are facing unfair competition from a party that's claiming green credentials when they can't substantiate that they have green credentials.
Thanks, Chair.
Thank you, Senator Chisholm. Chair, I had a few general questions, so welcome to the position. My first question was in relation to your approach. And one of the issues that I've pondered on, I don't necessarily have the answer, and so I'm seeking your view, is the role you should take as chair in terms of either A, strongly prosecuting a case for particular law reform in an area, or B, considering arguments made by others who are prosecuting a case for reform in a particular area, and then having the benefit of taking a more objective stance in terms of collating evidence and considering the role of stakeholders, and then providing a view which is perhaps seen in that context as more objective than if you adopted the first approach. I'm interested in your response to that question about approach. And as I say, I don't necessarily have a particular view, but I'm interested in the thought that you've given to how you want to prosecute or weigh up your role in terms of potential law reform.
It's an interesting question, and I think, Chair, that it will come from both sources. I think that the Commission has many well-established and very important stakeholder engagement and consultative processes with parties across the economy, closely with consumers, both individually, just through their calls in through our info centre, with consumer associations, with a whole range of small business associations, and with larger businesses. And so we are consulting. That consultation feeds into our enforcement and compliance priorities, and it also feeds into where parties are giving us submissions that the law is not currently able to meet the need. Where the Commission, ACCC, takes its own initiative in this regard is actually through, on my observation, its experience, Chair, through either running cases and being concerned about the outcomes, facing issues that might come through reports to us where we feel there is too much doubt about the powers that we have. So I think that it comes from a body of experience and concern, knowing what our statutory mandate is and what the community looks to us to do. I think it's deeply informed by that experience. And that's the way I think it should be. And I think both processes are objective, actually, and should be grounded in objective experience of where we consider that the current law and our current powers are insufficient to protect what we are charged to protect in the public interest.
Well, that's the thoughtful answer I expected, and I can see the sense in that, and I can see how both limbs, if you like, of approach can be objective. The only query I put to you as a follow-up question is, if you adopt the first approach, if the Commission adopts the first approach of strongly proposing a reform in what's a contested policy area,
yes,
then it may well be objective, but there is the issue of the Commission then being seen to be, on a subjective basis, prosecuting a particular reform agenda. Do you note that tension?
I do note that tension, Chair, and the ACCC is aware, and I am aware, that the decision ultimately in terms of reform and policy will be a government decision. And that while we may, where we think it appropriate, prosecute with our evidence what we think is worth consideration, it will be a government decision, and then we will implement it in accordance with the government decision.
Okay. I want to move on to another topic, and I'm alive to the fact there might be issues where you might prefer one of your officers to respond to this question. But I did ask questions at the last estimates in relation to the ANZ Bank criminal cartel case prosecution, and in particular, I asked questions in relation to what processes the ACCC would be putting in place to review the conduct of that case and decisions which had perhaps been made by the ACCC along that journey to obtain learnings from that case. So I'm interested in obtaining an update with respect to whether or not any processes have actually been put in place, whether or not that internal process of consideration of how that that long case progressed, and whether or not it will potentially impact on approach of the ACCC in terms of considering future, even major pieces of litigation, to be frank.
So,
Mr. Greg, sorry.
I'll just thank you, Chair. We, as previously answered to the committee, the ACCC has commenced a review of the lessons to be learnt, and that is reporting to our CEO, to Mr. Gregson. We do recognise how important this process is, because if we look narrowly to start, you've commented in more broadly in major litigation, but if we look narrowly in terms of cartel conduct, it is a conduct which of its absolute nature, where there is evidence of it, is anti-competitive, and where it's serious, it's important that we prepare ourselves and are ready to refer it to the CDPP where it's serious cartel conduct. So we recognise it's important to learn the lessons. Mr. Gregson can give more detail on the progress of that review.
I won't add much, Chair. Just to note things that might interest you, this capturing of lessons will have the capacity to look at broader portfolio of activity that we've undertaken. These things don't happen in a silo. We're often looking at other matters, so we'll try and be thoughtful about the way we capture further information. And I should say that my assessment is that our teams are highly professional and dedicated, and they're actually used to sort of reviewing how matters go and participating, and they're sort of really looking to capture the lessons, including things that we did for the first time, and lessons of things that we can do in the next matter. So that process is well and truly underway.
Okay, excellent. I'm going to change, well, not completely change topic, but to some extent it's related to both my first and second question. And that is in relation to Australia's criminal cartel provisions, statutory provisions. And I suspect you're well familiar with some of the remarks that have been made by a number of, including a member of the judiciary, with respect to Australia's criminal cartel laws, and a number of experts in the field have also posited that perhaps there needs to be some sort of review of our criminal cartel laws to make them simpler and easier to enforce. Chair, do you have any views on that matter, or is it something which you may consider in future months?
It is a topic that not only will I consider, but will consider with the enforcement team and more broadly with our investigative and legal teams. We do have currently a number of cartel prosecutions occurring civilly.
Sure.
We are aware that the provisions are highly codified and very specific, and that does produce a set of quite a number of key elements that need to be proved in order to sustain contravention. We do consider that they are capable of being proved, and that we can put the cases to the courts, and we do have a few currently already commenced that are before the courts. So we recognise the burden of those elements, but we consider we have both the legal experience and the investigative experience to be able to discharge that. But we will watch it carefully.
Okay, thank you. My last question is in relation to monitoring of petrol prices. So obviously there was an announcement in the budget to halve the fuel excise amount over the next 6 months, which is of material importance to people, families across Australia in terms of their cost of living. What processes does the ACCC have in place to monitor petrol prices to make sure consumers are getting the full benefit of that fuel excise cut?
So immediately upon the announcement in the budget, we wrote to each of the major wholesalers and retailers. We informed them that our expectation is that the cut will be passed through in full, that we will be monitoring their prices, and that we also asked them to respond to us, to inform us, and we have just received their responses, to inform us as to their policies, as to how they were going to pass it through, and so that we would be able to monitor and assure ourselves as to determine that that was occurring. We now, 1 week on, can see in the 5 major capital cities that the prices have fallen from 25 cents to 35 cents, as between Sydney, Melbourne, Brisbane, Adelaide and Perth. And we can see in some of the smaller capital cities, this is of regular unleaded petrol, that it's somewhat lower but not much lower. So that in Canberra, Hobart and Darwin, it's between 19 and 24 cents per litre so far. So we can see, and we have concluded that substantially the cut in excise has passed through in the capital cities.
My understanding, Chair, is there's a bit of a lag involved in terms of it, the full cut coming through, because the fuel excise is levied at the time of delivery of say, a fuel stock for a petrol station. So it's only once a petrol station goes through that fuel stock that it then has fuel which is subject to the levy which has been halved. Is that correct?
It is correct, Chair, because it has already been levied and paid. And so what we have seen over this past week is the turnover in effect of the prior stocks, and therefore in petrol stations that have a higher turnover, that this will has come through more quickly than in others.
Okay. And so given it's the policy's working as the government intended in terms of the saving being passed through to the consumers, what role does the ACCC have on an ongoing basis to monitor prices?
We're conscious that this is in place for 6 months, and that we expect it to be passed through in full for the full period. We are gathering data and we are reporting on it in our weekly update on our website each week, so that retailers and wholesalers know we're going to continue to monitor and to report if there is any diminution in the way this is being passed through.
Excellent. Okay. I'm sharing the call. Senator Walsh, are you? Senator Chisholm, any more questions for ACCC? Senator McDonald.
Yeah, sorry, I just want to keep going with this fuel price issue. So I've got a fuel supplier in North Queensland, a freight operator, who has emailed to all of his customers advising that as of the 4th of April, which was Monday, he was increasing his fuel levy from 18% to 21%, based on BP advising that the barrel price had increased 8.463 cents. So how are you managing consumers who aren't necessarily tracking the Singapore barrel price each week? Because there is an expectation that all prices will fall.
So one aspect that would be useful to understand there is if we consider it's in relation to diesel to commercial customers or diesel or unleaded petrol to personal motorists. In terms of personal motorists, we are reporting on both regular unleaded petrol and diesel. We're giving alerts as to whether we consider that prices in the usual cycling of prices, if it is in a location that has price cycling, whether to deter purchases or to engage in the purchases promptly. And we are also encouraging our consumers to use their state-based free petrol price apps, because we can see that a range of retailers have a range of competitive responses, so that some are passing through more quickly than others, quite possibly because of that they're a higher volume. And so that we're in
commercial supply.
So in the commercial situation, we are aware that there can be some differences relating to the contracts that are in place for commercial supply as distinct to the immediate competitive pricing that's occurring at the Bowser for personal consumption. We are seeking to become better informed. I think we have been made informed, Senator, about that situation in North Queensland, and we are seeking to become better informed about it to make sure we understand the situation. Matthew Schroeder, who's actually on the screen, is from our fuel team, because we have a team and may be in a position to give some more response on that.
Sure, thank you. Through the Chair. Look, diesel is a slightly different situation to petrol. Most diesel is sold through contracts and their commercial arrangements. There isn't as much transparency around those commercial arrangements as there is around the sales that are happening to consumers. As the ACCC Chair said, we've been seeing diesel prices come down with the excise. That's including in regional areas. So in Cairns and Townsville, for example, prices have come down between 15 and 20 cents per litre on diesel, reflecting the reduction in excise. But with those commercial contracts, made aware by groups including the Queensland Association.
You're just breaking up a little.
Perhaps if you could try turning his camera off.
Could you? I'm just wondering if you could try.
Yes.
Please. Yep.
I'll turn my camera off. Hopefully this will help.
It's better.
It has. Thank you.
Oh, good. Okay. One of the issues with this is that the normal way in which we get pricing information, both from commercial providers and our own analysis, doesn't have transparency around those commercial contracts. We are aware from some discussions with some of the trucking associations of this issue. We're looking further into it. We would expect that those commercial contracts would also reflect the reduction in excise, and competitive factors should bring those prices down. We're still trying to determine what the specific issues are and where whether it's the wholesalers that are not passing on the reductions because they haven't yet used up the fuel that's in their depots. So those wholesalers will have their own fuel on stock that may well have had the higher excise paid to it, and so that will take a while to pass on term commercial arrangements.
All right, thank you. There used to be a much greater alignment between diesel and ULP, and I'm always intrigued to see you did a body of work, or the ACCC did a body of work on tracking that, and I noticed the differentials growing again. That's something I'd like to follow up at another time when we've got more time.
Thank you.
Thank you.
Excellent. Thank you, Senator McDonald, and thank you to our witnesses from the ACCC, and thank you, Chair, on your first appearance at Estimates.
Pleasure. Thank you for having me. I look forward to more occasions.
Absolutely. Okay, we'll now call the witnesses from the Reserve Bank of Australia.
And Chair, obviously I won't be sitting in with the Reserve Bank. They will be unaccompanied. By
Obviously. Thank you, Minister. But you'll be coming back and join us
For APRA.
in terms of APRA.
Yes.
Yep.
I might just leave my stuff
Yeah,
here.
'cause you've got to come back.
I've got to come back.
Tea or something from inside?
I'd love a cup of
Why not? Why not? No, just don't let Flora run off my charger. You'll stop the Governor of the Reserve Bank running away with my charger, won't you?
Oh, absolutely. I'll tackle him.
Two witnesses, so we'll have Ms. Bullock and then the new witness is Dr. Christopher Kent.
Yeah, we've got Dr. Kent.
Jared Rennick, how are you?
Yeah, good, Andrew. How are you?
Nice to see you, son.
Yes, likewise.
I've forgiven you.
Forgive me for what?
Forgiven you for killing my ABC inquiry.
Oh, okay. Well,
Don't need inquiry, mate, to deal with those lot, I can tell you.
we're still broadcasting, Channel.
That's all right. I don't need inquiry,
But we got nothing to hide.
We've got nothing to hide.
We're all
We-
good.
Whilst we're waiting for Ms. Bullock to join us, I might just
She's got conviction.
do the opening statement, which is the committee welcomes the Reserve Bank of Australia and its representatives. In welcoming the RBA, the committee recognises central bank's independence under the Reserve Bank Act 1959, particularly in regard for its setting of monetary policy. The committee is cognisant that while the RBA does not receive annual appropriations, it does provide the Parliament with opportunities to discuss its insight and performance, which the committee greatly welcomes. As such, no government minister will be in attendance with the committee while representatives of the RBA are present. So, welcome Dr. Kent. We're just waiting for Ms. Bullock to join us. Dr. Kent, do you know if you know on your own behalf, do you know if the RBA is looking to make an opening statement, or are we moving direct to questions?
I believe we're moving directly to questions. I just noticed Michelle's messaged me saying somehow she's having trouble coming in. So she's working with the Secretariat, I believe. Says being blocked by an administrator, but anyhow.
Okay.
If you like, I'm in your hands if you wanted to.
Well, look, we might
some line of questioning.
Look, we might open the call for questions in the event that there are matters which Ms. Bullock should properly be taking. Then we can hold those questions over, but seek to progress things as quickly as we can. So, who's seeking the call? Senator Walsh.
Thank you, Chair. Thank you very much, Mr. Kent, for being there. In his statement yesterday, the Governor talked about the factors impacting inflation, and he referenced higher prices for petrol and other commodities over coming quarters. Can you just expand on what the RBA's assessment is of the main factors domestically affecting inflation over the coming quarters?
Yes, and I'll just clarify. So it's Christopher Kent. I'm the Assistant Governor in charge of Financial Markets Group at the Reserve Bank of Australia. I guess the high-level point is that we have already seen in the data for inflation a pickup in inflation. That's reasonably broad-based, but driven by quite a few of the supply-side pressures that were present in advance of the invasion of Ukraine by Russia. So some of those are higher commodity prices. A lot of them are related to supply problems through the global supply chain that are affecting manufactured goods and a range of other goods. We had also seen a bit of a pickup in wages growth, but that wasn't particularly substantive in as much as wages growth has now returned to where it was pre-pandemic. That's the latest data that we have available. So what we've seen with the invasion of Ukraine is another step higher in commodity prices, particularly oil prices, which is obvious, but also quite a few food-related prices. And in addition, the other feature we're seeing is the potential, at least in China, for further disruption to supply chains there as they struggle to manage their COVID outbreaks. So we had forecast a further pickup in inflation prior to the invasion when we put out our forecast in February. And I think the essence of the statement yesterday of the governors following the board meeting was to say, well, there are some other forces continuing to work in this general direction that's likely to push inflation a little bit higher still. And he was just providing acknowledgement of that. Of course, there are some cross currents there, the petrol price being affected by the recent budget announcement. Just discussing that just minutes ago. So that's a temporary reduction in petrol prices, but they are at high levels. So what we're looking for is sort of a bit more clarity on how these supply chain problems, both in our own economy and globally, are going to resolve themselves, and the extent to which the increasingly lower unemployment rate will lead to a further pickup in wages. Maybe I'll stop there and see if there are further questions along those lines.
Yeah, thanks, Mr. Kent. The government has committed an additional $39 billion of spending in their budget. Do you expect, or does the RBA expect, that that would have any material impact on inflation?
We're yet to sort of update our full suite of forecasts to take account of not just the budget, but all the other things that have happened since we put our forecasts out in February. So we'll be doing that in May as part of our regular scheduled update of our forecasts. It would be one factor, but it's one amongst many, and I've pointed to many others just recently, particularly related to the invasion of Ukraine, that one imagines are having a higher and first order impact. So it'll be relevant, but we have to weigh that up with all the other things that are moving. Of course, I should make mention, and I had it was remiss of me really to make some mention of the floods. They've obviously been quite devastating for quite a few communities. They'll be having some effect on food prices in that part of the world, but they'll also probably have quite a long tail effect on construction activity. And construction prices in the construction sector are pushing higher and are a source of some inflationary pressure, and this at the margin will add to that.
Okay, thank you. Moving to interest rates, do you consider that the level of spending announced by the government in the budget, the $39 billion in additional spending that I referenced, would have any impact on interest rate rises?
Well, like I suggested, we'll, and I know my colleague Michelle Bullock's just joined us, but I'll just address this one and leave Michelle to add what she thinks I've missed. But I mean, it's a factor that we'll consider, but as I said, there are some different moving parts moving in different directions, including the reduction in the fuel excise. I think the other important point to note is that as tragic as the invasion and as terrible as the invasion is, and while it's pushing up commodity prices, of course, they are key exports for us. So that's a sort of a positive for our economy, for incomes in the resources sector, for government revenues in time. So there are quite a lot of moving pieces here we'll have to account for when updating our forecasts. But Michelle, did you want to add something?
No, I guess I made the same point that the lift from the terms of trade to the budget's been very important. The other thing I would highlight is that some of the expenditure in the budget was about easing cost of living pressures for people, which were decreasing their real incomes and potentially impacting their consumption. So, as Chris said, there's lots of moving parts, and I think you've got to take it all holistically.
Okay, thanks, Ms Bullock, and congratulations on your appointment to the Deputy Governor position.
Thank you. I'm sorry for the mix-up with the video.
No problems. Thanks for being there. The Governor has previously commented that wages are lagging, as we all know, and that one of the factors there is public sector pay rise caps and enterprise agreements that lock in low wage increases for a number of years. What interaction do those sorts of government decisions have on slow wages growth?
So I think the government's obviously put these things in for various reasons, and that's for the governments to decide. I think the issue going forward, though, is that we have a very tight labour market, evidenced by low unemployment rate, very high vacancy rates. You're starting to see wages outside of enterprise bargains and the public sector rise a bit more quickly. And I think the challenge is going to be that as that gathers momentum, it's going to put pressure on the public sector and wages there. So I think it remains to be seen how in the end the wages caps work in with an environment that is seeing wage rises outside of those boundaries.
We've had a number of discussions on this committee with you before about why the historic relationship between lowering unemployment and rising wages is not appearing as usual in our economy. I mean, what are your reflections on that going forward? I mean, it clearly hasn't been enough in the past to say that the labour market is tightening and therefore wages will automatically rise. How are you seeing wages moving over the next period, and what sorts of measures could assist wage growth now that inflation is in your target range?
Sure. So I think what we have observed is that historical inflation rates of around 5%, I think the Governor's made this point before, haven't been enough to get a lift in wages growth. And now that we're down at about 4% unemployment, we haven't been here for a long time, 14 odd years, underemployment's coming down, and I think we're in a little bit of uncertainty about how wages are going to react. As I said earlier, I think we are seeing some responsive wages. You're seeing that particularly in individual agreements. You're observing that people are getting wage rises when they move jobs, so they can move jobs for larger wage rises. So that is happening, but I think we're just feeling our way a little bit because we haven't seen unemployment rates down this low, and all we can do really is observe what the evidence is telling us here.
Can I just add briefly, Michelle? The other thing to note is we talk extensively right across the country with a whole range of businesses, and our liaison program in each of the major regions of the country are telling us that these pressures are starting to increasingly build. So we're hearing that on the ground, just as I'm sure you are talking to businesses about these pressures. And that's just a much more timely indicator than you would get from the official ABS statistics. which is partly why the statement talks about a further pickup in aggregate wages growth and broader measures of labour costs is in prospect.
Thank you very much. I'm happy to share the call, Chair.
Okay. All right. Senator Rennick.
Thank you, Chair. Good afternoon, guys. In November, the RBA was signalling rates would be on hold until early 2024, and rate rises this year were very unlikely. In light of yesterday's comments, how did the RBA get that so wrong?
Well, I think, Senator Rennick, that we were in absolutely unusual times. I don't think anyone at the beginning of the pandemic would have predicted that we'd be in a position now around the world where inflation was picking up so dramatically. We're not the only country where this is occurring, and in fact, it's occurring around the world to more extent than it is here. So I think the best thing to do in those circumstances is you look at the evidence, and if the evidence is telling you that something else is happening, then you change your view, and that's what we've done.
Yeah, except I'd argue there that if you're going to print $300 billion, you're going to run the risk of creating inflation. And as you said, no one could predict anything, except the only people who did predict anything was the RBA when they said they'd hold interest rates steady until 2024. Now, lots of people have made decisions based on that, and they've gone and taken out, multi-decade mortgages based on that decision that the first few years would be quite low interest rates, and now you're threatening to raise interest rates in the next month or so, or at least this year, which is well in advance of what you said originally. Wouldn't it have been more prudent for the RBA not to make a forecast so far out? And commentators were talking about it at the time, that it was extremely strange for the governor to come out and make a comment that fixed rates would remain so low for so long.
So at the beginning, again, I guess I would take you back to the beginning of the pandemic when we were staring down an absolute disaster in terms of the economy. And one of the best ways to address that was to try and anchor some expectations for people that we would do whatever it takes, and the government and the Reserve Bank did so, along with financial institutions. If you cast your mind back to the Team Australia moments. So I think really what happened then was that the response in the pandemic, with all of the demand that rose from the fiscal stimulus, the extremely accommodative monetary policies did what they were supposed to do. And they have in fact been more effective than we thought. And now we're in a position where demand is strong, unemployment is very low, inflation is rising, yes, but it's not rising as much as it is overseas. And we've been trying to get back into target for some time. So I think...
Okay, sure. Thank you. So in regards to trying to control inflation, rather than limiting demand, which is one way to do it through tightening interest rates, the other way is to increase supply, which we could do via an expansive quantitative easing program. Now, I know you've just spent $300 billion on shutting down the economy for the last few years, helping to fund that shutdown. What if the government directed you to create money through a quantitative easing program to build infrastructure, like dams, like power stations, like roads, that would increase the supply of essential services and therefore push down the price of essential services?
Infrastructure building is a matter, I think we've discussed this before, Senator, but infrastructure building is a matter for the government.
I accept that. Sorry, I accept that. I'm talking about the funding of it. Rather than borrowing money from offshore, which is then going to put more dollars as we swap dollars out for foreign currency buys Aussie dollars, right? Shouldn't we expand our own volume of money in the system so that we also keep our dollar low? Because I noticed Chris was talking before about manufacturing. If we let that dollar, if we raise interest rates and that dollar goes up above 80 cents or even in the high 70s, that makes us less competitive for manufacturing. So we need to be very careful that when we raise interest rates, the dollar doesn't go with it, and then that reduces our capacity to compete in terms of manufacturing. Because if there's one thing we've learned out of COVID is that we need to bring manufacturing back onshore. And if we don't expand our own volume of money in the system, okay, our dollar is going to increase.
The challenge here, Senator, is that what matters is the real exchange rate. And if you have permanently accommodative monetary policy, rising inflation, as you referred to earlier, then you don't increase your competitiveness either. So it's not a simple...
So are you saying you won't?
Sort of either or. No, because if inflation rises, then you decrease your competitiveness just as if your exchange rate had risen. It's not an either or. You don't have a low exchange rate and a very accommodative monetary policy and low interest rates. If that ends up with higher inflation, then ultimately your competitiveness is compromised as well.
But that
Chris, I
depends
don't
on-
know if you wanted to add anything.
But sorry, I dispute that. That depends on how you spend your money. If you build more productive assets that supply more essential services, okay, you will increase the supply, right? So that is one way to control inflation, and it will increase our competitiveness against foreign competition. Now, I, for the life of me, can't understand why we can spend $300 billion to shut the economy down, but we can't use quantitative easing to fund the building of infrastructure in this country.
Well, I can just add, if you like. I mean, I think, as Michelle already said, really building infrastructure is a matter for governments rather than the central bank. And I just note that there are pretty extensive plans to be doing that, and finance...
Yeah, okay, but that wasn't the original question. Sorry, you're going off. My original question was, what if you were directed to fund it via a quantitative easing program? So we're not disputing about whether or not we should build infrastructure, it's how it gets funded. If we borrow $1 billion from offshore to build a dam, the first $1 billion we create in wealth goes back offshore. If we fund it here, domestically, the first $1 billion we create, we keep here. We shouldn't be paying other countries billions of dollars a year to use their printing press when we've got our own here. That's my point.
Okay, ultimately, Senator, that's a matter for the government. It's not typically the way that we work here, and most central banks around the world do not work in this way. We do not directly fund governments. There are some countries where that happens, but it's not typical in any advanced economy. There is a typical divide between fiscal policy and monetary policy, and that's typically the way it's happened. The pandemic was, in fact, a very different situation, but if the government directed us to do that, then that's a conversation that would have to be had.
Well, sorry, I have to dispute that again. The Federal Reserve have been buying bonds, as has the ECB and as has the Japanese Central Bank for at least a decade. The US started it after the GFC. So I dispute, and the ECB, I should say, has been buying bonds and has been using monetary policy to be funding government spending. So it's not unusual. And indeed, it was done back here in 1810 with Lachlan Macquarie when he rocked up. So it's not an unusual thing. It's a question of whether you want to use another country's printing press and use their currency and pay them for their paper, or we use our own paper and keep the interest and the wealth created from that paper if we invest it productively on our own shore.
And again, I'd stress, Senator, that the examples you gave from overseas stems from the global financial crisis, a massive recession in the United States and Europe. What they were doing was easing monetary policy for the purposes of trying to get inflation up and unemployment down. It wasn't directly to fund government investment in those countries. So we might have to agree to disagree on that.
Just one more question, Senator Rennick.
Okay, last question, and it regards to your predecessor. I've been contacted by a lot of constituents who are very angry at his remarks when I asked him about the missing gold bars and the gold bars that Australia holds at the Bank of England, where he mentioned that the gold bars flake off. And I've been told by a number of people that that is categorically false. Gold bars do not flake. And would ask that, unlike your predecessor, who didn't seem to take our gold holdings in London seriously, despite the fact the Bank of England has admitted to the Reserve Bank that there are fake gold bars and duplicate serial numbers there, that the RBA could investigate our gold holdings at the Bank of England.
Chris, would you like to
address
comment?
that? Yeah, look, I can't comment on this question of the gold bars flaking, but I can emphasise the importance we place on a proper audit of our gold holdings. And indeed, I was speaking very recently and been working closely with our audit team. One of our senior auditors is about to hop on a plane to head to London to do a very thorough audit. She'll be accompanied with the most senior person we have who manages and oversees our office in London. And that will take place in the coming weeks and will be a very thorough audit process.
Will that be stock with counting all the gold or just 10% of it?
Something in that order, which is similar to what we've done in the past and at the upper end of what others who also audit their gold holdings at the Bank of England do. It's quite an intensive process. It's quite well considered in terms of selecting the gold bars. We're the ones that choose the gold bars, including once we arrive on site, telling the Bank of England which gold bars we want to look at very closely, including going in to look at some of the gold bars that are in their vaults directly, without telling them the details ahead of time.
And will the findings be completely transparent? Because I note that Freedom of Information on the 2013 audit withheld information because it would damage relations with the Bank of England.
Well, I would note the comments of the former Deputy Governor, Guy Debelle, and I think what he said is we would endeavour to provide transparency here along the dimensions we can, recognising that there are certain aspects of that which we can't reveal, so as to not threaten the security of those gold bars and the Bank of England's arrangements. So we will attempt to do that with this audit in the fullness of time.
Thank you.
Excellent. Thank you, Senator Rennick, and I wish those auditors well. Senator Roberts.
Thank you, Chair. Thank you both for attending today, and congratulations, Ms Bullock. Can I start by getting an update of your quantitative easing, specifically what Mr Debelle called electronic journal entries, or confirmed as electronic journal entries? How much money have you printed over this Parliament from 1st of July 2019 through to now?
Chris, do you have the number with you?
On the QE, let me just have a quick look.
In the order of 500 and something?
Yeah, I mean, it depends on the exactly what you're referring to. If it's the QE.
The QE itself, it's...
the QE itself was in the order of, well, the total bonds purchased in the order of 390 billion since the beginning of the pandemic, but the bond purchase program was in the order of about 300 billion.
So what's
there were other purchases that related to the yield target and early purchases to help restore the market function.
So what's the total, Thank you. What's the total for the amount of money printed since the 1st of July 2019 through to now?
1st of July 2019 to now. I think I'd best take that on notice to get you an accurate figure. What I was referring to, the key items are the term funding facility, that's $188 billion, and the total bonds purchased in the order of 390 billion. But that's not since the 1st of July 2019, that's from the beginning of the pandemic. So I'd have to go back and get the exact figures for you. But it's that order of magnitude.
So around about 600?
That order of magnitude, yes.
Okay, thank you. At the Banking 2022 conference recently in Sydney on the 11th of March, the Reserve Bank Governor, Philip Lowe, spoke about the inflation rate in the following terms. Headline inflation rate is 3.5%. Underlying inflation rate is 2.6%. Our current inflation environment was described as, quote, modest. Unless inflation psychology gets in the way, people expecting price rises, this inflation spike will wash through the economy. Is that a fair representation of his words?
Well, I haven't read specifically his words, Senator. I'd have to check that. And I'm not sure when exactly he said those words. So maybe you could provide us with the actual time when he said them, and we can check that.
Sure.
The numbers, though, I think were broadly of the right order from the last CPI.
The numbers are. I'm just not sure about the words that surround them.
I've got a transcript of his speech and the Q&A session which followed. Headline inflation is 3.5%, so that's higher than it has been for some time, but underlying inflation is just 2.6%. So we still have modest inflation. And then he went on in the Q&A with Ticky Fullerton to say it will depend upon what happens to the inflation psychology, because during the period in which the shift in the level of prices is occurring, we record higher inflation. But if the levels don't keep rising, then that will wash through the numbers and inflation will come back down. So,
Yes, sorry, I know what you're referring to now. The point he was making, I believe, Senator, was that the difference between a rise in the level of prices and a rise in ongoing inflation. So if it's just a level shift, inflation rises temporarily and then everything returns to a more even keel. That was the point I believe he was making on that occasion. But
okay, thank you. Next question. Page 5 of the Budget Overview Statement 1 puts inflation at 4.25% in 21-22, 3% in 22-23, and 2.75% in 23-24. When the budget lists an inflation rate, is the figure the Treasury used the headline rate or the underlying rate?
I'm assuming the headline rate, but I'm not 100% sure about that. Chris, do you know?
No, I'm not, but I would assume also it's the headline rate.
Headline assumed. Okay, thank you.
Assumed. You could ask Treasury they would know.
So the Reserve Bank then has a different view of inflation to the government, 3.5%, compared with 4.25% in the budget. That's a large difference between figures given a fortnight apart. Can you tell me what is Australia's inflation rate right now and what is your projection for 2022 and 2023?
So, Senator, they were 2 weeks apart, but I think probably what the Governor was referring to was our February forecasts. We're due to update our forecasts in May, and there's more information available then. We don't have a current forecast for you. The most recent ones are still in February, but we will be updating our forecasts in May, and I expect that there will be some revision upwards in those forecasts.
Some revision upwards, so closing the gap between the Reserve Bank and the government.
So the Treasury's forecasts for the budgets were based on more recent information than our most recent forecasts.
Okay, thank you.
And the numbers you referred to, Senator, that the Governor picked up on his speech were for the December quarter, so the year ended December 21. So they're referring to different time periods as well. The 4.25 is for 21-22, which is not the same as the December quarter year-ended number that the Governor cited in his remarks.
He cited an actual rather than a forecast.
Okay.
Right.
Thank you for that. On what basis is the Reserve Bank projecting inflation to max out at 4.25%? When inflation in Germany is currently 7.5%, which is up 2% in just 1 month, and food inflation is expected to be between 20% and 50% this year. That's per a Zero Hedge or Reuters news report over the weekend. The United States, 12 months to March, is 7.9%. I think that means it's actual. The UK rate to the end of February, again 12 months, is 6.2%. These are some of our major trading partners. How can we max our inflation out at 4.25% when these major trading partners are experiencing runaway inflation right now with no end in sight?
So I think there's a few things in there. The first thing is that the energy prices are impacting in Europe much more extensively than they are here. The second thing is that in some countries like the United States and the UK, they're seeing more extensive wage rises than we are here, where we're still not seeing. As Chris said earlier, we're starting to see some increase in wage pressures, but they're still relatively confined, unlike overseas. And the other thing that's happening here is that our exchange rate is appreciating a bit as well, which is also keeping a bit of pressure on prices. So there's a number of things going on here that are a little bit different for us, not quite the same.
So what was the
it's
last
also true
point?
that our...
I'm sorry, Ms. Bullock. What was the last point about appreciating?
The exchange rate,
Thank you.
with commodity prices rising, the exchange rate's appreciating. The other point to note that one of our other really big trading partners is China, and it is not experiencing a lot of inflation. Its inflation is remaining relatively low. So there's, yes, we're watching what's going on overseas, and that's very important, but there are some other factors which mean that we're a little bit different. We've still got to keep an eye on it, but we're a little bit different.
Okay, thank you very much. Today, independent research firm Morningstar revealed that prices in Coles and Woolies have risen 4% in the last 3 months. On what basis do you project inflation to wash through? Petrol, electricity, gas, iron ore, coal and food are all experiencing significant underlying inflation that started with the change in government in the USA in 2020. I don't understand how the Reserve Bank could be saying nothing to see here, it will just wash through. On what basis are you making that statement? What elements of inflation will actually fall over the next 2 to 3 years?
So I think your point about the wash through, I just want to go back to my earlier point about the question outstanding was, is it a price level shift or is it an underlying inflation shift and an underlying shift in the psychology around that, both for businesses and for consumers? If it's a level shift, then it's one thing, but if it's underlying psychology and so on, it's another thing. And I think you'll see from our media release on yesterday that we are now thinking that there are some underlying inflationary pressures. There's underlying cost pressures for businesses, which they look to be passing through. As Chris said earlier, there are signs from Liaison that consumers are starting to think a little bit about their wages and they're looking for increasing wage rises, and businesses are recognising that might be happening. So these are the sorts of things that would suggest that there is some underlying inflation pressure in the economy, and it isn't just purely a level shift in prices.
Okay, thank you. So how much of this inflation spike then has resulted from the Reserve Bank's money printing, as Mr. DeBell said, electronic journal entries? Does the Reserve Bank take any responsibility at all for the inflation spike?
Well, one of the points about our policy over the pandemic was to try and support the economy through what was going to be a very, very devastating economic outcome. The government did the same. You might recall that prior to the pandemic, we'd had trouble getting the inflation rate into its target band of 2 to 3%. We now have a very good opportunity to get ourselves sustainably in that band with a low unemployment rate. So do we take responsibility in trying to get inflation into the band? Yes, we do take responsibility, because that is what we were trying to do, get inflation into the 2 to 3% band on a sustainable basis.
Well, I'm no expert economist by a long way, but we know that money printing causes inflation, as Senator Rennick confirmed. The Reserve Bank printed around about $600 billion, and now we have inflation. Do the fundamental laws of economics that I learned at the University of Chicago Graduate School of Business while completing my Masters in Business no longer apply?
No, I think I'm agreeing with you that monetary policy can be used to basically influence inflation. I think I'm agreeing with you, Senator.
Okay.
I mean, can I just add, some of the other factors, though, pushing up inflation, at least in the short term, are well beyond the control of central banks.
Correct. Yes, that's
There's
true.
still supply chain problems around the world associated with COVID, and then, of course, the invasion recently of Ukraine is adding pressures there.
Thank you. So it's quite complex, isn't it?
Indeed.
Senator Roberts.
Last question, Chair.
Oh, perfect timing.
Over the term of the next government, that's the 1st of July 2022 to 30th of June 2025, what reduction in real wages will result from the gap between wage growth and inflation across that period? So I'm assuming you model these indicators. How far backward are everyday Australians going to go over the next 3 years?
Senator, I would have to say we don't have forecasts out to 2025. I'd have to take that question on notice in terms of our forecast for inflation and wages. On that, I won't hazard a guess on that. Thank you.
Okay, I appreciate your desire for accuracy, so I'm happy for it to be taken on notice. Thank you, Ms. Bullock. Thank you, Mr. Kent. Thank you, Chair.
Thank you, Senator Roberts. And On behalf of the committee, as it's already been stated by a number of members, Ms Bullock, congratulations on your recent promotion and all the best. And thank you, Dr Kent. So we'll now move to our next witness, but our final witness is from APRA, but we will have a 5-minute adjournment before we move to APRA to also give an opportunity for the Minister to return. So we'll come back in 5 minutes. And welcome APRA, our witnesses from APRA, to the hearing. So good to see you, and welcome back, Minister. Senator Walsh, you're seeking the call.
I am. Thank you very much, Chair. Thank you all for being there. I've got a few questions on some of the data issues in relation to the choice heat maps. I note that you've got a big superannuation data project on.
We do.
My questions are a little bit more about what your thinking is at the moment about the data sitting behind the choice heat maps. Whether stakeholders have raised concerns and where you're at with data quality in relation to the heat maps.
Yep, thank you, Senator. So I'll ask my colleague Margaret Cole to respond to that.
Yes, maybe I'll just say a few words and then hand to my colleague who
I see
is
movement
closer to the detail.
Sure.
So yes, we did not have the data this year from the firms, I think, as you know, from the entities. We decided we should go ahead. It was important to do that with the data that we had collected, that the independent agency collected on our behalf, and that is the basis on which we ran the first iteration of the choice heat map. And we are aware, of course, that some entities have raised questions about that data. I will pass you to Suzanne Smith to deal with that, but I just want to make the point we thought it was very, very important with the information and data we had to get going with the choice heat map, to get trustees to really focus on that area, because we will be hopefully running the performance test fairly soon for the first time in relation to choice products. So, but with that, maybe I would ask my colleague Suzanne Smith to talk a bit about the feedback we've had.
Great, thank you.
Thank you. So Suzanne Smith, Executive Director of Superannuation. So thank you, Senator Walsh. So the trustees of poorly performing funds have responded to us post the choice heat map, and most of those trustees haven't raised issues so much in relation to the accuracy or the quality of the data that we used for the choice heat map, which was the super ratings data. What they have done, nor have they raised questions about whether it was appropriate for us to use it. What they've raised some questions about was the methodology of the mapping of the data.
Okay.
And the super ratings data isn't at a level of granularity that it would be if we had our own data. So the collections that we'll do in the Super Data Transformation Program will take that data to another level of granularity, which should improve some of those elements. What we've seen is the majority of trustees, though, acknowledge that their performance has been poor. So those poorly performing funds that were recorded in the choice heat map have acknowledged that their performance was poor, and that they have started to look at what are the actions that they can take to improve that performance, which will ultimately be of benefits to members. So we're looking forward to having more complete data through the Super Data Transformation Program.
Right, so just to check my understanding of that, you said that there were holes in the data that was provided by just some holes in the data provided by the funds.
I think differences in the level of granularity. So it provided data on the choice products, but perhaps not taking it down to the level of granularity in terms of the subclasses that it would sit. So it was more methodology differences and questions.
Just trying to get a bit of a picture of this. So you sent out some sort of template for funds to fill in. They
So
filled
that's
it
what
in
we'll
at different
do.
levels.
So with our collections for the super data transformation, we've designed those collections where we have templates and they will submit data on that basis. For the choice heat map that we did, we used super ratings data where super ratings will have collected that information from the trustees, and that's the basis of the choice heat map. They will have collected data to a certain level. Our data collections will take it further and collect at more levels of granularity.
Okay. So what are the representations that have been made to APRA about the methodology?
Well, it's just that the mapping of the asset classes, and so where the level of granularity might not be as deep, we may have been rolled to an asset class which doesn't take it down to other levels. But as I said, whilst the trustees have disputed whether the methodology, the mapping could have been different, what they haven't disputed is that their funds were underperforming or poor performers, and that they needed to do something about that to result in better outcomes for members.
Are there, I'm still just really trying to understand this data and methodology issue. Are there examples where the data collection method that you use this time might have led to some funds not being accurately represented?
So I think what we've done in the Super Data Transformation program, we've had significant consultation with industry, we've had a lot of workshops, we've had webinars, we've had a huge opportunity for industry to have input into the way that we will collect data. So we're confident that moving forward, the strength of our data will be improved, and I would hope on that basis that the quality of the way that products are represented will increase.
So you appreciate the general comments that you're making and the importance of the heat maps and the importance of the funds who were identified as underperforming, acknowledging that. I'm still trying to understand what's at stake with the way the data was collected, and whether you think that, for example, there might be some funds who, were not captured as underperforming, who might have been or who will be when you do the data in the more sophisticated way that you're talking about.
Yeah, so that's actually could be a fair assumption that as we get improved data and different levels of granularity, it's likely that there may be some movements. The choice part of the industry, as I think we spoke about last time, is it's huge. There are thousands of products and options in there. So starting to bring transparency to that sector is really important. We think this was a really good starting point. The super ratings data was available. It allowed us to get this information out into the public a year ahead of what we would have been able to do had we waited for all our collections to be complete. So I think that we may see some movements, but what we have seen is for those trustees that were poorly performing, we haven't seen dispute. If some perhaps missed the cut for any reason, we expect that they will get captured next time as we get the more granular data.
Right, so there are sort of tweaks being made to the methodology to get that more granular data for the performance test later this year for the trustee-directed products.
Yeah, so the performance test is a matter for government as we wait for the regulations to be finalised there. But I think as with anything we do, we take feedback once it's been published. We listen to industry as they provide information based on what we've published, and to the extent that we think that something needs to change, we'd look at how we build that in and provide information to the right parties accordingly.
Right, thank you. Can APRA confirm that the regulations implementing the choice heat maps will be prepared by and entered into enter into force on July 1?
So the timing of the regulations are a matter for government. So
Is that the deadline that you're working towards?
Well, at this stage, we're doing all that we can to be ready to implement the trustee-directed performance test as per the 1 July start date. So we're doing everything in our power, but as I said, we're waiting the government, matter for government in terms of the regulations.
I understand that APRA is investigating for-profit funds about the dividend payments they make to their parent entities, and how and whether that complies with the best financial interest duty. What is the status of that? Is that an investigation? Is it a sort of an exploration?
Shall I take
and
that one?
what's it found?
Take that one.
Yeah.
I wouldn't quite agree with that terminology. We certainly have made inquiries to understand from those funds that pay dividends to parent companies what the basis of their dividend policy is, to actually understand the landscape in that area. That's not I wouldn't characterise that as an investigation.
Yes, and I accept that the term investigation would have a specific meaning to you. So what's prompted those inquiries, and what can you share with us about those inquiries?
Well, I think what prompted them was wanting to understand, as supervisors of those entities, the basis on which they pay dividends, the policy around that, and asking them whether they consider that policy is impacted by the change to the best financial interest duty. It's an exploratory set of requests.
So, thank you. So at this stage, you're asking funds that fall into that category what they think about whether paying...
Yes, we're asking them what their policies are and whether they've made any changes to those policies, or consider that the change in the nature of the duty means that they should make changes to those policies. And if not, what is their understanding of how that duty applies in those circumstances.
And so you haven't provided any guidance to funds as to whether paying those sorts of dividend payments is or is not in the best financial
we haven't.
interests?
At the moment, we're understanding the nature of the policies.
And so you're inquiring. Have you haven't given any guidance? You haven't expressed any expectation to trustees about how they might handle things like dividend payments or executive bonuses in relation to the best financial interest test?
No, we have not.
Are you going to be providing some sort of report about themes emerging in the discussions that you're having with the trustees at this level?
Excuse me. I don't believe that we are. I mean, we were gathering information for our own understanding of that, but in fact our touch point, or our ability to regulate in relation to this situation, basically these are assets which are, that when a dividend comes to be paid, it is not being paid out of members' assets, it's being paid out of assets that have already essentially moved up to the level of the trustee. So they're not caught within our ability to regulate them. Nonetheless, we wanted to understand, the basis on which entities were dealing with dividend policy, and to see what their understanding of that was.
Right.
Because clearly there's nothing to stop. There's nothing to stop the fact that a trustee can operate in that kind of structure in the retail side of the industry. So we're not looking to regulate that where it is not within our remit to do so, but we felt it appropriate to ask those questions and understand how that was being approached and whether the best financial interest duty made a difference to the approach to dividend policy.
So if you're making fairly informal inquiries and you're not going to form a sort of a formal view, because if you did, it wouldn't be something you could do something about anyway.
I think that's a fair point. I wouldn't say we made informal inquiries. We inquired in order to know and understand the landscape of that and the way that and retail entities were dealing with the question, because we, through our supervisory role, we want to understand how that works. But we don't think it is something that we, that is within our remit to regulate for. So you're correct. So we don't plan to put out any statements of guidance or anything further about it.
So potentially, just closing off on this issue then, thank you. So potentially a fund could be underperforming, identified on a heat map, and continuing to pay, say, executive bonuses or dividends to parent entities.
Yes, we haven't got into executive bonuses at all, but in relation to dividends, that's a correct assessment, yes.
They could do that, and that's
not
just the way it is.
within
That's
our
the way it
remit
is.
to be able to address, yes.
Okay, all right, thank you. I think the chair's...
Have you come to the end of that
On
set
that
of
one,
questions?
yeah, and I've got another couple
well,
of
we'll share the
questions,
call, Senator Walsh. But before I do that, Mr Byers, can I offer you an apology? I should not have been so presumptuous as to note that you did provide an opening statement, which has been tabled. Did you want to make any comments in relation to that?
As long as it's been tabled and you're happy with that and it's been circulated, I'm very happy in the interest of time.
It has been circulated.
In the interest of time, we'll move on.
And sorry, I didn't clarify that at the outset.
That's right.
Senator Bragg.
Thanks, Chair. Good evening. I just wanted to ask you some questions about the best financial interest duty, which started on 1 July last year. How many issues have you raised in relation to the best financial interest duty with trustees?
Well, I don't think I could give you an exact number, Senator Bragg, but we have raised the issue in a variety of contexts with trustees.
Okay. And how many times have you found issues or breaches of the best financial interest duty?
Again, I can't give you an exact number. We have found issues that we have followed up on, and where we've had conversations, in relation to how matters were being addressed in the context of the new duty.
Okay. So how many enforcement actions have been raised as a result of the new power you have?
I don't think at this stage that we have raised any formal enforcement actions yet, but we have certainly had numerous conversations.
Okay. How many ongoing investigations are there?
Well, if by investigation you mean an investigation in the context of formal enforcement, then to my recollection, unless I'm corrected, I don't think we have any active formal investigations at the moment.
Okay, because at the moment you've got super funds transferring millions and millions into trade unions, you've got a massive amount of wasted expenditure on advertising, which has nothing to do with the objective of the system. There's a lot of waste that is occurring, and so your answer is you're not raising any enforcement actions under the new powers the Parliament has given you.
Well, my answer is as yet, but I'm actually glad you've raised this question about payments to unions, because I've obviously, Senator Bragg, have seen your letters to us on that subject, and I've also realised that you have a number of tweets, and I think it's an important point that you have raised there, and we certainly would like to understand that better, and we've done some preliminary investigations into that, particularly as you refer to, in your tweets to use terminology like donations to unions and election payments and election campaigning. Of course, we're interested in that, and I would actually like, our colleagues would like to understand that better, because we're finding it difficult to reconcile some of the information that you have in your tweets with the information that we have so far been able to unearth from the Australian Electoral Commission and from more general inquiries. In fact, our analysis suggests that these amounts that are recorded in the register AEC are not categorised as political donations as categorised by the AEC. So really, I would say to you that we would like to understand more about this. This may not be the correct forum tonight to do so, and if we were able to understand, to reconcile more of what you're saying and the numbers that you're producing in your information, that would be enormously helpful to us. So I don't know if that's something I'm entitled to ask you, to suggest we could have a conversation about separately.
You're entitled to answer the questions in the way you would like to. The answer, or perhaps the next point I'd make to you, is that information is information from the Electoral Commission, and it is manually put together because the funds themselves don't disclose these payments. And they're all based on the annual returns that are provided by ALP affiliated unions, which they have to make under their governing legislation. So that is the information that is provided and lodged with the Electoral Commission because they are registered organisations.
Yes, but it's important for me to say, Sandra, I should have mentioned before, that our understanding is those payments are made to unions as director fees largely.
Well, some of them would be, I'm sure, but others are not.
Well, in relation to director fees, it would be helpful to me to understand if that is, if that is what is happening here, to provide members to the boards of super funds in what is a fairly typical way. If that's not a concern, I can put that one aside and look into some of your other concerns, because it's my understanding that largely what you're talking about and the numbers you're talking about comprise director fees. There may be other things like affiliations to educational providers or that sort of thing. But I think of the numbers of the size that you are putting out in your tweets, as far as I can see, it's mostly to do with the provision of directors.
Well, they're very expensive. They're very expensive directors if they're costing $8 and $9 million on tiny little funds.
In aggregate, it may not be, but I know I'm not meant to be the one asking the questions here.
No, you're doing a good job.
It's a very important conversation.
It is an important conversation. So if I could take it that insofar as these are director fees paid to unions to provide members,
we don't know.
But I'm saying insofar as, could I put that aside and get to the heart of what is troubling you here? Because we would also be troubled and would like to understand it better.
Well, I'm just trying to find one of these because it's a good point you raised. So there's a fund called First Super. I'm not sure whether that's I think that's quite a small fund. Yeah. So they have paid $8.1 million in 3 years to a union. That's a lot of directors' fees.
Yeah, so perhaps I could,
It's a lot of directors' fees, isn't it?
Well, on the face of it, $8.1 million for directors' fees over 3 years sounds...
A lot of money for a small fund.
Like a lot of money. I agree with you. It sounds that way. So let my colleagues say who may understand the analysis better than I do.
We have really started to dig into this and to look at the analysis. We've asked some questions of funds directly to try and help us to reconcile those, as well as the directors' fees, as Ms Cole said, is a component. But we know that there are other payments such as partnership arrangements and other fees which will go to things such as member education or some sort of types of health and wellbeing. They're probably the items which you're referring to, Senator Bragg, which aren't specifically for the provision of directors. We're wanting to reconcile and actually look at what some of those amounts are. There are some amounts in there that are curious to us when we actually go in and say, actually, that does look to be an amount that's more significant than we might expect for funds of a particular size, and we're digging into those because we're as interested as you are in making sure that every dollar that is spent of a member is going to deliver value to them and is going to deliver better outcomes.
I'm very pleased to hear that, Ms Smith. I would say, just for the record, given this is a public hearing, that all the information that I have collated is information that is taken directly from the AEC's returned
Yeah.
and it is aggregated. I mean, it'd be much better if this information was disclosed by the funds in annual reports or on their websites, and that is something that I will argue internally. Perhaps it's not an issue for you, but I will look forward to your. So, what is the status of this? Is it a review you're doing? Is it an inquiry?
Well, it's a review. We received your letter, and as I said, it was helpful to us. If it draws our attention to things that we may not be digging into at that particular point of time, given the breadth of number of people that we have working on issues in superannuation. So we're trying to reconcile. You have published some numbers, and we're then doing our analysis to try and match back. We can't always match back, hence Ms Cole suggested that it would be good for us to perhaps understand what you're looking at that gives you a number that might be different to ours. So
Yeah, I'll provide you with that.
yeah, so if we could get that information, it would be helpful so that we can make sure that we're talking about the same thing, and understand
Okay.
there are a lot of payments that will be valid payments, and just because they're going to a union doesn't mean it's a bad payment or an inappropriate payment. But what we know is that all payments need to deliver value, and to the extent that a trustee can't explain how value is being delivered, that's where...
I think we'd all agree with that, and I'd say that just looking at this again, I mean, $3.8 million in directors' fees from one small fund in 1 year is a lot of money. So we'll look forward to your investigation. I don't want to take too much more of the time, but I do want to ask about two other quick things. I wrote them down so I wouldn't forget them. I wanted to ask about this. So there's these conferences that the super funds have up at the Gold Coast that they sting people. They sting the workers, I guess, at the super funds, and then the funds pay $3,500 to go to the Sheraton Mirage, which is described as a 5-star paradise oceanfront resort. So that sounds pretty good if you can get that. And there's another one in April as well. It looks pretty flash, so it's $5,500. So would the super funds be paying for that?
So I expect the super funds would be paying for that for trustees to attend.
Off to the Mirage, eh?
Off to the Mirage. Well, that's where the conference is being
certainly
held.
not going to the Mirage.
Yeah. Scasey's not there anymore, so they won't have the benefit of his company, but yeah.
I think trustees are required to complete certain levels of education in their role of updating that. A lot of those conferences are focused on the issues of the moment, and they will be, bringing topical issues, whether that be of the external environment or particular issues relating to superannuation. It's for the trustee to determine whether that level of expenditure is appropriate for the nature of their organisation.
All right. Well, I don't want to be too churlish about it, but I think you're running a government scheme here, which is a publicly mandated scheme, which has a lot of tax concessions around it, and we'd expect the government, and I think all members of Parliament expect it to be run really carefully. And I share the sentiment that Senator Walsh, made before. So look, just finally, on this issue we've discussed before about these 27 super funds that are invested into this industry super holdings vehicle. So we've exchanged paperwork on this before. So the super funds treat this as an investment. Is that right?
Yes, in Industry Super Holdings.
Okay.
Yes.
And Industry Super Holdings does a whole lot of things, right? It does lobbying, it runs a newspaper, which is full of junk, and a whole lot of other propaganda outfits and stuff. So just explain to me how that passes the best financial interest duty again.
Okay. Ms Cole, would you like me to take that one?
I would, yes.
Because this is important for the record.
Yes.
I mean, these are important. I mean, these are just case studies, right? But it's important to understand how you are administering the laws that we've made here in Canberra.
So we wrote to all of the shareholders in Industry Super Holdings, and we did that back at the start of the year. And we received responses back from all of them. ISH has returned on average 17% over the last 10 years, and that's been a key driver of trustees to satisfy themselves that it is in the best financial interests of their members. They have investment governance frameworks under which that is considered. They also, and it's often held under their unlisted assets, they have frameworks that guides the way that they look at that investment.
Okay.
Many commented, we've talked about the New Daily for many meetings now.
Don't believe everything you read.
No. But many commented on the small size of ISH as an investment in their portfolio and the de minimis amount that the New Daily represents of that amount.
Yeah, but there's
We've
no
also,
materiality clause in the best financial
no,
institution.
I understand
no
that, Senator Bragg.
Yep.
We've also spoken to ISH about the performance of the New Daily, the historic performance, and we've talked that for many years it hasn't made a profit. My understanding from those discussions is that the business model of the New Daily has been changed and that the expectation is that there will be no need for further capital injections into that asset. So I think we have done, we've also asked trustees to consider how, that investment remains appropriate in light of the best financial interest duty. And to the extent that we are satisfied that they are considering that asset as such, we're also hearing that trustees are considering, and reviewing payments, so those payments to entities in light of the best financial interest duty for services. So that's where it's different. We've explained there are shareholders at the ISH level, and then there are those that they make payments for services to entities like ISA. And we understand that trustees are considering whether the level of those payments remains appropriate given the best financial interest duty.
Well, can you provide on notice as much information as you can about this investigation, or this, not investigation, but this engagement on the ISH and in New Daily issue? Because I'll just make this point in closing that it may well be the case that this particular asset or this investment has been successful to date, but that doesn't mean that you can build things into that framework which are not consistent with the law. Because I could have something which is 75% successful, 25% unsuccessful, and that could be investing in some sort of unethical or illegal asset or venture, right? So that's the point I'd make to you again.
Yeah, and we'd hope that through the investment governance framework and the fact that those investment teams are required to review those assets, which includes looking at what might be held beneath that.
Okay, well, we look forward to seeing what comes back on that, and we'll obviously have a conversation about these other issues.
Thank you.
Thank you, Senator Bragg. Senator Roberts.
Thank you, Chair. Thank you all for attending today. The National Australia Bank is making a number of branches cashless and have confirmed by email they now have 9 small format cashless branches across New South Wales, Queensland and Victoria. The Senate rejected the Liberal Nationals' cash ban bill and sent a very clear message that cash should remain available. Cash is legal tender. So on what basis are APRA allowing a situation where the Queen's currency is not legal tender inside a bank branch?
So, Senator, I don't think we are allowing or not allowing any such thing. We don't have any role or responsibility in that area. The banks increasingly are responding to the way in which the majority of their customers are choosing to transact, and for the majority of their customers it's digital. And so we are seeing a shift away from the traditional bank branch, as you say, but to what I'd call various forms of servicing their customers, and these particular, I've forgotten what you called them, but the cashless branch, I think was the phrase.
Small format cashless
small format,
branch.
yeah. Just another way in which they can hopefully continue to cost effectively service their customers. It's not, as you say, it's a small number, but it doesn't imply anything about APRA allowing people not to accept legal tender. That's not a correct characterisation of it.
Wasn't quite the question, but that's fine. APRA's definition of a bank branch includes the requirement to take and issue cash and change. Will you be advising NAB to stop describing cashless offices as bank branches? It's a clear misrepresentation of the services on offer, isn't it?
Well, that definition applies to a reporting standard that we use to collect annual data on the points of presence. And so I have no reason to think that for the purpose of that reporting standard, the National Australia Bank is in any way misreporting. But that definition doesn't apply more broadly to the way in which banks talk about their services. It's purely focused on a reporting standard for APRA.
Well, I've got a glossary here from APRA's website, and it says, branches are face-to-face points of presence that meet the following minimum criteria. First of all, they accept cash and other deposits, including business deposits, and provide change. And then they list another 4.
Yes, and for the purposes of reporting to us and for the purposes of reporting in our points of presence collection, that is the way in which branches are to be reported.
So I also have here from APRA, authorised deposit-taking institutions, points of presence statistics.
Yes.
APRA have maintained a database of authorised deposit-taking institutions, points of reference, points of presence, shorthand, the database. This database makes a clear differentiation between bank branches and bank offices, the latter being described as other face-to-face. So we've got a column here for branch, we've got a list, a location, branch, whether it's a branch, whether it's other face-to-face or an ATM. So this database makes a clear differentiation between bank branches and bank offices, the latter being described as other face-to-face, as I just said.
Yes.
Will you ensure all branches that do not accept and issue cash are downgraded to other rather than continuing to show as a bank branch?
Well, I think that's where they should be reported already, but if they're not, then we would need to make sure that they were.
Okay, thank you. The Quill Awards for Excellence in Victorian Journalism at the Melbourne Press Club recently awarded journalist Dale Webster a regional Quill Award for her investigation of the true extent of bank branch closures in Australia. The article was awarded for, and I quote, busting layer upon layer of myths being perpetuated by the banking sector and blew the whistle on errors in official data that have been published by the government unchecked for decades, end of quote. So that's your database that they're talking about, Mr. Byers, isn't it? How good is your database?
Well, I think the database is fine. The database is the facts that have been reported, and I have no reason to think that there's problems with the underlying data.
So we've just discussed that something is a branch is labelled as a branch, even if it doesn't have face-to-face operation.
Well, as I said before, our definition says a branch should have, and you had the definition there, it should have cash, and then there was other face-to-face.
Yep.
So that is the definition, and that should be the way in which that is. Well, I'm not sure it is, but we can go away and have another look at that issue.
Could you? Could you get back to us, please?
Happy to do so.
Thank you. So I would like to ask about an issue raised in Dale Webster's article, and I'll quote, 92 country towns across 38 federal electorates have lost all their banks and agencies, that's Australia Post, newsagents, nothing that doubles as a banking service provider. And now those towns have no banking services. The number of branches in rural and regional areas has fallen over the last 20 years from a high of 2,802 branches in 1,126 towns down to the current 1,075 branches in 387 towns. That's a 62% cut.
Yes, I'll agree with your maths.
Has APRA made any effort to stem the carnage in rural banking? If not, why not?
So I think we have, so absolutely agree with the concern that you have, Senator. It's a trend that's been going for some time. I'll see if my colleague, Mr. Lonsdale, who's on the line, wants to jump in with anything. But we don't have a role to play in saying where banks have branches and where they don't have branches, but we understand entirely the problem that's existing. As I said, it's a trend within society that finance is going digital and bank branches are not profitable. So we have been working with the other arms of government on thinking about solutions to this debanking problem, but it's not something that we'll be able to solve on our own. But
So it's not
absolutely.
part of APRA's charter, but who else could it be?
Well, it's a government problem. I don't know whether, John, you want to add anything to that?
Thanks, Chair. So thanks, Senator, for your question. The thing that I would add is, yes, branches have declined in number, and that's not just the case in regional areas, but it's the case in other areas in the country as well. But what our data is not picking up that I think is interesting is that there have been other ways, particularly in recent years, that customers have been accessing the financial system more electronically. And I take your point that for some people in regional areas, having a branch there is very, very important, so it doesn't undermine that. But there are other avenues as well. So that's something to think through.
Minister, what do you think about the 62% reduction in bank branches?
Senator Robert, this is something that we receive correspondence about on a regular basis, and I know it's something that's come up with some of my regional rural colleagues as well. The government hasn't got a specific policy that would compel banks to open up in regional rural areas. We understand that they are very much the private sector, although they do operate under a social contract. It's something that I think in the next term of Parliament I'd be happy to talk to you further about and discuss what solutions you might consider appropriate.
Okay, thank you. This comes from the NAB correspondence we have here. In this description of these new cashless offices, they say, quote, "In these branches, customers will benefit from more meetings spaces with video conferencing facilities and a digital bar." I don't know what a digital bar is. "So we can provide more guidance on the ways to do everyday banking." End of quote. Does the definition of a bank branch include the need to have on hand suitably qualified staff able to exercise their duty as a responsible banker?
Well, again, the only definition of a branch that we have is the one for reporting purposes, and the definition is the one that you quoted before, Senator. I'm sure you had that definition right. So the definition doesn't have that level of specificity in it.
It has another 4 criteria in addition to the ability to accept cash and other deposits. Yeah. Facilitate the keeping of accounts for customer access, including the provision of account balances. Open and close accounts. Can facilitate or arrange the assessment of the credit risk of existing and potential customers, and offer additional services in the one establishment such as financial services, business banking and specialist lending. So we're skirting with the banking code of practice. So this is a serious question. Does a concierge directing customers to a computer screen to talk to a bank employee in a remote or international location satisfy your definition of diligence? Just how dumbed down are we going to let the bank branches get?
Well, I'm not sure that fits with our definition, or it fits with the intent of our definition. The intent of the definition is to describe locations where you can, at a branch, do those things you talked about: transact cash, open and close accounts, etc., etc. So the fact that there are other types of operations in addition to branches that are there, I don't see why we would need to have a problem or an issue with those.
This goes to the customer service of the banks.
Yes.
And servicing rural Australia.
Absolutely, and there are challenges there. And banks are always trying to work out how to do that in a way that is cost effective, a way they can service the community in a way that's cost effective.
Well, are you saying, it sounds like it to me, but I'll just check with you, are you saying that a bank office having no suitably qualified banking staff able to exercise their duty as a responsible banker in person is still a branch nonetheless? This is a requirement of the Banking Code of Practice. Is that document just a complete joke?
No, no. I'm just wary of commenting on a code of practice that we don't administer or enforce.
What's your view on it?
Sorry, could you repeat that question then? What's my view on what, sorry?
It sounds like you're saying that a bank office having no suitably qualified banking staff able to exercise their duty as a responsible banker in person is still a branch, nonetheless.
Well, for the purposes of the definition, it's still defined as a branch, but clearly not having qualified staff in your operations is not diligent operations. I mean, that's simple business practice.
So does APRA need to get closer to... Is APRA too close to the banks? Do you need to get further away from them?
No. So these things, right, as you pointed out, these things are part of the Banking Code of Practice, and the Banking Code of Practice is overseen by ASIC.
Okay. So Senator Roberts...
That's it.
Oh.
Thank you very much.
Senator Walsh, you have the call.
Thank you, Mr. Beers.
Thank you.
Thank you, Chair. I've got a couple of questions about the issue around the government calling for super funds to divest from Russian assets. So on the 3rd of March, APRA released a statement titled "APRA will not be taking action against trustees regarding divestment of Russian assets." And APRA did that on the same day as the government released their statement expressing an expectation that super trustees would divest their holdings. What is the basis for APRA to be able to make that decision in your sort of enabling legislation or the legislation that guides you in relation to superannuation funds?
Margaret, do you want to?
So the issue here was whether if super funds wish to take steps promptly to divest themselves of Russian assets when they could. I mean, I say promptly, but, to move in the direction of divesting Russian assets, whether we as a regulator would, chill their desire to do so because of an analysis with them, each of them, on whether that complied with their duties under the best financial interests duty. We took the view that where trustees made their own decision to divest Russian assets and did so consistent with their duties, that was not inconsistent with the best financial interest duty.
Yeah, so
that was the analysis.
Yeah. So your role in this was to say if you choose to follow the government's statement of expectation and you can do so in a way that is
consistent with your duties. Yes, we will not be taking any action.
Then you won't take any action.
Correct.
Your press release was, I think, half an hour or an hour after the government's statement of expectation. Was that coordinated?
No. There was a discussion earlier in the day between ourselves and Treasury, but it wasn't coordinated in the sense of there wasn't an indication that this will happen now and yours must happen
we'll say
then.
this, then you say this kind of thing.
Yeah.
Yeah. But you obviously knew about the government's intention to make this statement earlier in the day because it would have been fairly an amazing feat to pivot in 30 minutes.
We
or
knew
60
from
minutes.
contact from the Treasury that the government was considering making such a statement. I think that's fair, yes.
So, and you became aware of that on the morning of the statement, to your recollection?
Correct.
So would it be
That
fair...
consideration was being given to it through our normal contacts with
Sure,
Treasury.
sure. and your normal it was consistent with your normal contacts, as in Treasury says we've got some, regularly says to you we've got something to say about something.
An issue that is under consideration. Yes.
Would it be fair to say then, given that timing, that APRA had to work fairly quickly, or in layperson's terms, scramble to consider a response?
It would be appropriate to say that it was an important issue that was under consideration, and a group of people under myself considered the issue, and that I discussed it also with the chairman, as you would expect.
So you were working fairly quickly to be able to give some direction to the funds on how APRA would view this?
We were working to give if the government decided to publish this as its position, to be clear as to what our position was on that.
Were you working fairly quickly? I mean, was it I don't know, was it a fairly sort of intense situation, or is it something that happens regularly?
Well, look, we had a contact from the Treasury to say the government was considering putting out a statement on this position, or considering the position that there was a concern that super funds, if they were to take a decision to proceed with trying to divest or divest when they could, were concerned that they, what was APRA's view of the best, whether they were complying with their duties, with in particular the best financial interest duty. And we felt it would be appropriate to say something clarifying, or say something making clear what APRA's position was on that. And it did not seem unreasonable or inappropriate that trustees, considering that point, could arrive at the conclusion that it was appropriate to divest where possible, when possible.
Did you get quite a lot of incoming from trustees about that, seeking advice about how to proceed?
There were some conversations, I believe, with supervisors about how that would be perceived, yes. And of course there had been press commentary, hadn't there, I think the day before, which I think had drawn it, and the Future Fund had made an announcement. So it was a matter that was in, public discourse at the time.
Yeah.
Perhaps to be fair, many of the trustees were already considering it anyway, so that it wasn't necessarily just that statement. Many trustees were also considering that as part of their investment frameworks, investment strategies.
Yeah, and it's, extraordinary times, and there's a lot of support for that statement by government and by, various entities to take similar sorts of action. Is it is government sort of giving that sort of indication to super funds about what they should invest in or not invest in?
No, this is a completely separate set of circumstances. I'm not aware of any such thing.
This is quite unique, is what I am. Are there other examples of this that anyone could point to in recent years?
Not that I can think of, no.
Yeah. In fact, I think we've been on the record as saying, well, I certainly have been on the record as saying that government should never direct superannuation funds as to how to invest. And in fact, the statement that we issued was that there was a strong expectation that super funds would review their investment portfolios and then take steps to divest any holdings in Russian assets. And of course that's aligned with our national interests, and we would have thought that it would be members' expectations that their super funds would do the same.
Yeah. And did you, Minister, was the expectation that super trustees would divest their Russian assets sort of in a way that was consistent with best financial interests? Was that that was the statement?
That will always be the understanding, and we will never direct a superannuation fund as to how to invest or divest its assets. We would never direct a superannuation fund to invest in infrastructure, for instance, whether it be for nation building purposes, whatever it might be. That would be entirely inappropriate. There's a reason why superannuation is separate from government.
Indeed, yes, and that that APRA is as well.
But I think the Future Fund really led the charge on that and demonstrated that it was not just possible but sensible to divest of any impaired assets.
So, yeah, so I guess, so APRA, I might ask you, Mr. Byres, I guess APRA is broadly comfortable with this unique sort of set of circumstances, and I mean your job as an independent statutory authority and ensuring the safety and soundness of our financial system and so on, you're comfortable about this? I mean, I'll just say again, it's obviously extraordinary circumstances, but we also don't want to be in a situation where funds are getting advice via press release.
Yeah, no, so the short answer to your question is yes, I am comfortable. As you say, it's very unique circumstances and circumstances that we hope are not regularly repeated. Margaret and I talked about on the day, the precise words just to make sure we were comfortable with them, and we were not, as Margaret said, we were still saying to trustees, consistent with our responsibility, we had to make sure they were still being mindful of their responsibilities and their obligations as they were reviewing their Russian exposures. But we came to the view that we were comfortable saying what we said.
And just finally, for me on this, so did you put something in place to sort of monitor what then occurred in relation to funds divesting at appropriate times in the context of best financial interests? And can you tell us anything about what has actually occurred?
Well, there are certain things happening. So some of the peak bodies are putting out their own guidance, and we've been in consultation with some of them about putting out guidance to super funds as to, if you like, sensible ways to go about this. So that's one point. And the other point is we would expect such issues to come up in the course of our normal supervisory relationship of funds. But obviously it wasn't possible for them to take immediate steps, so it's a declaration of intent. We're not we're not following up, saying, have you done it? In that sense, we need to leave it to the trustees and their investment managers to approach the divestment, in a sensible way that pays attention to their duties. So, and we recognise how difficult that might be.
Thank you. So, just in follow up to that, so how would the Parliament know what has happened as a result of the government stating its expectation? How could we find out what has happened as a result of that?
Well, there's no sort of direct mechanism, but we would expect to understand in due course how some of that came about through our supervision relationship.
And there's nothing sort of. There's no sort of enforcement, it's not a law, it's a statement of expectation. There's no sort of enforcement mechanism or follow-up about sort of compliance with this expectation. That's correct.
Correct, as far as I'm concerned, yes.
The only thing I would just add, Senator, is one of the things that you will see over time, if you're willing to wade through the disclosures, and they're very detailed these days, is because of the requirement now that the government has introduced for the portfolio disclosures. I looked at one the other day, which was a very long set of disclosures, but you could see one of the super funds had some very small exposures in Russian rubles. You'll be able to look and see what's happened to those over time. So it won't be real-time information. It'll take a little bit for that to work through. But there will be, for anyone who's interested in their particular super fund and what has happened, that information will, over time, come to light.
Thanks very much.
Okay, thank you, Senator Walsh. Did you have any questions, Senator McDonald? No?
Would it? No. Thank you, Chair.
That's good. Okay, so the committee will conclude its hearings for today. The committee's consideration of the 2022-23 budget estimates will resume tomorrow morning at 9 a.m. with an examination of the Department of Industry, Science, Energy and Resources portfolio. I thank Minister Hume and officers from Treasury Portfolio who have given evidence to the committee today, and all the representatives of APRA. Thank you also to Hansard Broadcasting and the committee secretariat. I declare the hearing adjourned. Thank you.
Thank you, Chair.